clearly you're seeing a situation where the markets are unable to hold on to gains. I mean, that is, everything is working for markets. But yesterday, if it wasn't for IT stocks, it would have been a very dismal scenario.
Yeah, I mean, yeah, it's the second consecutive session, Tamanna, Neeraj, where we've seen a similar trend. Like 8 times on Friday, you had markets which reversed trend. A similar scenario happened yesterday as well. And IT, as you mentioned, was the only sector which ended in the positive. So 2 consecutive sessions of negative closes what we've seen. In fact, the gains that we saw in the morning session actually fizzled out and we ended below that 26,000 mark as well. It was a week that began with a gap up opening, but the prices actually failed to attract that follow-up buying at higher levels as well. In fact, Nifty has not only erased its initial gains, but slipped further into the red, and the benchmark indices are continuing to see profit booking at higher levels. If you see in terms of broader markets as well, they've actually seen a far steeper decline over the past few trading sessions. In fact, the breadth was notably weak, with nearly 3 stocks declining for every advancing 1 stock, which is almost little over 3,000 stocks decline versus a 1,200 advance on BSE. If you talk about sectors as well, all major sectoral indices closed in the red, barring IT. It was mainly defense and real estate that lost the ground, with shed over nearly 2% each. In fact, if you talk about investors, in the last 2 trading sessions, they've lost nearly 7 lakh crores in terms of worth in money. If you talk about what's driving this kind of markets, it's mainly profit booking at higher levels, and secondly, the investor sentiment is really cautious right now, and they're not really able to get any direction in terms of which side we should be treading. If you talk about the top gainers, SBI Life, Tech Mahindra and Aisha, these were the top gainers. In terms of losers, you had a BEL, JSW Steel and a Max Healthcare. A lot of action and volume built up was seen in Vodafone Idea, Yes Bank and JP Power Ventures in trade yesterday. But clearly, there was some bit of follow-up buying that was happening, Neeraj, in banks, but the sustenance was not really there.
Yeah, the extension of profit booking for a second session in a row, and the FI selling continues. So that's a worry. Now, the other thing that is actually weighing in is also the currency weakness. And you've seen the rupee being choppy with a downward bias, and that would continue to weigh in on sentiment. Now, trade data, multiple other factors leading to this. I think until we see the resolution on the trade deals, maybe this sentiment around the currency and thereby the resultant impact on the markets continues to stay. In fact, the texture is fairly squarely in favor of mega cap stocks, and we don't have too many mega caps, but effectively what I'm trying to say is there's a lot of bias currently in the dealing rooms and in the brokerage community on the extreme large cap stocks, Stock Reliance, Stock HDFC Bank, Stock some of the others, IT names as well, largely feature in that large cap list, right? So that's where the bias has completely shifted right now. Safety first seems to be the order of the day. What is happening though, the broader end of the spectrum, is very select buying in a staggered fashion, only in quality mid caps, because the timelines have become a bit fuzzy about when do we see this uptick come in. 9 straight days of very strong gains, but then the pullback, and people have kind of felt that is the mojo getting lost. And I think the Nikkei advance might just help the IT business today. Nasdaq did well, Nikkei is doing okay. Maybe tech continues to do well. Remember, as we stated just a while back, had it not been for tech yesterday, I mean, the large caps as well would have looked slightly wobbly. So I think that seems to be the order of the day, at least for the trading day today. I doubt too many people are really taking even a fortnightly calls currently. It's very choppy out there.
Very tough to do that. And you have newer news flows coming in and disrupting what's happening.
And volumes are extremely thin. Like yesterday when we were doing volume buzzers in closing trade, usually when you see 15 times, 20 times volumes, yesterday it was 0.5 times, 0.3
so volumes
times.
Are drying out.
So volumes were absolutely flat.
I wonder if it is a lot of focus in the primary markets, though no big issues this week either. But here's the India view coming in from CLSA. I thought I'll start with this when I'm talking about factors. And this is a note by their global equity strategist, Alex Redman. His title, I thought, was thought-provoking, to say the least. It says, little carrot, all stick. That's how he's describing India. So he's saying the 2026 case for India is materializing, but mostly as a refuge from AI. With modestly cheaper valuation, this tees the market up for potential re-engagement in 2026. Yet, we think the large draw to India is more stick, which is refuge from AI trade reversal, than carrot, which is India being more appealing by its own merit. They now have, CLSA now has lower exposure, that is 15% overweight for India than at the start of the year, which is 20% overweight. Regression model for Indian equities is signaling a 16% upside by end 2026. He's given his top 15 names, which include RIL, ICICI Bank, SBI, Infosys, ITC, Ultratech, NTPC, ONGC, Eternal, DMart, Bajaj Auto, DLF, Tech Mahindra and Tata Motors. I mean, I don't know. I don't know if I agree with this 100% because to then claim that India is completely away from the AI trade and Indian IT companies are not belies what a lot of Indian IT companies themselves are saying and the commentary that is coming from there. So I understand that's the FII view and this is CLS's view. That's why we're putting it out.
Yeah, but I think the commentary that we've been hearing is slightly more different, you know, where...
No, it's completely different. You have Indian IT companies coming and saying that AI is now going to help us instead of harming us. So is India really the anti-AI trade? I don't know. I mean, one way or the other, if it is, it's not showing right now. And even that AI trade is reversing.
In fact, you remember yesterday when we spoke to Rajiv Batra as well, he said for this entire game to play out and for them to get a view, it's going to take at least 12 to 15 months. So I think that 12 to 15 months will probably be that anti-AI trade for the FIs. But when the tide will turn, actually is when that realization will come in.
Very tough to time that. And in any case, we're here about giving you all the views and then you make your decision. As far as markets are concerned and the setup is concerned, clearly the Indian equity markets are showing signs of fragility and profit booking in the short term though. The medium term structure does remain positive. So that is definitely something to look forward to. Nifty's inability to decisively hold above the 26,000 mark, coupled with broader market weakness, is dampening sentiment ahead of the monthly F&O expiry. The market is expected to remain in a range with heightened volatility due to the upcoming F&O expiry. PCR is at 0.77. It slipped from 1.03, indicating a bearish sentiment as the ratio is falling below 1 and is moving towards the bearish threshold of 0.7. The mid-cap, that's the Nifty mid-cap and small-cap, continue to show weakness. Small-cap index is closing below the 200-day EMA, which was a key sign of broader pain in the markets. Technicals indicate caution and suggest bears may gain strength if support at 25,850 is broken. Immediate supports 25,920, key resistance 26,100. Now for the Bank Nifty, look at those levels at resistance, key resistance at 60,000, immediate resistance at 59,180, key support at 58,000 and immediate support at 58,680. But you know, it is expiry day and I must go across to Puneet to tell us what the setup is. Are you seeing that bearish indication as well?
Well, yeah, most certainly, but there has also been a cutting of put positions that was held in the market yesterday by foreign investors. So there are a couple of key data points and we will highlight the rollover data as well very quickly to start off it. Because of the expiry, you will see rollovers of the key positions into the next month. So when you look at the Nifty 50 rollover data, it does indicate that a lot of the positions have gone into December with a similar mandate. So you see roughly about 158,000 positions being gone in, a jump of 54% of course, but that's of course reduction of the November position. For Nifty Bank as well, we generally see that happening over a couple of days. So you will start to see this number of 28% go higher as well as in terms of positions for the Nifty Bank. When you look at the foreign investor positions, we've actually seen some buying in the Nifty futures yesterday by almost 1,100 odd crores. Because of that, the index long position has now gone to 14.4% for foreign investors versus a tad below 12% yesterday's trading session. So this will be one key one to watch. You know, Tamanna highlighted the 0.77 for the Nifty for foreign investors specifically. It slipped to 0.84% because it seems to be that yesterday some of the put positions or the shorts in the system have actually been cut out, and that's the reason you're seeing a similar impact at 26,000 where the put open interest has actually reduced quite materially compared to yesterday's trading session. Yesterday it was almost 2x of that of the calls. Today, below the calls at 26,000. You've also seen 26,100 as a key level being formed for a lot of, traders who are holding long position, and a lot of calls at that level. So that's another key one. 2 to 3 stocks you need to have on your radar. Torrent Power as well as something like an Aurobindo Pharma, because of open interest change, is something to watch. We've seen roughly 26 to 27% open interest change. While there has been a long build up in Torrent Power, on the other side there's been short covering across a couple of stocks like Indian Bank, and the OI change is quite material on this one, a 51% reduction. Blue Star also saw some short coverings in the market yesterday as well. So overall, it'll be IT that will continue to be in focus. Watch out for Nifty Auto. I mentioned yesterday we have 2 key launches this week, starting with the Sierra today. A lot more action is expected because the price points anywhere between 12 to 20 lakhs. Could it be the next Creta? The auto index will be in focus certainly, while defense will be something I'll be watching out for in the second half of this week.
Puneet, just a quick follow-up there. On the call side, until Friday, the PCR had jumped up higher and the quantum of puts was much higher, a lot of support there. There has been a sudden shift seemingly in the last 2 days on the call writing then.
There's certainly been a sudden shift, and this data point shows, because for 26,000, almost roughly 1.4 lakh positions were there on 26,000 for the puts compared to the calls. So the green line was much higher, almost 2x of the red one at 26,000. Exactly. That's been cut by half in just 2 trading sessions, and 26,100 actually has emerged as a call level, but there has been reduction in 26,500. This also means that there's a very near-term range that the market seems to be calculating between 26,000 and 26,100, indicating there could be some volatility at these levels.
Now, yeah, thanks Puneet for that. This could also be, of course, expiry-led moves as well. A lot of those puts which might be in the money might be getting rolled over or just getting squared and getting built out for the new series. I think it'll be very interesting to see closer to the end of the month about what the December call put position looks like, because that was heavily written, 25,900, 26,000 on the put side. Be interesting to see if the calls win over the puts in the near term versus the medium term.
Hopefully this is just a temporary expiry blip rather than a change in sentiment. I think that's really what we have to hope for, and then we do have a Santa rally in December like we have had in the past. Well, let's talk about stocks. First on my watch list is Siemens Energy. And basically, they follow a calendar year structure for their results. So these are their Q4 numbers. Strong quarter. Growth is led by power transmission. Revenue was up 47% year on year, and the power generation segment revenue was up 10.9% year on year. New orders were stable at about 1% at 2,351 crores, and order backlog is up 47% to 16,205 crores. Compared to FY25. So they follow, like I said, the October-September calendar year. So this was their Q4 numbers which have come in, which is a good set of numbers, which is why you might see a bit of a pop today on Siemens Energy. Paras Defense is the other one. Now, I know defense stocks have been completely down and out, but the news for Paras Defense is fairly positive. The stock was also 2.5% down, and all defense stocks following HAL actually tumbled in trade yesterday because of the Tejas crash. But the news is good, like I said. They have signed an MOU with Inter-University Accelerator Center, that's IUAC. The MOU, that's a Memorandum of Understanding, is signed in order to develop commercial-grade MRI magnet systems. It is for an indigenous manufacturing, so more in the Make in India direction. Is the context we have to understand. The idea is to make India self-reliant power in superconducting MRI magnet technology, which is used in a lot of defense installations. What is the outlook? They are expecting a 40% revenue growth in FY26, maintain or expect slightly better profitability in FY26, and they expect order inflows of 1,000 to 2,000 crores in FY26 overall. So I'm not sure you'll see a stock movement on this today, but I thought it's important news to highlight. Tata Motors PV is the third one I'm looking at, and it's a thumbs down. And look at what HSBC is saying. Now, Tata Motors PV hasn't had the best news, and JLR has been sort of an albatross around the neck, if you see it, weighing them down. HSBC nevertheless has maintained a hold. They've cut the target price to 400 rupees from 466, which is still higher than where the stock is trading right now. But this is the part that I thought was noteworthy. They're saying JLR downside risks outweigh upside potential for India PV? And here is what you have to look at, because if you look at what the numbers were also for the company, the India business is doing well, Jaguar Land Rover is not. And HSBC is of the view that JLR is overriding all the good that the Indian business is doing. They go on to say all stars misaligned for JLR. US tariffs, aging portfolio, luxury tax in China, cyber attack and weakness in demand from EU. Positively, the passenger vehicle business should benefit from the launch of Sierra and expected PLI benefit of Nexon EV and Harrier EV in Q3 and Q4. So watch out for the Sierra launch. Like Puneet was saying, that's a big one. But the question is whether JLR's problems overshadow what's happening in the Indian market. Valuations are undemanding, but JLR recovery in the near term to medium term looks unlikely. So that's the HSBC view on Tata Motors PV. We're giving it a thumbs down, at least from today's perspective.
And this week, I think auto will be in focus as well, because in the next 4 to 5 days, you'll have auto sales numbers.
Yes.
That will trickle in. So that should be a sector that should be on our radar. On my watch list, the first one I have is Dr. Reddy's. It's a good biosimilar push that has come in for the company. They've actually got an approval for a biosimilar of the blockbuster drugs, 2 of them, which is Prolia and Ziva. And the significance is because this marks Dr. Reddy's entry into a blockbuster market where they see a major revenue potential. The European denosumab market, which is these 2 drugs combined, is a substantial one. It's almost valued at clearly $1.2 billion annually in the European Union. It's actually giving Dr. Reddy's a broad market reach in both chronic and oncology care. The strengthening of the biosimilar portfolio is the key over here, because the segment is of key focus area for the company's long-term growth strategy. They are moving away slightly from generics, and this is where they get the edge. This would provide them strong momentum for approval in other markets, and this is mostly notably in the US market, because that's where Dr. Reddy's will have exclusive commercialization rights as well. And Dr. Reddy's holds semi-exclusive commercialization rights for the same products in the European Economic Area. So a good potential that could be in the hands of Dr. Reddy's on the back of this approval. Secondly, Tamanna mentioned a Paras Defense. Likewise, we have a Bharat Electronics as well. That stock was one of the top losers in yesterday's session, and now they've gone ahead and signed a JV pact with Safran Electronics and Defense to produce Hammer weapons in India. Now, Hammer is basically highly agile, modular, munition extended range air-to-ground weapon. This JV will have a 50-50 shareholding between Bharat Electronics and Safran Electronics, and the core goal is to actually focus on indigenization. BEL has actually previously executed a small order when it comes to the Hammer system as well, and their primary role in the JV is the final assembly, testing and quality assurance, and this is going to be a strategic placement that will actually ensure BEL's long-term dominance in the domestic air-to-ground precision weapons market. So it's not a one-time JV contract, it's a more strategic one, so watch out for this one in trade. And very lastly, Surya Roshni also will be in focus on the back of an order win. Order value is nearly around 100 odd crores, and the segment is in steel pipes and strips, so watch out for this small company as well.
Yeah, well, it's difficult to find stocks which will have very large reactions, to be honest, these days, so bear that in mind. But well, here are the 3 on my list. The first one is Cello World. Now, they've entered into, this was known by the way, but just the dynamics of those have come out. So, they've entered into a zero royalty agreement to lease the Cello brand trademark for stationery and writing instruments. They wanted to get into this, which was known. The piece was around the trademark and what is it that they might have to pay, if at all, and that has come out, that they don't have to pay anything. It's a zero royalty agreement. They'll invest about 50 crores and they anticipate generating 200 crores of annual revenues starting January 2026. That's a good asset turn for the business and the kind of investment that they are making. Maybe the street likes this a little bit. Remember, again, it's an IPO that came in with a fair degree of bang. A lot of notes came in after that. If you look at the last 6 months charts or since listing for Cello World, it's been okay, nothing too dramatic out there. Let's wait and watch if there is some benefits that come in out of this announcement for the stock today. So keep that in mind. And we were talking about how mega caps are finding favor. There is a note on Reliance as well, but what caught my eye was the Macquarie note on HDFC Bank, wherein they maintained outperform with the target price of 1200. They say that the clear messaging from HDFC Bank is that it is seeing good growth traction post the GST cuts. They have retained that the bank has retained the guidance for its loan growth to be faster than the system. And Macquarie believes that the growth of the system itself will be upped a bit more. So keep an eye out, maybe HDFC Bank, not necessarily just from a day's trade perspective, but just keep an eye out for HDFC Bank as well. The street seems to be favoring those mega caps. And I thought the note from JP Morgan on pipe stocks was interesting because we've seen some bit of a pullback into the likes of Astral, in the likes of Supreme in particular. Now, JP Morgan makes this very interesting observation. They say that there's no update on anti-dumping duty, and of course the decline of PVC prices that has come in as well are combined negatives for the pipe companies, and the risks of further cuts in PVC prices may impact restocking by dealers. I think this is a very important point because if you viewers remember a conversation that we had with the Astral management, they said that in a matter of time we'll have the ADD and we'll have the price decline come off, and therefore that will lead to restocking. That doesn't seem to be any time near, and as a result of which, keep an eye out for the pipe companies. Both of them, Astral and Supreme, and some of the others of course, might have some weakness around themselves. So these are at least 2 or 3 that you ought to keep in mind. I must say the brokerage community till December 15th will keep us giving some very interesting notes, so we'll highlight as many as we can.
This also seems to be that time of the year when they're, you have the time to meet managements. So they're having a lot of management meetings. For example, the note on Lupin is also quite interesting, where they have a positive view. I think they've met with the management in London, Jefferies, if I'm not mistaken. So you have some of these times when brokerages typically go out and get a sense of what the outlook is. It's not a here and now, so kind of a scenario. Yeah. It's time to take stock of what's coming up ahead. Having said that, let's go across to Sharath for a very interesting story. So we thought the big conversation in the Indian markets right now is high valuations. So there are a lot of stocks which have high valuations, but the way the street treats them is not the same. Some with high valuations or high price to earning ratios still see a good upside in their price, so the earning per share improves. For the others, that's not the story. So high valuations is not necessarily always bad or always good. So what are the expensive stocks, but are they really worth it? Sharath Dubey joining with more.
Well, Tamanna, it's very interesting, and looking at this graphics itself, it's quite, that understanding that these expensive stocks, are they actually worth it? If you're actually having positions, should you keep these positions on or should you exit them? So I have taken my analysis in the Nifty 500 index. Over there, we have taken stocks with more than 50 P coming in. I have removed the financials for an analysis, and look at the first table which you are putting out. Devyani International 12-month forward P is 271 times. But over the next 2 years, the EPS CAGR, that level is something which we are looking at. That's 236%. And also the same case applies for Nykaa. This goes in at 159 odd percent. To put it across, there's a strong EPS growth coming in these stocks, and they might actually justify the higher valuations also. Piramal Pharma's story, same 132%. Aditya Birla Real Estate, that's also 132% gains expected. And these valuations, you look at it, they are on the higher side. Also a consumption name comes into the pictures, Eternal. 164 times 12-month forward PE coming in, but they're expecting the EPS to double going ahead. So the question remains is, should you hold and buy these stocks? The second question is, should you hold and exit these stocks? And these are the high P, low growth stocks. Weak EPS growth, will they justify these valuations or not? Capital goods space, cements is there, single digit growth coming in, and the valuations on the higher side, 50 times. Same thing goes for Cochin Shipyard, just 7.3% EPS CAGR expected in the next 2 years. Consumption names, Berger Paints and Nestle, higher valuation but no growth coming in the EPS, and that's why the analyst community is giving a thumbs down. And Page Industries, which has time and again tested the patience of the investors, just 9.6% EPS CAGR coming in, and the valuations still on the higher side. So the question remains is, these high P stocks and the earnings growth is also low, should you exit these counters or not? So of course these are high valuation stocks, but two different sides of the coin coming in and giving stress to investors as well as our viewers.
So basically, high valuation is neither a deal breaker or a deal maker. Do your due diligence over and above.
It's a motichur ka laddu. And so both sides you need to understand when you play this high valuation game.
Sharad, you're thinking about laddu. It's only 8:30 in the morning. It's time for granola.
And it's Tuesday.
On a Tuesday. Nevertheless, we'll take a very short break. In case you're wondering where Alex is, he's all the way in Singapore for an assignment, and he had the opportunity to catch up with Sameer Arora in his office in Singapore. Take a glimpse of that conversation. We'll play it out for you at 10 in the morning.
There are a lot of investment theses out there, but Sameer Arora's Helios Capital believes that it's better to identify stocks that you should not invest in to find the portfolio that you should.
We don't like loss-making companies. So you have first eliminated.
What ideas are you actively staying away from in 2025 November?
When a new entrant comes, the market thinks it's competition. We think it is sanity. Fact that you've reached an IPO stage is broadly you have survived. As a thumb rule, we give benefit of doubt to first quarter. कि first quarter तो अच्छा होगा.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money.
Welcome back. You're watching India Market Open. Sunny Agarwal joining us this morning. He's head of fundamental equity research, SBI Cap Securities. Sunny, very good morning to you and great to have you on. Why this nervousness in the markets, and especially on expiry day? Are you expecting another volatile day?
Yeah, good morning, Tamanna, and good morning, everyone. Yeah, I think, yes, definitely there can be some volatility related to expiry, no doubt on that. But again, I mean, I feel this volatility is a good opportunity to accumulate quality stocks in a portfolio, especially where the outlook is pretty robust. A case in point like auto ancillary, or for that matter, banking sector. There we feel that December quarter as well as the March quarter is likely to be a pretty good quarter in terms of earning growth. So I think an opportunity definitely for a medium to long term investor, but obviously a choppy day for a trader or kind of high frequency trading community.
Okay, so that's with regards to Nifty. Sunny, you know, the kind of rally that we've seen yesterday in terms of IT stocks, right? That was the only support that did come in for the markets, because otherwise across the board you saw selling pressure. How are you looking at IT in terms of today's day of setup? Because US markets, again, the rally has been because of IT. If there is a spillover, is that strength expected to continue? What are charts indicating?
Yeah, definitely. I think IT being an under-owned sector, and what we have seen is that during the last 4 quarters, there has been a significant underperformance by the entire IT pack, especially tier 1 IT companies, where post muted kind of earning growth during the last 3-4 quarters. There is an hope that there can be an upgrade in terms of earning growth going forward, backed by an likely reduction in uncertainty at a global level. And second, because of the rupee depreciation, which we have seen of late, that can add a few basis points of margin expansion for an entire IT pack. So I think a comfortable valuation coupled with a weakening rupee, and at the same time likelihood of India-US trade deal, which can lead to an better growth outlook for at least fiscal year 27. All these factors are playing in favor of an entire IT pack, especially tier 1 IT companies, which are trading at a very reasonable valuation. And at the same time, I feel the earlier concern that most of the IT companies will continue to report a muted earning growth. Now, most of the IT companies have taken steps to ensure either they diversify in a high growth engine or high growth segment. So like TCS venturing into a data center kind of business. HCL Tech has started reporting a separate AI number. So I think risk reward is favorable, at least for a large cap IT play. And among the large cap IT play, we feel HCL Tech and TechM, these are the two stocks which we feel should be on investor radar from a medium to long term perspective.
Okay, one set of stocks which really saw some pain coming in, and it was the entire market really which had a drop, but one of the worst performing sectors was the realty sector. So the Nifty Realty Index continues to underperform. Several top developers are posting steep year-to-date corrections in their stock prices. Pre-sales momentum also seems to have softened. New launches have dropped sharply, and affordability pressures are weighing on sentiment. Anushi joins in with more reasons why. Anushi, now this is a bit of a surprise, because with the kind of support coming in from the Reserve Bank of India on interest rates, all things together, GST cuts, etc., you would expect quite the reverse for the realty sector.
Well, there are a lot of investor concerns which are outweighing some of these benefits that we are mentioning about interest rate cuts, or even with the GST rationalization that has taken place. In fact, first, let's take a check in terms of how the index has done in comparison with Nifty 50. So while Nifty 50 has majorly remained flat in this 1 week to 1 month period, Nifty Realty has corrected over 5 to 7% in these two time frames. In fact, if you take the year to date into account, 15% is the kind of correction that we are looking for Nifty Realty, making it one of the worst performing index for this particular year, versus an uptick of around 9% that we've seen for Nifty 50. Now, what's leading to this concern, and which are some of these stocks which have relatively underperformed? Puravankara and Arvind Smart Spaces have seen major correction. And we are looking at a stock price decline of around 35 to 36% for both of these counters. In fact, the other players also, that's on the luxury side where the outlook is relatively better. Even see something like a DLF, Lodha Developers or Prestige Estates, there's correction across the board that we are looking at with Godrej Properties and Oberoi Realty also 26% to 29% of correction being seen for this as well. While for the mid-income space, that continues to underperform even the luxury players that are there. But let's understand and let's decode what are these major concerns. So if you look at the concerns now, pre-sales growth this time was majorly driven by sustained sales. So there was like a lack of new launches which had taken place. In fact, we can see this in the launch volumes itself, which were down about 61% year on year for top 15 of these developers which were there. This is on account of higher housing prices also that we've looked at. Post-COVID, there's been a substantial surge in terms of where the pricing growth has been concerned, which has hurt the affordability index as well. Now, the most recent concern for the street is also the labor costs, which are expected to rise about 10 to 15% due to the new labor code which is in effect, which will lead to a 3 to 4% of an uptick in terms of overall development cost for these real estate players also, which will then impact the profit margins. But if you talk about the outlook ahead, luxury and ultra luxury continue to drive the value growth momentum that we are seeing. It's not the volumes that we are speaking about, it's value that we are talking about. In fact, there's a strong expectation of a healthy launch pipeline. This is from the second half that we are looking at, and this is a critical piece in terms of some bit of recovery for these real estate players that we are looking at. 18 to 20% is still the growth expectation that the street has penciled in for FY26. Regulatory overhang also, which was a major concern in FY25, which has also led to this correction that we've seen in the first course of the year, is now largely behind, especially for the south-based players. So that is on the positive side that we are looking at. Sales volumes across key cities, however, may stagnate and may not exceed 4% growth is what we are seeing. So volume picture continues to be an overhang for the overall real estate space, but let's see how they've performed against the guidance. DLF continues to lead the pack, 75% of it achieved in the first half itself, while Prestige Estate and Godrej Properties also had a relatively strong H1. H2 to be stronger for Godrej Properties going forward as well. And Lodha Developers had a muted H1. They expect strong launches in third quarter. So that is one factor that we should be watching out for. However, in the mid-income, or rather the affordable side, Signature Global and Arvind Smart Spaces have not done so well. In fact, we've seen about only 37% of guidance being achieved, but they have still maintained their FY26 guidance. So that is a critical piece that we should be seeing. So that's the overall perspective that we have for real estate for now.
So that's why it's in focus, and that's why it's looking in a bit of a weak spot. Sunny, quick word on our presentation just now on what's happening with real estate stocks and how it's clearly underperformed the Nifty this year. That chart over there showing the story very closely. Is this also an opportunity to pick up some positions?
Yeah, definitely. I think there is no doubt that the pre-sales growth momentum has slowed down for the entire real estate pack, and that is something which would have led to the profit booking along with many mid-cap and small-cap names. But what we feel, there are certain micro markets which will continue to do well. Case in point, like Thane as a micro market looks pretty well in terms of price point and as well as demand. So Raymond Realty is the one stock which we have seen recently, which have demerged from Raymond Limited, and post-listing we have seen a significant correction. So stock trading at 3,000 crore market cap as we speak, and has got an a GDP potential of closer to 25,000 crore alone in a Thane as an region. So I think few micro markets like Thane, or for that matter Bangalore, players like Shobha, or for that matter Brigade or Prestige, they seems to be well placed because of the increasing concentration of GCC over there. So I think few micro markets should continue to do well, and one should focus on those companies which are present in those micro markets.
Okay, companies from micro markets is something that you should be focusing on. That's an interesting view. In fact, let's also get in Kunal Shah, Senior Technical and Derivative Analyst at Mirae Asset Share Khan, who joins in. Kunal, welcome to the show, and always a pleasure to speak to you at NDTV Profit. My question coming to you is the kind of moves that we are seeing when it comes to Nifty and Bank Nifty. Last two trading sessions, volatility has been extremely high. What would your strategy be, and taking expiry into consideration, what are the key levels you would be watching out for?
Good morning to everyone. See, I think definitely we were almost 30 points away from the all-time high to break out, and we have witnessed volatility at the highest level. So again, today being a monthly expiry, we expect this volatility to continue. Overall, the setup still looks positive. I'm bullish on the indices. For the Nifty index, till the time we are trading above the 25,700, 800 zone, the view continues to remain on the bullish side. It has been the broader market where the real pain has been, specifically the small cap index. Where we have already seen a structural breakdown. So I think we are in a phase of 2018-19 right now going on, where the similar structure was there as well, where your index will start making a new highs, but your broader markets will continue to see the pain. And specifically the newly listed IPOs, or you can say the small cap index, that is something which one should avoid at the current levels. Any pullback what you get into these sectors could be a good opportunity to exit. In fact, even from the mid-cap space, my suggestion would be to stick to quality mid-caps. That is more important. We might see some more pain pressure there as well. So I think large caps is one thing, or probably the indices is one thing which one should continue to be as a buy on dip. I'm expecting eventually Nifty to surpass its all-time high. So the view is bullish. For today's expiry, the key levels to watch out are for Nifty is 25,800. I'm not expecting that to breach on the downside. Yesterday, we had seen call writing at higher levels, but we need to sustain above this 25,800, 850 zone, which is a strong demand zone. And I'm expecting a recovery toward 26,100 on the upside. So the immediate hurdle is 26,100. Once that is taken out, then we are heading toward 26,200. So it's like a wall of worry to climb. We'll be climbing it slowly and steadily, but I think eventually we'll break out on the upside. And positionally, we are looking Nifty at 26,500 on the upside. For the Bank Nifty, it has been the outperformer. Again, the big boy HDFC Bank has started to participate. Overall, the structure looks positive, but my sense is now that Nifty will start to outperform compared to the Bank Nifty index. So that there could be a role reversal there where Nifty would continue to go higher with IT coming back into the flavor. Banking is already looking strong, PSU banks as well as the private banks. So Bank Nifty will go towards 60,000 mark. For Bank Nifty, for today's expiry, 58,500 is a very important support zone on the downside. The immediate hurdle is 59,200, 300 zone. We tried to surpass that in yesterday's trading session 2 to 3 times, but we failed. Once we surpass that mark, then probably the real short covering will come in, and that will take Bank Nifty to 60,000. So overall, the view on both the headline index is positive. It's only the broader markets where the real pain is.
Okay, let's hear your picks this morning, Kunal.
So two stocks, again, both on the buy side. First stock is from the technology space, again, that is Tata Tech. And I have picked this stock based on the rollover data. I think there have been already a lot of shorts which have built up in the current series. And we have already started to witness the rollovers in the next series. That means the current expiry, the shorts have been started to cover. And on the next series, we have seen the longs which have started to build up. So clearly, Tata Technology is something on the technical charts looking strong, as well as a good short covering move that could come in today's trading session. So that's a buy at the current levels with a stop loss of 660, looking for targets of 697 to 707 on the upside. The second stock where I think the momentum will start to pick up slowly. So overall, we have seen that this stock has been one of the outperformer in the recent times, and we expect again a short covering move to come in, and that is LTF. The NBFC space has been doing very well, and LTF continues to be on the buy side for me at the current levels. 292 somewhere it's trading currently. One can go long, keeping a stop loss of 288, looking for targets of 297 to 300 on the upside.
Tech, interesting call. I haven't heard that stock being mentioned in a while, and this is on the chart. Sunny, just quick word on Tata Tech.
Yeah, Tata Tech again, I think looks good. At least the outlook during the latest earnings season was pretty good. So auto as a sector is one where they are betting big in terms of growth outlook. So I think risk reward continue to be favorable for Tata Tech. Let's see how earnings plays out during the Q3 for Tata Tech. Yeah.
All right. So some of the movers from yesterday's trade, and we'll talk about a few of them as well, was companies impacted by the labor codes. And look at what happened with the Swiggy, especially during closing session, right before markets closed. Swiggy saw this huge bump up. I mean, that chart is actually astonishing. It was about 5% up. Now, its peers, if you're looking at it from a labor code perspective, then, gig workers, now companies will have to keep 1 to 2% of their revenues for the welfare of gig workers. That was seen as a negative for companies that hire gig workers in large numbers. So pull up an Eternal, which runs Zomato and Blinkit. That was mildly up, mildly down in the red. after a recovery though, a delivery, some of those other stocks, an urban company, for example, all of them will have to keep this budget. Delivery was 3% down, urban company was 3.5% down. It seemed to be a different story on Swiggy altogether. Now, we don't know if there was a different reason for it or not, but Sunny, just if you've been looking at that stock closely.
Yeah, I think again, what I feel is that this new labor code may lead to a slight increase in cost for all these labor-intensive businesses. But ultimately, what I feel is that a shift from unorganized to organized employment, a band is something which will at least give a lot of clarity to the business owners in terms of cost which they have to incur while hiring any new delivery fleet, and at the same time. It opens a big pool of employment for a job seeker, wherein they are very well assured of their benefits which they will get in terms of once they are in the company. So I think it's a long-term win-win situation for Swiggy as well as any other labor-intensive business. Although there may be a slight inch up in terms of cost, but I believe that will be passed on to the consumer, and as the volume grows, obviously operational leverage will kick in, which will drive the margin going forward. So I think it should be positive in long term for companies like Swiggy or Eternal for that matter.
So positive in the long term for Swiggy or Eternal. Stay on with us, Sunny and Kunal. Going across to Somit Sarkar, who's joining us with all the chatter that's heard on the street. Somit, I know you have your list of stocks that the chatter is going on about, but I want to ask you about what's happened with Swiggy, and is there anything that you're hearing? Because that spike was, I think, right before the closing.
For Swiggy, if you look at the intraday chart, the spike happened right at 3 p.m. and this could be largely because of the sum of the MSCI flows that were expected to come in, and given the fact that volumes have been very low in the market, a small inflow also could have led to this kind of a spike when it comes to Swiggy. Other than that, there was no other reason for Swiggy to see such kind of a 5% spike in trade yesterday. Exactly at 3 p.m. that spike has come in for Swiggy, so that could be largely because of the MSCI flow. Apart from that, few stocks that dealers have highlighted. Firstly is Glenmark Pharma. There are buy flows on PMS desk is what dealers have indicated, and this could be, they have also saying that they're expecting some positive news flow for one of the key drugs to which it is a key supplier, and also they're expecting some positive news flow when it comes to its US facility. For Prime Focus, there are buy flows on large HNI desk, and dealers are expecting some positive development to happen very soon in this counter. Apart from that, it was Hindustan Aeronautics. There was selling pressure in trade yesterday owing to the Tejas incident, but multiple dealing rooms have suggested their clients to buy Hindustan Aeronautics for the month of December specifically. And Karnataka Bank was a part of our segment yesterday where we did indicate that there are some positional buy trades that have been taken on the PMS desk. And if you look at the Bulldale data, an interesting name has appeared and who has bought some stake in Karnataka Bank is the Cupid promoter, who has bought some additional stake, fresh stake in Karnataka Bank. And this could be one of the reasons why there is some positional buy flows that are coming in when it comes to Karnataka Bank. Potential turnaround story could happen given the fact that new CEO has been appointed in the bank.
Okay, thank you for that, Somit. As usual, those are some of the cover that you should not miss this morning. Kunal Chan, Sunny Agarwal with us. Kunal, want to ask you about Karnataka Bank, want to ask you about Swiggy, if you have enough data to take a view on Swiggy.
Yeah, I think again, if you look at Swiggy, probably we are again still trading in the downtrend on the technical charts. 420 has been a strong resistance or a rejection zone for the stock. Till the time that is not taken out, the view remains sideways to negative for Swiggy. The support on the downside is at 380, and once that is taken out on the downside, you will see further correction coming in. So my view from the current levels, the support is at 380, the resistance is at 420. That's a sideways range. I'm not expecting any momentum to build up. Probably on the downside, if 375, 380 is taken out, then probably you will see further correction on the downside.
Okay. All right. Just want to talk about defense stocks for a bit. Defense stocks got pretty beaten down yesterday, and maybe some short positions building up there as well. Sunny, is defense something that you would stay away from for a bit?
Would not like to stay away, although there is some sentimental damage because of that one-off event in Dubai. But what I feel is that with most of the large companies are sitting on a decent order book, and the revenue visibility is pretty strong for next 2-3 years. So if I have to pick one stock, obviously BEL, Bharat Electronic Limited, which seems to be very well placed post this correction. So I think one can accumulate this stock in the band of 380 to 410, and with an expectation that stock can scale highs of 480 over the period of next 6 to 12 months.
Okay, so that's with regards to Bharat Electronics, the stock which ended 3% lower yesterday. Let's see on the back of the JB, it sees some momentum or not. Let's pull up Lupin also on the screens, because you have a Jeffries which has maintained a buy. This is the same note that Tamanna was alluding to as well. They have a target price of 2,300, where they actually hosted Lupin's CEO and CFO in London. And what they've said is that they're confident of sustaining that $1 billion revenue and a 24 to 25% EBITDA margin in FY26. And this is in spite that competition that could be coming in their top key products. Now, the biosimilars segment is going to be the next big growth engine, and that's what we spoke about for Dr. Reddy's as well, that biosimilars is going to be the growth driver for that company from here on in terms of long-term strategy. The investments that they have been making in specialty assets, that will continue, and they're expecting the contribution of complex generics and specialty to increase to nearly 70% of their US sales by FY30. They're actually targeting a 200 to 300 basis points outperformance versus industry growth in India as well. So biosimilars is going to be the strategy for a Lupin and a Dr. Reddy's. Sunny, any view when you come across, when you talk about a Lupin and you have a Dr. Reddy's which has actually got a European Union approval for two blockbuster drugs whose probably potential is almost $1.2 billion?
I think Lupin is relatively well placed. So what we have seen is that the Q2 numbers were pretty robust for Lupin. In fact, one of the record quarter for Lupin, and at the same time, as alluded during its London meet, the same was shared during the con call also, that US can become a $1 billion business in FY27. I think Lupin is the one stock which one should have in a portfolio if somebody is looking to at a large cap pharma names from a medium to long term perspective.
Okay, all right. Time for a very short break, but we're coming back with a very exciting conversation right here in the NDTV Profit studios. Arvind Chari will be with us. All of that after this break as we get you the top picks of the pre-open session as well.
There are a lot of investment theses out there, but Sameer Arora's Helios Capital believes that it's better to identify stocks that you should not invest in to find the portfolio that you should.
We don't like loss-making companies, so you have first eliminated.
What ideas are you actively staying away from in 2025 November?
When a new entrant comes, the market thinks it's competition. We think it is sanity. Fact that you reached an IPO stage is broadly you have survived. As a thumb rule, we give benefit of doubt to first quarter. कि first quarter तो अच्छा होगा.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
All right, Arvind Chari, Chief Investment Strategist, Q India, in our studios, based out of Singapore, but right now in India, in Mumbai, after the Delhi trip.
Yeah.
Arvind, great to have you at the Profit Studios.
Very good to see you.
Pleasure as always. How was the Delhi trip, apart from the pollution? How were the conversations vis-a-vis India?
Yeah, I did fall sick, so it wasn't a good trip from a health perspective, but it was a fantastic trip from a macro perspective. I live in London. I don't live in Singapore.
Okay.
So I've kind of lost touch with what the Delhi policy making the viewpoints and policy guidelines is. And I came back. I've been reasonably constructive on the Indian macro recovery, and I'll give you reasons for that. But I also got, like, from the policy think tank and from the policy perspective, I came out with two things. One is we have to very closely watch that deregulation commission. There are two commissions formed by the government. One was on deregulation and one was on, like, the Gauba committee and the Somnathan committee. And they are coming out with suggestions. Some of them are already being implemented. For example, the quality control order, which was removed, which should have never been put in the first place. So, you can debate why it came in and why it's gone down. What was it, only rent seeking, or was it only, favoring a few sectors, industries? But one of the outcomes of one of these committees is to, take down QCOs in some very key sectors. So I think the government is thinking a lot on those parts. I think the DOGE aspect, which started early this year in the US, that deregulation aspect looks like it is feeding through. So that is something to watch out. The labor code was supposedly mentioned that will get implemented and actually already got notified. So you're seeing some, I think it's a reflection that they've realized that the nominal growth is not as high, and they need to do what we've always called second generation, third generation reforms to be able to get our long-term real GDP growth from 6.5 to say 6.5, 7.5. There is realization. Whether they are doing enough and all, we'll come to know in terms of how things pan out. But yeah, in general, although the sense is still 6.5, 7% GDP growth, but in the background, you can see a lot of these.
What do you make of the labor codes and the impact of the labor codes? I mean, seen as negative yesterday for some companies which employ gig workers, etc. Very positive for those in the formalization of employment business. But how do you see it as a impact over time?
I think it is going more on the formalization part, where they want to formalize a large part of the economy. But I would see, like, even for smaller enterprises to have social security and all those aspects, I think it's going to be onerous. Looks like they've reduced the number of licenses and they've reduced the number of filings that a entity need to do. But still, if you're a small enterprise and the cutoff is doesn't seem very high, like even for a 100 people employee base, you need to do all those, follow all those registrations and guidelines. So it's a mix. The large companies will be able to manage it in terms of, because they will have consultants and people helping it. for the smaller enterprise. It looks like it's going to be a bit more onerous than what the general perception of labor code is, that hire and fire. And that's the connotation that we come about with. It's not that. It is a fairly
But it's a
significant
better version than what existed.
Absolutely, because of the codes being number 4, and I think if you see the
29
number
to
of guidelines and the number of licenses drastically, the number of forms that you need to fill, it is much lower. So I think it's a mixed thing. But it's going through the function that you need to formalize a larger part of the economy than what it is currently. So, GST was one such formalization effort, right? Digitalization is another such formalization, and maybe the labor code is.
So Arvind, with this formalization, what is that impact that you're seeing when it comes to the markets? Because that's what people want to hear.
Yeah.
You have been of the opinion that India is an underallocated market as well.
Yeah.
When do you see those FIs coming back? I mean, they have been consistent sellers right now.
Yeah, so if you see I think since last year, right, September 2024, we must have seen about $20-25 billion of FI sales. Now you have to see it in different perspective. One is as percentage of market value of what they actually own in India, about $800 billion. It's not that much. 25 billion out of $800 billion of market cap is not much. But the way you should see it is, I think about 80% of the flows that India gets in the portfolios as foreign portfolio investors comes from what we call global allocations or global emerging market allocations or Asia allocations. These are not dedicated India allocations. So for them, it has always been a relative trade, right? India is relative to some other country. So if you look at the previous decade, you would have seen that India was always an overweight in a active global emerging market portfolio as compared to its normal weight. But as India's weight has gone up from like 8% of the MSCI EM index 15 years back to now almost 20%. It went actually about 23, 24%, and it's come down. So the overweight also has reduced from that perspective. And I think now if I see some strategy reports, it's looked like India is kind of underweight. Like for the first time, you're seeing a underweight in global emerging market portfolio. So that is what is leading to the outflows that we are seeing. You can argue that India's nominal growth and nominal earnings have actually come down a lot, and the valuation, especially last year, September to December 2024, the valuations were significantly higher than what they were getting in some other countries, and then China became investable. AI was a big theme, and you're seeing some of those outflows. So that is the context, and we can talk about it in detail as well.
Yeah, let's talk about it in detail, but just want to mark the pre-open session as it opens right now, and just bring up some of those rates, by the way, and just see what's happening there. So Nifty, well, this won't last, of course, but keep an eye out for IT, because I think Nasdaq and Nikkei and the moves that they have done, and just keep the IT space in focus. Remember, Nifty IT was the one that did reasonably okay yesterday. And then keep an eye out for the defense and the real estate names and the kind of pummeling that they took, whether that continues or does that change. I think that's the other key thing to keep in mind. By the way, I know Sunny and Kunal, if Kunal is with us, just wanted to make one quick check with him before we thank him. Okay, I think we just get that feedback, so we'll get that going as well. Arvind, are you of the belief that flows come back in 2026? There seems to be a thought that from a bottom-up market that India has been, because of a confluence of factors, it could turn top-down, and flows could come in as well with moves happening, etc. And what are the necessary conditions for this? Is the trade deal a necessary condition for flows to come back, or can flows come back because of the relative valuations becoming okay too?
I think it will be more relative valuation. So if you look at the thing that we've been hearing, so India was not AI till September 2025, because India does not have foundational LLMs, and we don't have high semiconductor chips, and we don't have a basic AI like a large AI behemoth that we have. So we've been underrated, and money has actually gone, and logically so, into China and Taiwan and Korea, where the AI plays, at least the first AI plays are happening, right? And then now that the AI is a boom, or it's a bubble right now, you already seen that India may be what is called a reverse AI trade. Because India does not have any AI play, there India should be beneficial. So I think the global markets will go through this investing swings, and I've written about this and I've said this, that India was BRIC in 2005, right? India was Brazil, Russia, India, China. It was India's birthright to grow, and then a lot of capital got deployed in India based on that 8-9% growth expectation. The small cap rally fizzled out into 2008 after Lehman, and the infra and the real estate plays got fizzled out after 2011-12. People lost a lot of capital. Then India became fragile 5 in 2013, right?
So now?
So then India was China +1 till recently, because, and you saw that a lot of venture capital and private equity money that India received was basically China +1. You could not, China was uninvestable after COVID, and that money came to India. So you see, I think you will see this themes that people like to play themes, but the Indian story remains, although it's a top-down aspect, but it remains the bottom-up story of, can companies be able to grow in double-digit nominal GDP, and can they compound their revenues and earnings in double-digit nominal GDP? And all you need to do in India is to find companies which have good return ratios over cycles, and they're available at a decent valuation for you to buy. I think those aspects are coming into play. I think the relative valuation is better than what it was a year back, for sure. The growth aspect is still a aspect of, people will think about it. But I would think, and as I said, and I can talk in later, that there is an upswing that we can see. There's a cyclical recovery.
Okay, let's talk about all of that. Thanks,
Sure.
but stay on. Let's get in our other guests into the conversation. But before I go to Ruchit Jain, it's that time of the show when we get you the top brokerage call and the big brokerage call for the day. And today, Antique's note on Adani Ports is something that Sharad has chosen. Sharad, why this one? What is the note saying?
Well, there's a significant up move expected from this note. They have stated they have initiated buy, and the target price rating is 1,773 rupees for Adani Ports. Now, they have stated that this is a gateway to India's trade, and they will be scaling their overall tonnage to 1 billion tons, and it's an industry leader when it comes to two important factors. One is the volume growth and the high margins coming in. Of course, the bullishness is coming from the broking report, especially on the integration part, from port to customer gate business model. That means the overall integrations would be coming in the entire ports ecosystem. Expansion plans are aggressive as well, with improving financial discipline, and they're expecting that the consolidated revenue, EBITDA, PAT over the next 3 years will be growing between 15 to 16%. So this is why there's a bullishness coming on the counter.
Okay, so Antique on Adani Ports, standard disclaimers there. Antique on Adani Ports is the big brokerage call of the morning. But Ruchit, I want to come to you very quickly on what's moving in the pre-open session. And we're almost at the end of that pre-open session. So some of those rates are now coming into play. Siemens Energy, good quarterly numbers. They have an October to September quarter. And they have a 47% growth in their backlog right now. But the quarter looked robust, nearly 3% up in the pre-open session. Are you liking Siemens Energy? Is that something that you're looking at?
Yes, I think if one is looking from a position perspective, then definitely the risk-reward ratio seems favorable for Siemens Energy over here. The stock has a very strong support base around 3,000, 3,050. And yesterday, during the last hour of the trade, we did see some sharp price-wise correction. But no, till the 3,000 level is intact, I think it makes sense to take some contra trades over here. And if this level gets sold, and from a positional perspective, we can expect levels back towards 3,600 kind of range.
What about your top picks this morning? And now you have the pre-open session data to look at as well.
So a couple of recommendations on the buy side. We are just looking at those stocks which are not showing a relative outperformance in such markets. And IT is one space where we think that the sector as a whole has bottomed out, and we should see a good outperformance in the short term. So Tech Mahindra within the IT space is looking bullish at current levels. The stock has formed a double bottom pattern around the recent swing lows. Yesterday's price up move also witnessed a breakout about 200 DMA in prices, and which was supported by very good volumes. So Tech Mahindra from a trading perspective can be bought at current levels with stop loss below 1440 for potential up move towards 1580. And Aditya Birla Capital is my second pick, where relatively we have seen such that some certain NBFCs are showing good strength in such markets, and Aditya Birla Capital is where on price declines we are not witnessing any volume-based selling coming in. Whereas whenever we see minor consolidations at lower levels, the stock is attracting good volumes, seeing the buying interest at dips. So the stock is holding above its 20-day support. So one can go long on AB Capital at current levels. with stop below 322 for potential up move towards 348 in the near term.
Interesting. Okay, financials coming to the fore. As the pre-open rates settle down though, just keep in mind, yes, IT is leading from the front from a pack perspective, but that is also because the Nifty is hardly doing anything, 0.15% low, higher. So nothing too dramatic in terms of the headline index movers as the pre-open rates settle down. And in terms of specific stocks, not too many losers. SBI Life has lost a little bit. There's some weakness in Honeywell, Tata Elxsi and LTI Mindtree are maybe slightly lower. And the winners include a Siemens Energy, simply because of the results that have come out, and a couple of others like Ventive Hospitality and Max Health, again I think on the back of a brokerage note. So Sunny Agarwal, want to come to you on Ventive. That and Chalet were two of the hospitality chains which actually gave out a very strong set of numbers. Is there merit in trying to buy into any of the hospitality companies, and which one would you choose?
Yeah, definitely. I think most of the hospitality companies have reported good set of number, especially Chalet and Ventive, as you rightly pointed out. I think Chalet Hotel is the one stock where we continue to remain constructive because if you look at the next 2-year pipeline, both on commercial portfolio as well as on keys addition front, there is closer to 25 to 30% room addition as well as commercial space addition which the Chalet is going to witness. We feel the fair value of the Chalet is closer to 1100 rupees if somebody has got an investment horizon of 12 to 18 months. So Chalet is one of an recommendation among the hospitality space for our clients.
So Chalet is your topic coming in from hospitality. Sunny, how are you looking at metals as an index? Because, the kind of volatility that we are seeing over the last couple of trading sessions, immense, but a lot of buying interest that's coming in as well. Would you be a buyer of metals? And if yes, what would your topics be?
Yeah, I think again, if you look at commodity prices, they continue to remain in upward momentum, and we believe ultimately the commodity metal play, whether it is a non-ferrous side, companies like Nalco or Hindalco, will continue to remain a key beneficiary in terms of an buoyant end product prices. So amongst the non-ferrous side, Nalco and Hindalco, and amongst an integrated player, Shyam Metallic is the one player which seems to be having a very robust capex plan, and is likely to be one of the largest stainless steel manufacturer going ahead. So Shyam Metallic is another play which we are recommending to our clients. And another proxy play to a stainless steel is Infa, which is one of the largest player as far as ferrochrome is concerned. So recently they have acquired Tata's facility also, so that will give a boost in terms of volume in FY27. So Infa is another stock which we are recommending to our clients among the metal and mining space.
IT turning out to be possibly the story of the morning as well. Sunny, what would be your top IT pick?
Among the IT, as we have discussed earlier on tier 1 IT companies, I think ER&D is another space which looks pretty well placed, at least in terms of delivering a relatively better earning growth. So Coforge is the one stock which we feel should be a part of your portfolio among the ER&D space.
And what about you, Ruchit? On charts, top IT pick?
Tech Mahindra, I would say, as a top IT based on the charts, around 1360, 1350, the stock has taken support twice, resulting into a double bottom formation. And the kind of volumes that have started picking up last 3-4 trading sessions compared to its recent average, even the stock has surpassed its 200 DMA. So I believe that from the IT space, we could see a good relative outperformance within the sector also from Tech Mahindra.
Okay. Ruchit, quick one, just before markets open, any topic that you would want to give investors?
So I think, if you look at the broader markets, then the broader markets have clearly seen a sell-off more in the small cap space, and the strength is there in the large cap space. So I think if one is looking more from a positional delivery-based buying, then one should focus on the large cap stocks itself. And within the large cap stocks, we like Mahindra and Mahindra from the auto space, where overall we have seen a good relative strength within the sector recently. So that high top, high bottom structure still continues in M&M. So price-wise downside seems to be limited over here. Near-term volatility may be there, but this correction should be used as a good buying opportunity in Mahindra. So at current levels, one can go long on Mahindra and Mahindra with stop loss below 3,580 for potential up move towards 3,900.
So Ruchit, would M&M be your top pick for today, or would it be Max Health? Would it be something else?
No, I think M&M is more from a positional perspective. Delivery-based buying is one has to do. But for top pick, I would stay with Tech Mahindra itself. I think IT as a sector would continue to outperform in such markets, and Tech Mahindra being one of the strongest name on the chart. So I would prefer going with Tech Mahindra.
Okay, watch out for Tech Mahindra and watch out for IT as a trade. Something that Arvind Chari spoke about as well, and we'll kind of talk about that in detail post-market open. But we're likely to start off marginally higher. The question is, can IT and some of the other sectors lead us further? For now, banks are flat. The index itself is flat. Nifty IT should come up on your screen. See if there is some move there. No, not quite really. So it's completely flat. By the way, don't be alarmed by this. It's had a good run. Just some bit of a pullback here. Mid caps flat. Small caps flat as well. There is hardly a move here. Let's see if there are individual stocks giving some luck. And even Stevens, by the way, for the breadth on the Nifty 50. Let's talk about the gainers. Max Health. There is a brokerage note out there, of course, on Max Health, which is presumably leading the stock to do what it is doing. We had a conversation recently with them. They were sounding very buoyant about business prospects. So that stock is doing 2% higher. BEL about 1.2% higher. News flow as well as broking notes. Dr. Reddy's news flow out there 1% higher. There is strength in Apollo Hospitals. I think the hospital space as a pack is doing well. There's Maruti, SBI, Eternal amongst the others. Slowly the quantum of red may be slightly increasing, but the heavyweight HDFC Bank, which has got a note from Macquarie, is also in the green. What is not doing well? SBI Life 3.5% lower. There is weakness in Wipro. There's weakness in Reliance. Keep that in mind. Tech Mahindra is starting off lower. Interglobe is starting off lower. Adani Ent, ONGC and Adani Port bring up the rest, but the standout more is SBI Life. But I would say Dr. Reddy's, because of the news flow as well, is quite standing out with the 1.5% gain that it is having.
Good recovery in Eternal also relatively. Keep an eye on the India VIX, 5.5% lower, which is a good sign because this had also shot up in trade on Monday as well. So that is looking good. But overall, the market's not doing much this Tuesday morning, and maybe a bit of hesitation ahead of expiry coming in. Let's pull up the broader indices very quickly and see what's happening there. Is it as weak on the broader end of the spectrum? Yes, it very much is. The mid cap 150 about 0.2% down. The small cap 250 also about 0.25% down. So nothing major happening there. Let's pull up the sectoral heat map. Will give us an idea of what's working and what's not. Nifty Realty there in recovery mode. Remember, Nifty Realty was the worst beaten down in trade yesterday. So was defense stocks, and that's not worked at all. Metals are okay, but look at the spread of red on the screen right now. So the breadth of the market is not great at all. Oil and gas stocks, I mean, there's I would say an astonishing note. There's no other word for it. An astonishing note, and you'd see some of those lines on our flashes from JP Morgan globally saying that crude can go down to $30 a barrel by 2027. I mean, and they're just seeing a one-way slide as far as crude is concerned. IT stocks not holding up. Definitely some profit booking after yesterday's action. Time to look at what's happening in a stock-specific kind of mode, because that's where you'll see some action. Siemens Energy, we talked about it, was on our watch list. Q4 numbers were strong. Let's take a look at what's happening to the stock right after opening. Yeah, that's about 2% up. Avanti Feeds and Apex Frozen was in focus because marine export numbers are good. It's worked for one, not worked for the other. Apex Frozen at least up in the green. LG Electronics has seen a host of initiation notes. There seems to be a belated realization of LG Electronics as far as the street is concerned. Jefferies today has come out with a note. They've initiated a buy and see an upset of 22%. Stock is up 1.5%. Diamond Power Infra has received a 276 crore order. Is anything happening there for Diamond Power? Not really. I'm not sure if that's the right script that we're seeing there. BEL has formed a JV with Safran. Let's look at BEL. That's seeing some action. And Dr. Reddy's was one of the top gainers because they've received an approval from the European Union to develop a biosimilar. So that's what's working for them. Paras Defense is the other one. They've signed an MOU to make magnets for indigenous trade. Paras Defense is the one which is recovering with BEL, so that's what's pulling up the Nifty Defense. Sudarshan Chemical has launched a new pigment, so some news flow there. All of those news makers. Karnataka Bank has seen Aditya Kumar Halwasia pick up stake. And there's actually an interesting story behind that, which we will bring you. So Karnataka Bank is zooming. HDFC is with that positive move from Macquarie. So I think your movers are far and few in between here. Largely, the mood is quite somber this Tuesday morning.
Absolutely. In fact, I was just trying to spot anything that we would have missed. Nothing at all. It's just an ITI which has probably seen a reversal in today's session after the kind of gains it saw yesterday. Interestingly, you have a Grove which is seeing some good moves, 2.5-3% up move coming in. We will be speaking to the management as well on the back of the outlook going ahead. But literally, there are no major moves that are coming in terms of where individual stocks are concerned. Few of the ones, Sanofi is seeing some 6-7% up move. Phoenix is seeing some gains of around 2-2.5%. Nykaa is another one. You have GVTND is also seeing some marginal gains of 2-2.5%. What's losing out? You have ACC, Gabriel, DCB Bank. These are a few of the losers in trade today as well. So clearly, in terms of where markets are concerned, pretty somber, flattish day of trade is what you're seeing right now. Which direction we take is the key question from here on, and whether we're able to attain that 26,000 on a closing basis or not. Ruchit, a quick one. With the way markets have opened right now, anything that you're spotting which could be a good buying opportunity? Any charts where you're seeing strength?
SBI Cards is one stock where relatively the chart structures look good. Last 4-5 trading sessions, we have seen some consolidation above its 200-day EMA, and that average is acting as support, which is around 860. So if this levels remains intact, then we could see a near-term up move towards 900, 910. So SBI Cards, even today, if you see the open and low are the same, around 870. So even from a day trading perspective or from a near-term perspective, SBI Card looks good.
It's interesting, by the way, on the cards front, that the October data for credit cards hasn't been the strongest month-on-month YOY decline. IndusInd, the principal loser, but maybe it's a conscious decision that they've taken to get out of some of the businesses which were not very fitting from a profitability perspective. But the cards data hasn't been too great. I wonder if that's why SBI Cards did what it did before it's kind of recovered a little bit. But okay, get in Arvind Chari on this. Now, Arvind, you don't get into the minutiae, but I would love to understand. If you believe that money eventually will come back to India, right? Would it be safe to assume that therefore the large caps and therefore the ITs and the banks of the world, which is the first port of call for FIs per se, and maybe autos, should be the pockets that even retail should keep as the fishing pond?
I think it will be a function of valuations and the weights of the sectors in the large indices. So if you track the large cap indices and they wait for the, or they do the MSCI EM benchmark, these sectors, as you said, IT services, financials, and auto, they tend to have large weights. And if I look at our portfolio, the Q India Value Equity Strategy or the Quantum Value Fund in the mutual fund, we are right now overweight financials, all aspects, banks, private banks, financials, life insurance, general insurance, asset management. So we're playing the entire lending and the saving side. We are gone scaled back into IT services purely from the view that we think what happened with Y2K and digitalization and cloud, where these IT services companies were the ones who deployed at scale at enterprises. I think AI should something be very similar in the sense that these IT services companies will deploy AI at scale at enterprise. Unless there is an enterprise AI, the large guys, OpenAI becomes a large enterprise AI function. But these companies have known to do global delivery, and they will be able to deploy at scale. So that's our call. It might be a problem from the employment perspective, because as they use AI more and more, the entry level jobs, which has been the best job that anyone could find in the last 20-25 years in India, that is a big risk. From that perspective, I think IT is a worry, but from a company perspective, productivity, I think that'll happen. And the third, as you said, is auto, which is again another sector that we are reasonably overweight from a consumer discretionary, consumer durables perspective. So you should expect that. And if you look at relative valuations, the large cap is about 20-22 times just above long-term average, but the mid and small cap are still significantly above its long-term average. And we don't see growth being that high. Like, it's not that these companies are compounding at 20, 25, 30% to justify the valuation. the nominal growth and the 2-3% of our nominal growth, about 13-14% is what many people are even struggling to achieve. So from a relative valuation and the indices construct, you would expect a large flow to come to the large cap or the larger place.
Okay, so would you say that all your new age sectors then somewhere would be an avoid, because the narrative over there is high growth, high multiples, and that's what you're looking at. So will those sectors be a complete avoid? What should that strategy or narrative look like?
I don't think it will be complete avoid. If you see in the last 10 years, you have seen dispersion, like even you've seen that in mutual fund allocation where 10 years back, 90% of the allocation would have been in the top 100 stocks. It's not there anymore. You can see a lot more dispersion into mid and small cap names. And we have seen something similar with the FPIs as well. So some of them who are bottom up and stock pickers, and if they find that the Indian new age sectors, you name it, IT services, even defense would be a new age sector in the sense that we have not had defense manufacturing in India. We have not had electronic manufacturing in India. So these are all essentially new ideas from an Indian perspective. Again, for us, as a value manager, it is a function between growth and the relative valuations. But for some, it could just be compounded growth over a long period of time. And you've seen capital go into that. So I won't say it'll completely rule out. But the way a large global EM indices or passive or even active, which are hugging the index, they will tend to allocate more to the larger names initially when it comes, purely because of valuation comfort as well.
I'm wondering how you're looking at the hectic activity in the primary markets in India. Yeah. And a lot of companies coming in which are puzzling for traditional investors on how to look at them. And where cash burn is okay, it's part of the picture. TAM is the biggest question. And I wonder how you look at some of these companies or at the IPO frenzy that we're seeing.
Especially in IPOs, we've actually never invested in IPOs because
never.
Quantum has never invested in a single IPO. Maybe Infosys back then, when in the early 90s, that would have been one.
But that was Pichla Janam.
Yeah. Because our simple belief is that the investment bankers who get the mandate is the one who offers the best valuation to the company, and that might not be in the best interest of the investor, right? So we cover some of the IPOs are large, so we know that we will be able to deploy capital at scale with the liquidity filter. So we do cover them. Some of the new age, we kind of use a mix of different ways to value those companies. To understanding business is fine, but the question is valuation. So we might use a mix of a long-term DCF with a long-term terminal growth rate projection, and then combine it with some other metric which works for the industry, right? So for some metrics, PE would be the ratio. Some metrics you might just have to look at EBITDA and try to see EV EBITDA. So we'll try and combine a different way of valuing those companies, because we don't have a historical precedent in terms of how they do. So it's a mix and match. In most of the other segments where, say, insurance or autos, where you have seen new companies, we know the historical trend. We know the history. We know the long-term median fair valuations of this company, this sector, globally and domestic, and then we can do a benchmark valuation. Some companies can be really challenging, like the EMS space, given the fact that I don't think they're doing much value addition, but their revenue is compounding in a very significant manner.
And great return ratio.
And great return ratio, because the asset turns.
Asset turn is great.
Yeah. So in that, you will have to, from a value manager perspective, it kind of gets challenging for us in terms of just looking at the revenue multiple, and we cover those companies as well.
So Arvind, sorry, you will then therefore not participate in any of the tech-enabled platform plays in India. All of them are new companies, right?
No, we'll participate
after they list.
Yeah, after they not in the
go
IPO.
At a higher valuation.
Have you participated in any of the big stories, Eternal, Swiggy, or any of the platform companies,
Paytm,
Fintech, Paytm?
We've covered them very actively, but from a valuation,
just stayed away, huh?
For us, it's a discipline of valuation, right? We look at companies over a 2-year forward valuation. We focus for 5 years and we look at 2-year valuation, and we try to see whether on a discounted basis, are we able to buy at a discount to intrinsic value. These companies, they came very close to our buy prices maybe 1.5-2 years back. We kind of missed at that level.
Okay.
But that's fine. I mean, there are enough opportunities to play in India. But the way we do it is we do cover all of them. Like, we have active coverage. When you say active, we'll actually meet them very regularly. We have an updated model. And we know the buy and sell price that works for us from
so
a
they're on your
valuation
radar,
perspective.
but you haven't
Absolutely.
dipped your toe yet.
Yeah, correct.
Okay, interesting. Thank you so much, Arvind Chari, for joining us in the studios and speaking with us. It's an absolute pleasure to have you here, and hope to see you back from your next trip from London.
Thank you so much.
Thank you. Ruchit, Sunny, thank you so much for joining us on the first leg of the show. And always great to have you on. You know, we've been talking about valuations, new age companies, how to evaluate some of these companies. Well, all of that is a narrative that the next company that we're covering has heard and has been talked about. We're talking about Grow. So they've delivered strong sequential performance in the second quarter with solid gains across revenue, profitability and operating metrics. Margins were supported by stronger broking activity. Before we get into that conversation with Harsh Jain, the COO, let me go across to Sharath, who's breaking down the numbers.
Tamanna, the Grow numbers have been good. If you look at the overall operational numbers, there has been a margin beat also on the higher end of the averages coming in. But there is a PAT adjustment also where there is a reversal of management incentives that has boosted the PAT on a year-on-year basis. Will this continue or not? That's a question to be asked. For operational numbers have been good. Transacting users and the active users, both of them have done well. The market share, as we know, has become much more wider as compared to Zerodha, and the margin trading facility where the company is bullish on in the future, that has also seen a significant jump going ahead. The con-call top takeaways that they include that average order per user has significantly grown, and the low quality users in the FNO, they are slowly coming down. There's a bullishness commentary coming on the commodity segment, and also the derivative segment revenue that can actually come down more to almost 50% currently. That's around 80 to 90% contribution. So that's a major statement coming in from the company. And the stock tracker, the IPO price, it's still up 52% and listing price up 33%, but from its highs the correction also has come in the counter and it's down almost 20%. Its high price was at 189 rupees.
Thank you for that, Sharad. All right, Harsh Jain, co-founder and COO of Grow with us. Harsh, great to speak with you. And I'm wondering, what has the experience been like now talking to, journalists post your results versus post your IPO?
Yeah, hi, Tamanna. Thanks for having me. It's always a pleasure to speak with you. No, I mean, see, it's been, of course, earlier also we used to tell how we're thinking, what we're building. Yeah. And now also we continue saying that now there is more transparency, more numbers out there. So the questions are relatively, more first, but it's been fun.
So let's start with that. From what you're thinking and what you're building to what you're doing. I would say that's the distinction in how these interviews go. So let me come to that point. This management incentive is about 160 crores, if I'm not mistaken. So, yeah. So, okay. Explain to us what this incentive is, why it was reversed, and will it be reinstated? Because that's the reason that you are showing a profit this quarter.
Yeah. So, Tana, let me explain. So, this adjustment is not happening in these quarters, like the last quarter or even the next Q3. These are actually done in the previous year. So the numbers that we see now quarter on quarter are the actual operational numbers without any one-offs or without any adjustments. Last year, what had happened was because we were a US company and we had to move back to India, there were restructuring done. So restructuring that was done on two fronts. One was on the tax that we paid. I think that's why we have shown loss in the previous year because of the taxes 2024. And the second was on the ESOPs because promoters cannot have ESOPs in India. So the restructuring done towards those two things are the restructuring for the last year. This year are all like no one-offs and very operating data. So the better way, what we tell people, and also we also look for our own progress, is the revenue top line and the EBITDA.
Fine, but to the question of the management incentives, this 160 crores, is this something that comes back at any point?
No, this was done last year. This is not this. Okay. No, nothing. There's nothing of that sort in future. Yeah.
Okay.
Even present, there's nothing. Yeah.
Okay. And it will not come in the future. Okay, I want to just talk a bit about the margins that you've clocked, and margins have seen a healthy growth. Are these sustainable? We're looking at an average of a 59% margin as the new normal for Grow.
So far, yeah, I mean, it's this quarter we've seen that, but see, overall, we operate like a tech company, right? And there are costs are very, almost every cost that we have, 90% of it is a fixed cost. Say cost to grow, cost to serve, cost to operate. All those three things are pretty much fixed. Almost 10 to 12% is a variable cost. So whenever we'll see the growth, which will keep on happening because of the new customers coming in and the new products we launch, the revenue goes up and the cost doesn't go up. So the margin as a tech company, it will always keep on improving.
Okay. Harsh, good morning. Hiral this side. I was just looking at your active clients. We've seen a decline this time around in the second quarter. What has led to the decline? Are you seeing a higher churn, number one? Or is it just, dormant account removals that are happening? And the other part of the question is, what is the trajectory looking like?
Sure. So the drop in active that you see is, I think, one of the exchanges data. It's not the gross active users data, which we put it out in the quarterly, also in the MIS, the data that we share. We've been growing from an active users point of view, quarter on quarter and continuously. And what we focus on from an active, like the data that is published out there, is from a market share point of view. Because the activity that the numbers on the exchanges data is more of a lag data. It's a 1 year active user. The way we see is a 1 quarter active users is what we publish. So there's not much concern I would have there, because we keep on acquiring new customers and the growth is.
Okay, I think we seem to have lost that line.
Yeah.
Okay, we're trying to get Harsh back. Meanwhile, look at the stock price, up about 4%. I mean, the fact is that it's been, this is a rare combination where you have a good listing and then a good set of numbers to bump it up. A few of the things that are important to understand, and I hope we get Harsh back on that line fairly quickly, is one of them is what the November market share outlook looks like. They're looking at, commodities increasing a part of their volumes as well. Hey, Harsh, can you hear us? Harsh, can you hear us? Oh, we seem to be having a bad line this morning.
I hear you now.
Okay, there you are. All right, no, so I just wanted to ask about, you mentioned market share as a metric. I just wanted to ask about what do you see as the November market share so far?
Oh, November is... well to know, because market share depends on the rest of the market. We don't have data of rest of the market, right?
No, but I'm sure you track your market share very closely. So your market share guidance continues to be...
Not really market share. Tamna, we track how we are doing, and that's not really, input metrics are the ones, how many customers coming in, what activity they're doing. Everything else is an output metrics.
Okay. Harsh, a question I have with you is in terms of the credit business that you're scaling up as well, in terms of a margin trading facility and the loan against security. One, what is the asset quality performance of this book? And what is the run rate target for the net funded book if you have to look at FY26 as a whole?
So our focus is on MTF more than anything else from a lending, but it's not really, it's a kind of capital market product only. And we have been growing. I think the way we look at different products is that we build the product experience on our platform, and then it's left to the adoption of the people who find it relevant for them. So MTF also, the penetration, like the adoption amongst the users today is very small, less than 1%. And even MTF as a book share across the country, like market share, what we speak, is also 1 or 2% only, not significant. So we see that significant growth should come, but when it should come, it's very difficult to say, because it also depends on the market conditions. But overall, we see a long-term MTF will continue growing up from here.
And what about wealth management? I know it's only 3% of your revenues, but the kind of acquisition cost that you've paid for FISDIM, the key milestones when you're looking at integration and the cross-selling that you're looking at when it comes to grows affluent user base, what will that look like if I have to look at FY27?
Yeah, so see, again, we don't look at it like a cross-sell. We look at it like if we can make the products which were not available, say for example, portfolio management services, alternate investment products, even advisory, these were not available on Grow for the Grow customers. And significant part of the customers are actually converting into affluent where they have these kind of products needs. So with an acquisition, we get a very, they've spent a lot of time in building the supply, understanding the product, even researching, and also a way to service these HNI customers. So the marrying two things, like there is a need and demand already on the Grow customers, and now we have a supply and a servicing also. So we'll be able to offer these customers. And it's just a beginning, like, this quarter only we consolidate. There's still a lot of work to be done, but we are progressing good there.
Harsh, just in terms of wealth management, and this is something that has been focused on in the conference call as well, what is the outlook and the plan for wealth management? Is there also going to be a further outlay for customer acquisition, more spends there?
So in the initial phase, more than acquisition, we are looking at servicing and offering our own customers more products. So each product, wealth management, when we say, it's a compound word, but actually when you look at from a customer's lens point of view, it's multiple products. Like if they want an advisory on their investments, or they want portfolio management services, or they want alternate investment, whether it's a private equity, private debt, or even AIFs, right? So each product, offering those products on our platform to these customers is our focus on building the wealth business.
Okay, and another thing that you mentioned, so just one follow-up on the wealth business and then I'll add one on commodities. What is the growth rate of the wealth business that you see going forward? And you also mentioned on your conference call that commodities, you're seeing an uptick there. What is the outlook on the commodity side of the business and more interest coming in on commodities?
Sure. So on the wealth side, it's difficult to put a rate because we've not yet offered to our customers. The integration is still going on. We just finished our acquisition in October 1st. But we are seeing a healthy growth, almost 80-85% growth in the affluent category of our users. And that growth is almost more than twice the growth of the retail customers on our platform. So we're seeing a healthy demand coming in. Now, once the integration is done and the supply is done, then we will be able to share more growth scale-up plan with the wealth products and wealth offerings. On the commodity, yes, we launched commodity pretty much this quarter itself, Q2, right? So we're seeing some good adoption there. Now we'll see how it goes for the next couple of quarters. We're still in the journey of building more products, more features around adoption of the commodity. We'll still have to, it's too early for me to say how much adoption and what growth we'll get, but we're seeing good numbers. I think this quarter we've already published some. And the next following quarters, we'll also keep on telling the numbers for the commodity separately.
Okay. Harsh, the derivative percentage has come off from the earlier numbers as well. And you did mention that it's the growth in other segments that you're seeing will probably compensate for it. But is it right to say that the cash segment, which is growing faster, will compensate for the loss in the derivative segment? And how, at what level are you seeing derivative segment as a contribution of your revenues, say by the end of FY26?
Yeah, so see, in absolute, every part of the product, should keep on growing because the adoption and the new users keep on growing on our platform. And in general, in capital market in India, if the penetration keeps on going, then we'll see healthy growth happening on each of these products. But as we launch new products, it obviously diversifies the existing product far more. Say MTF now, it's a small part, but when it scales up, it also contributes to the cash side of the business and MTF itself as a book business. So that will start contributing healthy portion of the total. And even the commodities will start taking some portion of the total. So each one of these will make derivatives look smaller as a percentage of total. And that's a natural, when we started, we were only mutual fund platform, 100% was mutual fund. Then we launched cash and we had 60% cash today. And then we launched derivative, we had some portion. So it will keep on diversifying across the different products.
Okay. Thank you so much, Harsh, for coming in and speaking to us and answering all of our questions on this quarter. We wish you the best of luck and hope to chat with you next quarter as well.
Thank you so much, Tana.
Yeah,
Thanks.
Yeah. So that was Harsh Jain, co-founder and COO of Grow. I mean, the stock has had a dream run, about 4% up this morning in trade as well. But I just want to pull up what has been doing since its IPO. So very few companies get this kind of a great listing and then a run up which continues. So it did have a bit of a dive. Some profit booking did come in there because at one point it was double the listing, nearly double the listing price, but 57% up from the issue price since then, and since listing as well has managed to keep up that momentum. All right, big exclusive. The next story that we're talking about, and Anushi is joining us. I think this is a company which has, Neeraj, pivoted from a real estate play to the only proxy for AI one of the few proxies for AI in India.
Yeah, I mean, and we'll get in Anushi to talk about this, but just a brief, it's interesting, Tamanna, that I introduced the conversation in the same fashion. That this is a one in the list of real estate companies that are present. how many companies do you know that in the midst of a real estate upcycle have transition from being a real estate company to a data center company in that sense? Okay, but before we get that conversation going, it delivered a strong quarter, sharpened focus on the ambitious data center plans and a lot of MOUs as well, more significantly with the Andhra Pradesh government. Let's get in Anushi to set up the details with us. Anushi.
Right. So for Anant Raj, the main focal point continues to remain the data center business, and that's where the key growth lies. So if you just look at what's happened in the quarter in terms of where the data center business is concerned, current capacity stands at about 28 megawatts, and this is with 22 megawatts being operational by the mid-quarter. Majority of the revenue from this would flow through from the fourth quarter onwards, but it's the plan ahead which is interesting. By FY32, they expect this to increase to about 307 megawatts. So from 28 megawatt, we are looking at almost a 10x jump from this particular number itself. And in fact, they are projecting about 1,200 crores by FY27 itself, and 9,000 crore is the kind of estimation that is there by FY32. Once all of these additional capacities flow through, in the recent outings also, the company has signed a MOU with Andhra Pradesh government, and this is for investment of around 4,500 crore for a development of data center cum IT park over there, which would span in a period of around 5 years that we're looking at. So it's a significant move for Anant Raj as well. Taking a quick check at the second quarter numbers, revenue was up 23%, margins at 26%. This was supported by data centers, margins coming at 75% as well, and net profits saw about a 31% growth. So strong quarter. Along with that, what's interesting now is how the pace of launches increases in terms of the second half for the real estate business as well. But this is the overall perspective that's there for Anant Raj for now.
Okay, Anushi, thanks so much for that. Well, spoke to Amit Sareen, Managing Director Anant Raj, about a lot of these topics, and let's cut into a small slice of that conversation. Now, as we look at Anant Raj now, and as we look at the near term, how do you foresee the near term is placed before I come to the longer term picture? Because the space, I mean, a lot of people are saying that typically a real estate cycle would last 8 years. We are in the 5th year. Are we kind of topping out, etc., etc.? How do you respond to that?
See, Neeraj, right now the cycle is pretty strong. Of course, this is sometimes the cycle is 8 years, sometimes it is 10 years, sometimes even 6 years. So we cannot just put a number to these kind of things. Anant Raj has been there since 1969, so this is our 56th year. We've seen good cycles, we've seen bad cycles. This is a cyclical business. But as of now, there is strong demand. And one good thing about the real estate business right now is that there is a lot of end user demand. So we feel that this is going to be stable and this is going to be there for a while.
Okay. Now, tell us a bit about, before I come to your numbers and the outlook ahead, just tell us a bit about this interesting MOU that you signed with the government of Andhra Pradesh, right? A data center cum IT park. And it's a large commitment as well over a period of 5 years. Tell us a bit about it.
See, Neeraj, this is, I'll just take you a little back. We started data center business in 2019. And that is when, when our Honorable Prime Minister started talking about data localization and all, and we took it very seriously. And we felt that this is something very good for the country, and this is eventually going to happen. And it is now happening. So Anant Raj started working in data center space in 2019. Initially, we started as a co-location player, which means we were going up to the rack. We were providing all infrastructure up to the rack. And we delivered our product about 2.5 years back. The product was very well appreciated in the market. In fact, we very proudly say this: it is one of the best in the world right now, if I may say so. And it was very well appreciated. Then we started growing. And once we delivered this product, we got a good demand for cloud also. But cloud is then hardcore technology, and technology is something which is fairly new to us. So we got technical partners, and we've partnered. And we are using the machines of the best in the world. And then we delivered in October last year, in October 24, we delivered Ashok Cloud. And we are a sovereign cloud of the country. So that was again very well appreciated. So now Anant Raj does both works. We do co-location, which we are very good at. And then we started cloud, which has also been very well accepted in the market. So while this was going on, today at Anant Raj, as of now, we are working on 3 before signing the Andhra Pradesh data center, we are working on 3 data centers. All 3 are in the state of Haryana. Haryana, we are a local company. We belong to Haryana. So we are very, very proud of the fact. So we were working in Haryana, but Andhra Pradesh is going to be a big feather in our cap, because with Andhra Pradesh coming in, we will also be able to provide a disaster recovery. As you know, in data centers, there are 2 and 3 categories. Data center, which is the primary data center, secondary data center, and disaster recovery. So with Andhra, we will have this also. So with Haryana, we are going to be 307 megawatts, for which we already have the land, the permissions, the basic building structures is already there. It is now getting unlocked. As of now, we are doing 28. We take this to 63 next year, and then so on. And by 2032, within Haryana, we'll be 307. And then simultaneously, from next year, we will start work at the Andhra data center, which is the agreement which we have signed with the government is for 50 megawatts of data center and 7.5 lakh square feet of IT park. As you know, IT park and data centers almost will go together in the long run. So this is going to be a big a coordinated kind of a thing. And plus, it helps Anantraj creates its own DR also.
Okay. So just to get this clarification, I believe the targets for next year were 68 to 70 megawatts. I'm presuming that those stay. But does Andhra Pradesh flip upwards your targets for, let's say, FY28 and 29 of data center capacity?
Andhra Pradesh, see, for first, by next year, the target is 63 megawatts, which we are fully on track.
By next year, you mean FY20?
FY26, 27, sir.
Okay, FY27.
We are in 25, 26. 26, 27, we get to 63. We are at 28 right now.
Okay.
We get to 63. That's all sorted, sir. For that, we have everything. We don't need anything. So we are sorted on that. And now Andhra Pradesh, see, we should be able to, right now the MOU has come in place. The things are moving in very fast. And by this financial year, by the end of this financial year, so by March 26, we would zero in on the land. The land will be with us, thanks to the government. And then we start our work. So before Andhra Pradesh starts kicking into the numbers of the actual data center, it's going to be about 3 years.
Okay, I hear you. So, please tell me, I heard you say that for the near term, you don't need any kind of monies. We've also done a QIP as well. For all of these plans, would you believe cash flows plus the recently raised money is sufficient? Or do you foresee the need to raise capital, equity capital, I mean, for executing these, and I'm sure a few other things that are coming your way?
Neeraj, we are completely sorted. We have everything now.
Okay.
We don't need any money. The QIP has been done, and we are now sorted. Anantraj, as you know, even prior to the QIP, Anantraj became a zero debt company, and even prior to the QIP, we've been a zero debt company for the past 5 quarters. In a row. So we sorted all that out. Touchwood, the real estate business has been contributing very well to the cash flows. Even today, as we speak to you, as of now, all our focus is in Haryana. But of course, we have a huge land bank in Delhi as well. And Delhi, we have not even started working as of now. So we'll come back to Delhi maybe 3 or 4 years from now. But for the next 4 years, we are completely sorted. We are today unlocking almost 13 million square feet of space, for which we have everything, sir. So in Haryana, and if even today we take an average selling rate of about, although the rate is much higher, but even if we take an average selling rate of 18 to 19,000 per square feet, we are actually selling at almost 23 to 24. So we are completely sorted. We don't need any money now, sir. No debt, no equity, sir.
Mr. Sareen, therefore, I request you to try and help me just from a perspective of making people understand this better. If I bucket Anantraj into 2 businesses broadly, 5 years out, which is real estate and data centers, broadly 2 buckets, and there might be some cross-pollination, but that's separate. But if I bucket it into 2 buckets, what percentages would each of these businesses have to the overall revenues? And what margins, therefore, do you foresee, let's say in FY30, if you will, because I'm sure you're thinking that far out. And what size do you foresee at that time?
Neeraj, FY30, we have already given a press statement to this effect. FY32, in fact, if I may just take you 2 years ahead.
Sure.
FY32, we are going to have data center income, both a combination of colocation and cloud put together, of approximately 9,000 crores. This is going to be annuity income that the company will generate, and this is with 307 megawatts only. Once we unlock the Andhra data center, this number will further go up. So we are fully on track, sir. Whatever commitments or targets we had set for ourselves, we have met. We had to get to 28. We have done it. We are going to get to 63 next year, and then so on. So by 2032, this 307 of megawatt with 75-25 mix, 75% co-location, 25% cloud will be up and running, and this is going to generate 9,000. So vis-a-vis real estate, we are again sorted. Like we just told you in the beginning, our as of now, what we are working on is 13 million square feet, for which we have the land, we have all the basic permissions, and it is now under the execution stage. This is going to be unlocked in the next 4 to 5 years. So here, we cannot give future numbers like this, but you can very well calculate, even if we take a conservative number of 18,000 per square feet, we are still sorted, sir.
All right, that's Anant Raj and Tamanna. Just quick thing, and the stock might be up today, of course, but the quick thing is that from a 2,060 crores was the FY25 revenue. He's talking about an annuity income of 9,000 crores by FY32, annuity from the data center business alone.
Yeah, so that's several multiples of a jump. So, you know, this is maybe right time, right place, or vision, or whatever you say, but this happens to be a company at the right time and the right place, maybe guided by their vision one way or the other. Okay, so that was an exclusive interview with Anant Raj, a company which has been in the eye, but you haven't really heard from the management, and that's what we try to do here at NDTV Profit. The other story that we're talking about is Ather Energy. They have quietly hit a major milestone, crossing 5 lakh cumulative sales backed by steady growth, rising market share, and a sharply improved financial picture this fiscal. The company is now the third in the ranking of EV scooter players and has strengthened margins. In fact, Puneet joining in for more.
Well, thank you for that. It's definitely been a stellar performance over the last few years. 5 lakh sales mark, as you rightly said, but 98% of all those sales have just come in the last 4 years. It reflects the strength that Ather has shown in this particular time frame. It's also got listed in this year, so it has that additional, pivot also now as a listed company to show that performance. So when you look at the last 3 to 4 years in terms of sales, they were just at 23,000 odd units in FY22, which has now grown by almost 6.5 to 7 times to almost 1.4 lakh units that they've sold in, for this for FY26 year to date. So they've already crossed the milestone what they did in the whole of last year. So the next few months will be very interesting for Ather at this point of time. When you also look at the market share, and it's been a steady gain since April, they were the number 4 player at that particular point of time with intense competition with Ola at 14%. But in October, they hit a 20% market share mark. 1 in 5 scooters sold in India in the month of October was that of an Ather, and now firmly in the top 3 positions. So when you look at the market share over the last few months, Ather has gone from being the number 4 player at roughly about 14% market share to almost 20% in the month of October, and now it's a 3-way between Bajaj, TVS, as well as someone like an Ather, while Hero has also been increasing its share. Ola is definitely a laggard in this particular point of time. So it gives you a competitive positioning of where the EV two-wheeler market lies right now. When you also look at the financials, that has also improved materially over the last 3 to 4 years. They were at EBITDA margins of almost 37% on the negative side. That has improved to negative 17% in the first half of FY26, and that is giving the confidence to a lot of brokerages as well. 5 of them cover the likes of Nomura, MK amongst others, and all 5 have a buy call on it. We'll just get to that in a bit, but when you look at the overall market share as well, while overall they are at roughly about 17% in the market share, the company actually gives out each region that they do well in. And surprisingly, they are at almost 25% in South India, something that TVS is actually holding very strongly. So middle and rest of India, they are opening a lot of new stores. So you will see that incremental market share go up in those states. But it's a very interesting stat that the company puts on. But what's ahead though? This is all in the past. They have mentioned 2 new platforms. The EL will be for the scooters, and 3 new models expected to launch in the next 18 to 24 months on this platform. And the Zenith which is an EV motorcycle platform as well, will be a key one. Brokerages, as I rightly said, 5 of them currently have a buy call on this, and all 5 expecting a return potential of 15 to 18%. So that's the lowdown on Ather Energy. It's stock you need to have on your radar going forward.
Okay, thank you for that. So Ather charging ahead. You have to see what's happening to the others and in the space, and is it at their cost? But it's been a bit of a seesaw of a November. Are we going to see some cheer coming into December? Markets are stepping into December with history on their side. There's traditionally been positive returns. So Amit Sarkar joining in for whether there's going to be a Santa rally or is the Grinch going to come out on top, Samit?
Data suggests that there could be a Santa rally in the month of December, and that could be the 4th consecutive month of positive gains coming in for the benchmark. Now, what the last 10 years of December month is suggesting is that 6 out of the last 10 years we have managed to close in green. The average returns have been close to 1.6%. More than 7% move is something that we have seen twice in 2020 and 2023, and more than negative 3% move is something that we have seen just once in 2022. When it comes to the Nifty Mid-Cap Index, that has managed to close in green 7 times, average gains of 2.1%, and the Mid-Cap Index has outperformed the benchmark nearly 6 out of the last 10 years. And it has closed in red just 3 times in 2016, 2019, and in 2022. When it comes to the Nifty Small Cap Index, that has managed to close in green 8 times, average gains have been 3%. Positive returns of over 5% is something that we have seen thrice, that is in 2020, 2021 and 2023, and the 2 times when the index closed in negative was in 2016 and 2022. And given the current setup, it seems like the mid cap and the small cap could outperform the benchmark in December. Now if you look at the sectoral indices, there it's the Nifty IT index that has managed to close in green the most number of times, 8 out of the last 10 years, while the average gains have been close to 3.7%. For the Nifty Metal Index, 7 out of 10 times it has managed to close in green, average gains of 4.3%. When it comes to Nifty Real Estate and FMCG, both these indices have closed in green 6 out of the last 10 years. Average gains have been anywhere between 1.4 to 3.9%. For Energy and Auto Index, again 6 out of 10 times it has managed to close in green, average gains of close to 1.2%, and followed by Nifty Pharma Index and Nifty Bank Index. 6 out of the 10 times Nifty Pharma has managed to close in green, while Nifty Bank has managed to close in green 5 out of 10 times, and the average gains have been 0.8%. So no sectoral indices have on an average closed in red in the month of December. Now comes the most interesting part about the stocks. Now these are the stocks that have managed to close in green more than 7 times in the month of December, and if you look at the average gains, it has been more than 5% in that standalone month. SAIL, 7 out of 10 times it has managed to close in green, average gains of 12%. Dixon, it has a listed presence of 8 years, so 7 out of 8 years it has managed to close in green in the month of December, and the average gains have been close to 10% for stocks like Titagar Rail and JSPL. These stocks have managed to close in green 8 to 9 times in the month of December, and the average gains have been close to 8 to 9%. For companies like Persistent and Adani Enterprises, these stocks have closed in green 7 out of the last 10 Decembers, and the average gains have been close to 7%. Now on the flip side, these are the stocks that have managed to close in red 7 out of the last 10 Decembers, and average returns have been more than negative 1%. Aditya Birla Capital, out of the 8 Decembers, it has managed to close in red 6 times. Average gains or average returns have been negative 1.6%. For ICICI Prudential Life, 7 out of 9 times it has closed in red, average returns of negative 1.5%. And finally, it's Grasim, which has closed in red 7 out of the last 10 Decembers, and average returns have been more than negative 1% on an average.
Okay, so let's hope for a dazzling December, if nothing else. Thank you so much, Somit, for that. We'll take a very short break, but don't go away, because this exciting Singapore interview that Alex has done will come up after the break. He's speaking with Samir Arora right in the den at Helios Capital in Singapore. Stay tuned.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product.
There are a lot of investment theses out there, but Samir Arora's Helios Capital believes that it's better to identify stocks that you should not invest in to find the portfolio that you should. I'm going to speak to him about which stocks he is actively avoiding and how he's constructing his portfolio right now. Let's go. Good to see you in your neighborhood.
Oh, no, very good. I like my neighborhood.
One of your neighborhoods. But so the introduction that I just gave was that your investment thesis and philosophy is about identifying stocks and ideas that you don't want to invest in.
Correct.
Right? So for those people that don't know about this, can you very quickly explain that? And then I want to get into a few aspects
By
of
the way, nobody has any other philosophy.
Right.
The whole world has only this philosophy. It's just that they express it differently because they want to show that, you know, what they buy with care and all that. But first they reject. So let me explain in simple terms. Mr. Buffett, suppose he said, but once in a while he's violated it, that I don't buy tech stocks. He does not say, I study tech stocks, I met the board, I met the management, I understood the prospects, and then I said, I don't want to buy it. He said, I don't like it, because in his mind, it has to be rejected out of hand.
Right.
So his highest conviction is not in what he bought, it is in saying that I don't like tech. Otherwise, you should say, I will study it, I study everything, and then I don't buy it. So even Indian, say, big mutual fund might say, I like value. We don't like loss-making companies. So you have first eliminated.
But
so I'm saying, sure. Actually everybody is like that. It's just that the way our business works.
You do it more actively.
No, you say what you do.
Right.
You don't just say what the world wants. What the world wants is, we buy 20 companies which are so good, they have long-term this thing. We met the promoter, we looked in his eye, we saw the depth of his passion. And my bet is that the promoter also does not know that he will succeed so much. Yeah. Therefore, according to us, it is easier to know what will do badly rather than to know what will do well in life. And ultimately it's a sorting or a screening process. So in that screening, if you can eliminate the bad, which is easier to do, you are left with the pool which is more this thing, instead of directly trying to find the best company and the best management.
So by doing that, by the way, you've got a lovely office and look at that view. But by doing that, you limit significant capital loss. You limit the mistakes that you make.
So the idea is that if there are, or not if there are say 500 companies in the index and the index return is X, let's say 14-15%, then broadly because of the way averaging works, some half the stocks are doing better than 14 and some half are doing worse than 14. And some 1/3 are doing much better than 14. And this is just, you can see in pure numbers for any market, and some 1/3 are doing very badly. So we say that it is very difficult to know ahead of time that which fellow will do well, because you will know it only with time. But it is easier to know what is, broadly speaking, a candidate for bottom 1/3. And if you can eliminate that, you can't totally eliminate, but if you can reduce that in the universe from being 1/3 to being 5%, 10%, that means if you buy 50 stocks, you will still get 2-3 very bad performers. But you should not get 30%, which is the market. No, 30% is the market average.
Sure. So but I do want to ask you about that. And the reason why I wanted to provide this context is I want your opinion on the IPO market as things stand right now. The companies that are coming in ultimately had to come in at some point. India is a growing economy, growing market, and more companies had to hit the market. But what do you think about the quality of the companies that are hitting the market currently when you put it through the lens that you use to evaluate your portfolio?
So in big picture sense, if I look at the mutual fund side, because we here don't even get as many anchor possibilities. So in this whole calendar year, they've taken 5 anchor positions so far out of whatever, maybe 60, 70, or maybe I don't know how many have gone. So you have to screen. But actually the guy who's ready to be IPO'd has already passed many tests. Because if all of these were, say, broadly private equity funded, there would have been 10x the number of companies that go public would have been funded. For example, food delivery must have been some 20 companies before, now 2 are left or 3. Or if you say, actually 2, I'm talking quick commerce, 3 maybe. If you talk about logistics companies, education companies, the fact that you've reached an IPO stage is broadly you have survived.
But doesn't it go against or have a cross against one of the metrics, which is valuation?
No, it's not. Because valuation can't be today's valuation.
You have to forward.
So first thing is, big picture, it should be obvious that whatever this guy is doing is very useful or different. It is not just... So we have to differentiate between an IPO which looks like a new age company, but is actually an old age company, but has a better shop or a better or all colors of all, or you've rolled up 20, you bought 20 unlisted guys and made it into...
What are some of those companies for you? And you've spoken a lot about these food delivery companies.
No, food delivery...
The platform companies.
There is a value which you can see. The value is they are protecting you from the pollution. Could be one value. They are saving you time. They are saving you parking. They are saving you road rage. They are making you use Netflix better, because otherwise you spend
more time.
Exactly. Now if some fellow says, I can do it myself, that means his time is not worth it.
He
should himself become maybe a delivery guy.
And he was not part of that market anyway.
There's enough market. No, I'm saying in all of these, not all of these, in the companies that you are buying, if it is a new age company, not all IPOs are new age, then it should be, this guy is doing something different. And so for example, we bought Physics Wala. Now Physics Wala, the annual tuition is 4,000 rupees. Annual.
But he's got scale.
That's what I'm saying. So 4,000, you can imagine even if nobody wants to go even once, but they'll say, no, but you see, Baiju, what happened? And that is what research you have to do. That, sab kuch ek nahi hai. As with that way, I can find some fund which did very badly, and you will say, mutual fund maybe we should not put, because that happened to... That is not the way of life.
What stocks, not stocks necessarily, but what ideas are you actively staying away from in 2025 November and heading into 2026 that you might have considered, say, last year? What has changed? Has anything changed?
So broadly, because we have these 8 factors on which we eliminate, usme 6 factors are more or less permanent.
Okay.
Because they are not related to pricing or valuation.
Can you enumerate them quickly?
So number one is if the sector we think is potential for disruption, or it could be industry competition or industry things, or it could be a theme which broadly we put infra type thing in that, where the government has a big role to play. You know, there are so many of these waste management companies which come and will come. Now, broadly we will never buy them because we know that all of them get municipal contracts, and we don't have to say on TV what happens in municipal contracts and what is the risk of, you know, trying to have continuous growth in these kind of things where government is part of the thing. So there are so many. Then the fourth one could be that we know, or somebody told us and we now believe that the history is bad or the accounting is bad. Now these things don't change every day. But what changes every day is, so if you're not bad on any of these, but you could be expensive or you could have very boring growth rate, like these days maybe in IT. So these things can change with time, either because the price changes or the
scenario changes.
So these things can change. But the first six broadly don't change for us.
So what has changed? Has anything changed?
No, so in those six nothing will change.
No, I'm saying
in these now you can feel, but we still we are not convinced that IT should be bought. But you have to always keep an eye on that, and we are otherwise shameless in going, and at least in my long short fund, from long to short or short to long in 25 minutes. Yeah, I can do. So broadly, but right now we are not thinking that has changed. Yes.
Okay. So I want to ask you how much risk you are apportioning to what could potentially happen in the US amidst this entire conversation of overvaluation in certain pockets. And not that it's related, but you see things drop very quickly. So for example, Bitcoin, the fact that it dropped in 6 weeks 30%, we've not seen a major crash in a long time. Does that worry you at all?
So the thing is, if you call things a crash, then it is worrying.
Sure.
But Bitcoin, I am not going to worry because Bitcoin in front of me went up whatever billion times, and I didn't have. I didn't affect my market.
Sure.
Otherwise, if it had gone up with Bitcoin, we could have said it'll go down with Bitcoin.
No, I'm saying about how quickly it can change.
So what I'm saying is, if the US does badly, but not crashes. That means suppose it is 0, -5, -10%, we all will be beneficiaries. But if it is falling 30%,
then we're going to get hit.
Then we are going to hit, because then we realized in 2008 that everything is connected at the end, because we are all in financial markets and everything is equity and all that. And then there are foreigners and all that. But otherwise, a normal underperformance or slightly bad, nobody cares, because when they were going up, we were not taken up along with them. So that is why we are viewed, although I don't like that label, as an anti-AI play.
I wanted to ask you about that.
It's like saying that suppose when you were graduating, when you were leaving school, and your classmates decided that we will give you a prize for the ugliest guy graduating and the prize is 50,000 rupees. Will you take that prize or no? It's a bad prize to have. Even if you're getting 50,000 rupees, that you say, yes, thank you very much for honoring me and giving me the whatever dumbest guy in the class.
Something to be proud about.
No, it's a big negative, but because right now the market is desperate, we say, okay, if we are anti-AI play, come for that reason.
But since we're talking about IT companies, there is a thesis or a theory that says that these are great cash generating businesses, very large businesses, but they're not doing too much in the way of cutting edge technology. They're not investing in.
So what is the P of, say, Power Grid or NTPC or guys growing at 8, 10%, 12%? That should be the P. Then you can generate cash.
Okay, so you're saying the multiples are not.
Then your valuations are. So now they say that these have reached. By the way, I don't oversay anything because I might change in 20 seconds. I'm just saying today. But we are not short. Okay, that much also I guess. But because we have a very low weight, it's like philosophically short, but not short. So. Either it has to go below average valuation. No, it is not enough to say that these guys are at 10-year average valuation, because if somebody is at 10-year average, there was a time when you were below average. So today we think it should be a below average valuation, not at average, because the situation is not average.
Interesting. Okay, so that's the argument basically. Okay, so let me.
Plus one more thing is there. Our portfolio is doing well. So if somebody's portfolio is not doing well, they get desperate to switch, because it's not that the money will come out of new source. That same $100 is invested somewhere. Now you're saying don't do this, do that. So that also there's less.
Let me ask you then about what you have, and look, I've looked at the Helios Flexi Cap fund as well, and you have a significant allocation towards financials and towards some capital market plays as well. The question on financials is, how do you see, or where do you see the opportunities in that pocket? Do you see it in the large banks? Why I'm asking this is, we've not seen the implications of GST 2.0 play out completely. Q2 for a lot of people was better than expected. There was some disruption, but a lot of companies are thinking of adding capex, and who funds that? Does it get funded through the bond market, or does it get funded through equity, or does it get funded through the banks?
So I don't think that funding of corporates is the big story.
It's the retail side.
It's the retail side, and in also just the fact that because of interest rate cut, the margins got reduced, and therefore the profit bottom line became 9-10% instead of 14-15% that they would normally have. So that will also, because it takes time to pass through the interest rate cut on the deposit side, so that is happening. And in general, if you also look at it from the market point of view, the fact that foreigners were big sellers, and foreigners mostly own these large cap names, and in these large cap there are three groups you can have. You can have IT, financials, or consumer. So this is a group that the FIIs own. In that, I don't think they are also overly interested in IT. And nobody's broadly interested in the big consumer anymore because of very low growth rates. So even from that point of view, financials, and so financials will, and financials have a thumb rule, at least these banks and all, they'll grow 1.5 times GDP. In nominal terms. So if you get 9-10% GDP, 14-15% coming back is very easy and very normal.
And so this is the steady state of your portfolio.
This is the high confidence in reasonable return portfolio. And this, in aggregate, this year the returns can't be very high because the earnings are not very high for corporate.
But you like the bigger banks, not the smaller banks?
We like the bigger banks because the smaller banks have turned out to be absolute disasters. We started with so many private banks, and every guy who's fallen by the side, even with foreign investment and private equity investment, has not really been able to, because if you found something wrong in lending, in practices, in some corporate governance, it cannot change by changing one guy.
But having said that, your credit growth has now shifted to double digits, which is great. But a lot of people are saying that that is fueled by gold loans. And that's the pocket that you're talking about. A lot of the smaller banks have a significant portion.
But you know, I'm talking about the guys who had this sort of new, like Yes Bank and all. It has taken three years. Imagine that even in the large listed banks, I mean large banks, private sector banks, even a change of a CEO takes 2 years, and your 2 years are gone. It happened in HDFC, then it happened in Kotak. That it's not that the previous guy who went and the new guy who went, there was such a big, but here the previous, not I'm talking about some gold ones, I don't know which one you're talking, but in general, where these new money has come in, it will take them 3 years to figure out who has to be trusted, who has to be fired from within the firm for bringing them to a situation, all these guys. So I'm talking in that context. The big picture is, and also this, we are calling it high confidence reasonable return. This we cannot put in the new discovery. That also once in a while we may have a bank on the other side. Currently, we don't have a small bank which we would call.
What is in your discovery portfolio?
In discovery portfolio, in recent, actually, this year was very good. 4-5 of them worked from car trade to Ether, and then
these are IPOs.
190. No, we have we have bought only Ether in the IPO as anchor. Others we have bought in the market. So another one is normally has been a good formula for us has been IPO which has fallen a lot. Okay, like it happened in Zomato, or in the case of 197, which Paytm, or also car trade. Car trade fell from 1600 to some 650.
Speaking of, and sorry to cut you off, but speaking of IPOs that fall after, I'm just wondering whether you think that posting a narrow profit or eking out a profit just before IPO is not as good as posting a bit of a loss ahead of IPO if you can control it.
So I think it just makes I don't know what others, but makes the social media totally hyped. If there's a small profit, the small profit means say 5 paisa EPS. Our guys will divide 100 rupees by 0.05 and say, oh, kitna hai 5,000, kitna IPO ho gaya ji, P ho gaya, P ho. Or they will say this P is 1,500 and my something else is 8P. So aise nahi chalta hai kaam. So you have to see a little bit ahead of time, maybe 2 years only. But one more angle is that if it is a new age company demanding or asking for new age wale multiples and making a loss, then you better not tell us that your growth will be 15%.
Yeah. So
which is what happened to one of these large companies that has just happened, just had an IPO. Big valuation, but we will grow 15 to 20%. फिर कोई मतलब नहीं है. Then you have to grow 40%, 50% or 100% for 2-3 years. तब मजा आएगा.
And with the trajectory of when you're going to turn profitable.
So that's why I think that we have this game about competition in quick commerce and all. The number 3 guy cannot go public if the number and number 2 are not rocking in the stock market. If these guys don't understand, the market will make them understand that if the prices of the first 2 stocks are down 20%, the third guy has to go to 0 because nobody will let him go public. Correct. So what happens is when a new entrant comes, the market thinks it's competition. We think it is sanity because the publicly listed guy or about to be publicly listed guy has to say, this is my path to profitability. I used to make 100 loss. Now I made it 20 loss. And in 3 quarters, 8 quarters, I'll make 100 profit. You have to say it.
You have
as soon as you say it.
But there's a danger there.
The listed guy has to go up because that means the fight is over.
But having said that, even the projections that companies make and the conversations that they have immediately after quarterly results. You've also written about this on social media. You've spoken about the first quarter results.
So, as a thumb rule, we give benefit of doubt to first quarter. कि first quarter तो अच्छा होगा. बेशरम आदमी अभी IPO करने आया है. But some even disappoint there. But still, I think the thumb rule, if you're just and everything in life is a thumb rule. इसकी यार ये पहले क्वार्टर में धोखा नहीं देगा. But some of them
do. Some of them do.
Some of them, but in this case, one of the cases, there was some logic. Okay, we had this GST issue and this and that. So, chalo, theek hai. But generally, you don't expect a guy to disappoint in this first or second quarter. That would be.
There are a lot of investment theses out there, but Sameer Arora's Helios Capital believes that it's better to identify stocks that you should not invest in to find the portfolio that you should.
We don't like loss-making companies. So you have first eliminated.
What ideas are you actively staying away from in 2025 November?
When a new entrant comes, the market thinks it's competition. We think it is sanity. Fact that you reached an IPO stage is broadly you have survived. As a thumb rule, we give benefit of doubt to first quarter. कि first quarter तो अच्छा होगा.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका काम किया आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think we are trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you are doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
The NDTV Profit has come a long way since it was relaunched. I hope you're watching NDTV Profit a lot. Absolutely, you can come to my office and you can see. Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product, and therefore it's good that you're watching, and I hope you can see some churn and improvement as well. No, absolutely. I think the NDTV Profit has come a long way since it was relaunched, and so I'm pretty pleased that what we require for the investor is the correct advice, correct information, and in a right way.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो
welcome. You're watching NDTV Profit and this is Ask Profit. I am Mahima Vachajani and with me is Soumit Sarkar. And before we go on and answer all your queries for the day, let's take a quick look as to how the markets are doing. The Nifty has just crossed the 26,000 levels a few minutes back, hovering around just 12 points above that 26,000 levels, up about 0.2%. The Bank Nifty also in the green today, up by about 0.3%, hovering around the 59,000 levels, just about 18 points, 25 odd points above that 59,000 level. Let's try to pull up the Nifty 50 heat map and see as to what counters are doing well in trade today. Topping that chart is something like a Hindalco, which is up 2%. BEL also doing fairly well on the back of the news update coming in from the Ministry of Defence with regards to their tie-up with Safran. You also have counters like Dr. Reddy's, which is up 1.4%. Counters like SBI also doing well, Reliance also doing well. But counters that are seeing pressure includes counters like SBI Life, which is seeing the heat right now. You have IT names also down. You have Infosys, Wipro, HCL Tech all down by about 0.8 to 0.7 odd percent. You also have Trent, which is down by about 0.9 odd percent. Let's also try to pull up the sectoral heat map to see as to how sectors are doing right now. There you go. There's Nifty Realty, which is topping that chart. So reversal there, 1.5% of an uptick. Nifty Metal up 1% as well. PSU Banks also up by 0.8 odd percent. Defense also seeing an uptick of around 0.8 odd percent, but Nifty IT under pressure down by about 0.6 odd percent, followed by Nifty Media and Nifty FMCG almost flat. Let's try to pull up the advanced decline ratio because that will give us a picture as to how the broader markets are doing. There you go. It's, the gap between the advances versus the declines has widened in the favors of the bulls, of course, today. You have 1,500 odd advances versus that of 800 odd declines. So, almost in that ratio of 2:1 is what we are seeing. Let's try to pull up the BSE 500 quickly before I go on to the guests. You have counters which are doing fairly well, something like an Orient Electric, Nuvoco Vista, HEG, Restaurant Brands, all up by about 5 to 10% each. But on the flip side, you have something like an AWL Agribusiness, Honeywell Auto, ITI, as well as ACC, down by about 3 to 4% each. ITI, of course, seeing profit booking today. But with that, let's also welcome in our guest for the day. We are joined by Swati Hodkar, who's the AVP Technical Research at Nirmal Bang, joining us now. And we're also joined by Astha Jain of M Securities now. I'll take up the first question with this, which is from Mohit, who's writing us from Ludhiana. He's got 200 odd shares of Container Corp at the levels of 512 and wants to know as to what should be the outlook for this counter from a slightly longer term perspective? Swati, I'll come to you on this one. What are the charts indicating for Container Corp?
First of all, good morning, all of you. As of now, the view is little bit cautious because from the last few trading sessions, we are continuously hitting a selling pressure in this particular stock. But the interesting point that it is approaching the oversold zone, and I believe that the stock is likely to find out a very good support nearby in the range of 480 to 500 levels, and then we can see some sort of turnaround or the trend reversal in this particular stock. I believe since some buying price is at the current market price itself, I would suggest to hold on the long positions by keeping a tight stop loss of 490 rupees on a downside, and I believe that once the stock manages to give the breakout of a 520 levels, then we are likely to witness more positive momentum into this particular stock, which will take the stock towards to 540 to 550 levels. So it's a hold from my end with placing the strict stop loss for 490 rupees on a downside.
The next query is coming in from Bangalore. Sanjay is asking that he has around 250 shares of UCO Bank bought at a price of 30 rupees. He wants to know what should he do from short-term period. Should he continue to hold or should he sell?
Definitely, looking towards the current momentum price, I believe the stock is under the consolidation phase. It just got stuck within the range of a 29 to 35 levels consolidation phase. We are witnessing a breakout on the either side will decide the clear trend of the market. But looking towards the current price momentum, I believe we are likely to witness some sort of a positive move from the current market price, which will take a stock towards the 34 to 35 levels. So we'll suggest to hold on at the current market price, take a 1 rupees risk from the current levels, place a 29 rupees as a stop loss, and any positive move towards 33 to 34 levels, you can book your profits.
Okay, all right. So that's with regards to where UCO Bank is concerned. The next one is from Savio, who's saying that he's a long-term investor and has invested in Aster DM. Wants to know if the fundamentals are good enough to make an entry right now, considering they expand going forward as well. Asta, very good morning to you. What's the view like for something like an Aster DM?
Okay, good morning to everyone out there. Talking about Aster DM, the view is positive. What we are seeing that the industry as a whole is seeing a very strong momentum. That is, I'm talking about the hospital sector. So what we are seeing, in fact, some news flows are now coming in the sector of the expansions, like recently what we have heard about the Apollo Hospital. So I think this industry as a whole, they are in a very good shape right now. And if I talk about this particular counter, then what we believe that their average occupancy per van is definitely going to recover, and that we have seen in the financials as well in the quarter gone by. So I'm positive about this counter, and I would recommend a hold on this counter for the price target of around 700 to 720.
So that's with regards to where Aster DM is concerned. We've got our next caller. Venkat is calling us from Bengaluru. Venkat, hi. A very good morning to you. How can we help you today?
And yes, Mahima, very good morning to you. My name is Venkat Krishnan. And see, I have got a query regarding Tata Motors passenger vehicle. I'm holding 500 stock as of today. And I have offloaded some material and some stocks, and booked the profit also.
Okay.
The average cost of it is coming to 492.62.
Okay.
Okay. And this on the passenger vehicle side. And I would like to know how long it will take to bounce back on this, the price. Should I average it out now or no? I don't mind holding it for some more time. That's about maybe 3 to 5 years.
Okay, Venkat, got your
And
question.
what is the outlook on this? I would like to know.
Sure. Okay, Venkat, got your question. I'll take this up with Asta. Asta, I'm sure a lot of Tata Motors investors have this question. What's the view like?
So if we talk about the company specific, what we have known that their financial performance was not very strong in the quarter gone by. In fact, if I talk about particularly JLR, then they have reported operating loss. So the kind of financial performance they have posted, and in fact, what is more disappointing is that in fact they have cut their EBITDA guidance as well. If we see, so there is a cut in the guidance. There is the financial performance which is not so strong in the quarter gone by. But the only soothing factor at this point of a time is the kind of government efforts which are going on, like GST cut. So I think that is a major positive for this company. And secondly, in fact, the new product launches, because every automobile company is always, gain the traction if they launch new products. So I think that is what right now are two soothing factors for this company. So in that sense, I would recommend a hold, but it may see some more downside, provided the fact that the financial performance was not up to the mark and the guidance was also, they have cut the guidance, so it was also on the lower side. But in the long term, I think this counter can face some challenges in the near term, but in the long term, I think this counter can hold again, upside momentum. So stay invested in this counter.
Swati, the next query is for you. It's from James from Hyderabad. He has around 100 shares of Siemens Energy bought at a price of 3,170. He wants to know the short-term 2 months target for this counter. It's down around 2.5% in trade today post reporting a weak set of numbers.
I believe for a longer term horizon, definitely the stock looks very positive at the current market price. 3,000 acting as a very crucial support levels. But if you look for the very short term period of a time from trading perspective, I believe 3140 is the immediate swing supports levels. By keeping that as stop loss, you can carry your long positions. Any momentum over 3,200 levels on the closing basis will continue this positive move towards at least 3,300 levels. So you can hold on the long position by keeping a strict stop loss of 3,140 for a target of 3,250 to 3,300 levels.
Next is a caller query coming in from Sanjay from Gujarat. Sanjay, you might go ahead and ask your query.
Yeah, I am Sanjay Pandya from Gujarat.
Right, what's your query?
Yeah, I have Glenmark Pharma at the rate of 535, holding from 21.
Right.
What can I do now? That's coming. That's Glenmark Pharma coming for 400 to 900 range, and then coming below. What should I do? I have to book the profit or hold on?
Right. Astha, any view on Glenmark Pharma?
So view is positive, although what we have seen that this quarter, that is the quarter gone by, was not so encouraging, and that may be due to some sort of GST shock which this company has faced. But I think going in the long term, I find this company may be able to post strong set of numbers again, because what we have seen is that the management commentary was on the positive side, and hence my idea here is to book partial profit, but remain invested in the partial quantity for the price target of 2,100 or more.
Right. And Asa, especially because he's sitting on profits of over 6 lakh rupees, it makes sense for him to book partial profits. But moving on, the next one is from Balwant Modi, who's writing us from Rajkot. He wants to know the right entry level for CG Power. Swati, I'll come to you on this one. What are the charts indicating? Is this the right time?
Yeah, at the current markets, I will not suggest to take a fresh long position, because from the last 2 weeks, we are continuously witnessing a selling pressure from almost 750 to now. It's currently approaching at 680 levels. Any momentum or any dips towards to 660, 650, those are the very crucial supports level for this particular stock. So if you want to take a long positions, wait for some more time, let the stock find out a very good support nearby 660 to 650. Then we can see some turnaround, and you can buy at those range. Buying levels can be recommended at the 30-40%, and we are looking for a target from here onwards 720 to 725 levels. So hold for some more time to take a fresh long positions.
Okay, all right. So that's with regards to where CG Power is concerned. We've got our next caller. Dheeraj is calling us from Hyderabad. Dheeraj, hi. A very good morning to you. I believe you have a question on Godrej Properties.
Yes, ma'am. Good morning, ma'am.
Good morning. Go ahead with your question, Dheeraj.
Yes, ma'am. I purchased 88 shares of Godrej Properties at 2,105, ma'am. Actually, there is a recent correction from the highs of 2,300.
Okay.
So I took this as a buying opportunity and have purchased these shares. Can I hold it for the next 2 months, ma'am? Or should I shift to some other counter, ma'am?
Okay, Dheeraj. Got your question. I'll take this up with Swati. Swati, do you think you should continue to hold this for the next 2 months to see some profits, or should you shift to something else? If yes, to what counter?
I would suggest to hold on at the current market price itself, because we have already seen the valleys selling pressure from 2,350 to now 2,000 levels. A small bounce back rally is expected towards at least 2,170 to 2,150 levels. So you can hold on the long positions if you want to keep a strict stop loss. 2020 is acting as a very good crucial supporter. So 2020 will be at your stop loss, and wait for some more times and hold the long positions for immediate target of 2,170 levels.
The next query is from Kumud Sethi from Dehradun. They want to know the fundamental and technical view both on Tata Tech for the next 1 year. Astha, coming to you first on fundamental view.
Right. If we talk about the Tata Technologies company, the fundamental view is right now not so encouraging, although we know that after the IPO also the company was not able to manage its issue price, and it was a downward momentum which we have seen in the counter. Now, talking about the fundamentals also, what we believe is not working well for the company is their financial performance is still not looking so encouraging. And in fact, I think that the kind of pressure which we are seeing in the policies, etc. I'm talking about US policy here. So I think definitely that is also one of the major reason we are not able to see a very good number. Maybe H2 can be a better quarter for this company. So just in that hope, just remain invested. Otherwise, the fundamentals right now seems not to be that strong for this counter.
Okay, and what about the technical side of things? Swati, is it looking constructive or no?
As of now, the stock is just within the consolidation phase of at least between the 690 to 670 levels, and it's approaching the very clustered supports levels at the current market price. So I will suggest to hold on the long position if you have any, by keeping a strict stop loss of a 650 levels, because that is acting as a very cluster supports levels. Positive momentums can be witnessed only if it manages to give the breakout of the 20 days moving average, which comes to nearby at least 685. Any move and sustained positive closing above 685 level will lead a positive rally towards to 700 to 770. So at the current market price, I will suggest to hold on the long positions by keeping a strict stop loss of a 660 levels.
Okay, all right, so that's with regards to where Tata Tech is concerned. The next one is from Govinda Kumar, who's writing us from Hyderabad, asking about Anantraj. He's got 200 shares purchased at the levels of 625 and wants to know if he can hold for the next 1 to 2 odd years. Asta, I'll come to you on this one, considering they're expanding in a big way in terms of data centers.
Yes, and that is the major positive for this company. Growth in the real estate, growth in the data centers will drive the performance for this counter. And the capacity expansion, especially at their Manesar, which they are doing, and Panchkula they are doing, I think definitely will help the company in posting very, very strong set of numbers. So we believe that this counter is well poised to move more upside or to give more upside returns from here. Stay invested in this counter. Initial price target can be set at around 650 odd levels.
The next is a caller query from Chandana from Bangalore. Chandana, you can go ahead and ask your query. Chandana, it's on Bharat Electronics, right? Right, her query was on Bharat Electronics. She wanted to know the short-term outlook. Swati, how's the counter looking like?
My view is a little bit cautious because the counter has already given a very strong momentum rally in the past few months, and as of now we are witnessing some sort of a profit bookings at a high level which cannot be denied after such kind of a steep rally. Now at the current levels, I believe 400 is the immediate supports levels. Unless and until it stays above that level, rally is likely to be continued. If it's break that level 400 levels, then more selling pressures can be intensified in this particular stocks. So if you are having any long position, 400 will act as a crucial stop loss for you, and any momentum above 420, 425 levels, I will suggest to book your profits on every rise.
The next query is from Richi Lalu from Kerala. They want to know the good price to accumulate Midhani at current levels and the outlook for the next 3 years. Astha, how's Midhani looking like at current price? Should they go ahead and buy this counter at this level or wait for some more correction here?
So I would like to recommend that one can wait for some more correction. Although if I talk about this counter is looking now started looking good to us. And what is major focus of this company is that they are increasing their capacities and capabilities. In fact, they are also improving their product mix. So order inflows continues to be very, very strong, and the prospect is looking very strong for this counter. So maybe if some dips come, then definitely it is a good accumulation counter at around 320 to 350 odd levels. Price target in any case for the long-term horizon I'm talking about can be set at around 380.
Just a quick reminder, viewers who are tuning in, you can also call us on the numbers that are flashing on your screen down there. The next one is from Venkat Prasad, who's writing us from Hyderabad, asking about Vodafone Idea. Is bought at the levels of 10.89 and 5,350 is the quantity that he has. Wants to know target from a 12-month perspective. Swati, on the charts, what are you observing?
Yeah, as of now, the chart is really looking positive on the technical front, because from the last 3 months, we are witnessing very strong positive momentum. So we are seeing prices leading its way on the high side. This lack of momentum is likely to be carried forward towards to 12 rupees. So if your long positions can be hold on by keeping a tight stop loss of a 9 rupees for a target of 12 rupees.
नेक्स्ट क्वेरीज फ्रॉम अरविंद फ्रॉम उत्तर प्रदेश। अरविंद जी, आप आपकी क्वेरी पूछ सकते हैं।
यस सर। सर मेरा को पूछना था कि सुंदरम फाइनेंस ये है स्टॉक है, जैसे कि बैंकिंग एंड फाइनेंशियल सेक्टर परफॉर्म करेंगे, पर सुंदर फाइनेंस जो है इस कंपनी ने कुछ परफॉर्म करके दिया नहीं है, मतलब पिछले 6 महीने से। तो मेरे को फंडामेंटली टेक्निकल बेसिस पे जाना था कि कैसा लगता है ये।
ठीक है। Astha, coming to you on Sundaram Finance, the query is that the stock has underperformed the Nifty Bank and Financial Index. The caller has around 30 shares bought at a price of 4,724. Should he continue to hold this counter?
I would recommend a hold on this counter. And the reason being is that, yes, we are very much positive on the NBFC space as a whole. Going forward, NBFC and banking space is looking good to us. So what we believe that their margin expansion will definitely take a turn in the coming quarters. And hence, we are positive, although we know in the past there were disbursement issues, and in fact asset quality issue was also there with the counter, hence the counter was not able to perform so strong. But going ahead, we believe definitely this counter will show improvement in the financial performance, so one can remain invested in this counter.
So I think quickly short term view on Sundaram Finance.
My view is positive at the current market price because the stock is hovering near the 20 days moving average, comes to nearby at least 47.20. If it today manages to give a positive closing, positive rally can be extended towards to 4800 to 4850 level. So I will suggest to hold on this long positions by keeping a stop loss of 4700 on the downside.
Okay, the next one is on RVNL. Kishore from Hyderabad is holding 320 shares at the average price of 356. And this is from a 2-year perspective that he's saying that he's been holding this since the past 2 years. Wants to know if he can sell or wait for some more time to see some profits, because he's sitting on a loss of roughly 12,000 rupees right now. Asta, I'll come to you on this one since he's a long-term investor. Would you recommend him to continue to hold this?
Yes, I would recommend to continue hold this, but try to exit at the cost price level, because what we have seen that their performance is not coming very strong. Q2 FY26 performance was also weak. Cash flow was not very strong, and the revenue from the operation, it rose only 1%. So I think the kind of financial performance they are showing, it is not up to the mark. The only soothing factor is that now they are expanding into the high value segments such as rolling stocks, etc. So I think that might give some sort of cushion. But going ahead, I believe till the time they won't perform strongly on the financial front, the stock will not able to perform strongly on the price front. So overall, try to exit at the higher level. This is what I am recommending for this counter.
So that's it with regards to where RVNL stands. We've got our next caller. Ramana is calling us from Hyderabad. Ramana, hi. A very good morning to you. How can we help you today?
Yeah, madam, doing good. I am holding Blue Jet, 3,550 shares at the rate of 694.
Okay.
What is the outlook? Should I have to hold or should I have to accumulate further to cover up my losses? How long should I have to hold this?
Ramana, when you invested into this counter, was it from a long-term perspective? Did you see the fundamentals of the company?
It's meant for short term. Over the period of time, after it keep on went going down, I thought we should hold for long term.
All right. So Ramana, we've always said this and, try to convey this to our investors as well as traders that you should always, keep a stop loss when you're trading from a short-term perspective. And I'm sure Swati will also agree with me. Swati, now that he's already sitting on a loss of 4.5 lakh rupees, what should he do? Enough data on the charts for you?
First of all, Mahima, I really agree whatever the point you have kept it on the table, that definitely one should hold the long positions with strict stop losses so that the profit losses will be minimized. On the technical front, as of now, we have witnessed a very strong selling pressure. Now, the interesting fact that it has approached the oversold zone, which indicates that the depth is limited from the current market price. And one interesting observations on the RS is nothing but the relative strength index, which shows a positive divergence from means here onwards, we will witness some sort of a reversal in this particular counters up to at least 640 to 650 levels. So whenever any more positive momentum comes towards to 650 levels, I will suggest to exit your long positions. But at the current market price, don't book your losses. Hold for some more time. If you want to keep a stop loss, 540 is acting as a very good support level. So be keeping that as a stop loss. You can hold on the long positions for immediate pullback rally towards to 650 to 660 levels.
The next query is from Nimesh Nerlekar. He is holding 4,000 shares of Restaurants Brands Asia bought at a price of 64 rupees. He wants to know whether should he continue to hold this counter or switch to an Eternal or Swiggy. Astha, what would be your view on this? Should he continue to hold restaurants brand or should he switch to Swiggy or Eternal?
Right now, switching to Swiggy or Eternal is not making sense. This is what I believe. So my idea here is to continue holding this counter. In fact, we are seeing now strong price momentum also in this counter. And in fact, their India performance is looking now strong. So what we believe that the restaurant brand Asia is definitely looking a good counter, and one should remain invested in rather than switching to these counters like Swiggy or Eternal.
Okay, all right. So that's with regards to where some of these names are concerned. But Astha and Swati, it's time for our first rapid fire segment, and you both know the drill. Try to keep your answers as short as possible. The first one is from Srinivasan, who's writing from Bengaluru. He's holding PFC from a long-term perspective. Can he continue to hold considering the dividend yield? Astha, your view?
Yes, a hold from my side. Price target can be set at around 385 to 390.
Dariya Raja from Assam is holding 350 shares of Wipro, bought at a price of 246 rupees. Should he add, hold or sell? Astha, your view?
Hold is a strategy from my side because I'm finding other IT counters to be a better choice. So Wipro is a hold. Price target can be set at around 260 to 265 odd levels.
Okay, Narasimha Reddy is asking about Grow and wants to know if this is the right time to make an entry from a long-term perspective. Astha, your view?
I would recommend a wait rather than making entry at this point of a time. Although today we have seen good price momentum, but still the kind of performance they have shown, I think wait for some more dips to come in and then make an entry into this counter.
Manohar from Bangalore is holding 500 shares of Andhra Paper, bought at a price of 100 rupees, and he's holding it for more than 2 years. Swati, do you see should he continue to hold or exit this counter?
I will suggest to hold on this particular counter. Upside can be 74-75 levels can be seen.
Okay, Grasim bought at the levels of 2770. Currently at a loss. Should he continue to hold? Swati, on the charts?
Yes, definitely you can hold on the long position by keeping a strict stop loss of a 2650. Upside momentum can be seen towards 2800 to 2850.
Akhil Bakshi from Mumbai owns 100,000 shares of Tata Power at an average price of 364. He's made gains of just 8% in the last 2 years. Astha, should he hold or exit this counter?
Hold is what I recommend for him with a price target of more than 400.
Okay, Parthasarthi is asking about Deepak Nitrite. He's holding 20 shares at the levels of 1781. Should he hold from a long-term perspective? Astha, your view?
Yes, Deepak Nitrite is a hold from a long-term perspective.
The next query is from Kalyan. He holds Mandeep Auto shares, bought at a price on the listing day. He continues to hold this counter. Should he hold or sell? Swati, any views on this counter?
I will suggest to hold on this particular counters. Upside momentums can be seen from here onwards at least 4 to 5%.
Well, with that, we have wrapped up the quick rapid fire round. Let's slip into a short break and we'll address more of your queries on the other side.
There are a lot of investment theses out there, but Sameer Arora's Helios Capital believes that it's better to identify stocks that you should not invest in to find the portfolio that you should.
We don't like loss-making companies. So you have first eliminated.
What ideas are you actively staying away from in 2025 November?
When a new entrant comes, the market thinks it's competition. We think it is sanity. Fact that you reached an IPO stage is broadly you have survived. As a thumb rule, we give benefit of doubt to first quarter. The first quarter तो अच्छा होगा.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
The NDTV Profit has come a long way since it was relaunched. I hope you're watching NDTV Profit a lot. Absolutely, you can come to my office and you can see.
Raj, Tamanna and the entire Profit team is also
Welcome back. You're watching Ask Profit here at NDTV Profit. Now, before we go on and take further queries, it's time to take a look at what the F&O market is looking like today. And we have Sharat joining us to give us a brief as to how the setup is looking. Sharat?
Well, the sentiments are on the negative side, but Mahima, the range has become very short. Initial in the hour of the trade also, we have seen the same thing happening as the domestic and global cues are still coming mixed. Net, we see largely the Sensex constituents are in red, support coming in BL, SBI, Reliance, but IT pack, that's the reversal happening in the trade. Also, let's pull out overall how the Sensex futures are panning out. 84,900 coming in the futures market, and the snapshot, if you see, there's a major congestion in that 84,800 odd levels, and that is why we are seeing a bit of kind of equal writing happening in both the call and the put segment as well, but the bias is slightly towards the negative side. Let's get in BankX. The smaller constituents, they are doing well. Yes Bank, Federal Bank, IDFC Bank, but the concern remains is two large players having higher constituency. The first is HDFC Bank, second is ICICI Bank. That's where it's dragging the BankX. Overall, the contracts we can see on the screen, but the stocks which should be in focus, where we see key longs are taking place. These include the stocks from our list. They include Phoenix Mills and Lupin. Both of the stocks are gaining in trade. Also, the short covering, there are two names, AB Capital and Glenmark Pharma, also buzzing in trade. The long unwinding, two counters, Sona BLW and NBCC. And lastly, key shorts are coming up in the IT space, especially Infosys, that's down almost 1.3%, and Hindustan Foods also making it to this list. So these are the stocks which are buzzing in the F&O space.
All right, Sharat, thank you so much for getting us that F&O snapshot for the day. But we've got our next caller. Mansingh is calling us from Hyderabad. Mansingh, hi, a very good morning to you. How can we help you today?
Hi, ma'am. Very good morning. Actually, I want to know about E2E networks. Sir, this market cap below.
Okay.
Then I shifted to BBDC. But I want to know about E2E network, madam. Should I start investing from current juncture?
You want to know about E2E networks, whether you want to make an entry into the counter right now or not. Is that correct?
Yes, ma'am.
And this is from a short-term perspective?
No, madam. Long-term, 2 to 3 years.
All right. Okay. Sure. I got your question. I take this up with Astha. Then Astha, any view on E2E networks?
Sorry, I don't track this counter.
I can understand that. Swati, anything on the charts that you can help our viewer with?
Looking towards the chart formation since October, we are witnessing a continuously selling pressure, trading in the pattern of the low top, slow bottom. I will suggest to take any fresh long positions, wait for some more time. I believe that this selling pressure is likely to be seen towards, and which will take a stock towards to 2000 levels or up to 1900 levels. Selling pressures can be seen. So wait for some more time. If the stock approaches 2000 levels, then I will suggest to review the once again, and at that point of time, we can definitely inform you whether to buy it or not. But at the current levels, we is little bit cautious to bearish at the current market price.
All right. Okay. So that's with regards to where E2E networks is concerned. The next one is from Anil Kumar, who's asking about Bajaj Finance. He's got 500 odd shares at the levels of 1066. Can he continue to hold or exit? He's not mentioned the time period, but Astha, your view, your fundamental view on Bajaj Finance?
Bajaj Finance is looking good to us. Recommend a hold with the initial price target at around 1050 odd levels. So now talking about the fundamentals of this counter, fundamental seems to be good. The quarter was a steady quarter, although the guidance was not that very strong, but I think that the asset quality which they have showed is looking strong to us. And going ahead also, we believe that definitely this counter will be able to show good growth in their loan or AUM growth also. So I'm positive on this counter, recommending a hold. Price target can be set at around 1050 odd levels.
The next query is from Ramana from Bangalore. He's holding 100 shares of SJS Enterprises bought at a price of 1,697. He wants to know whether should he continue to hold this counter, sell or buy on dips for the next 1 year. Astha, any view here? SJS Enterprises.
SGS Enterprises, right now the view is positive for this counter. A hold is recommended in that counter from our side, because what we are seeing that their solutions are really very, very strong. They are into the Indian decorative aesthetics industry, and now they are capturing the premium markets also. So my idea here is, and in fact some acquisitions also they have done. So overall, yes, it's a hold from my side for this counter. Buying can be recommended, but not at the present moment of a time, maybe at the lower level, but a hold is recommended for the price target of 1815 to 1820.
Okay, the next one is from Pooja Sethi. She's got Neogen Chemicals and wants a 6 months view on this particular counter. She's got 500 shares, recently bought at 1400 levels. Swati, on the charts?
My view at the current market price is positive. I believe that the stock has a potential to rally, continue this positive momentum towards to 1250 to 1260 levels. So hold your long positions by keeping a strict stop loss of a 1140 on the downside.
The next query is from Manohar from Pondicherry. He wants to know whether is it a right time to buy Signed for long term. He can hold the counter for the next 2 years at least. Astha, any view on Signed here?
Yes, Signed is looking good to us, and definitely if the time horizon is 2 years, then yes, it's a buy from our side as well. As now talking about the fundamentals of the counter, fundamental seems to be quite okay. What we have seen that they have got the engineering excellence, and in fact the growth momentum is also looking very, very strong to us. So definitely a good counter, and their deal wins are also very strong. A hold is recommended for this counter.
Okay, all right. So that's with regards to where Cyient Limited is concerned. We've got our next caller. Mohan is calling us from Bengaluru. Mohan, hi. A very good morning to you. How can we help you today?
Very good morning. I just wanted to know, can I buy the Rainbow Children Medical for this unlimited fund for a long-term perspective?
Okay. Mohan, any specific reason as to why this counter?
No, I just went through this company. The prospect looks to be very good. So for a long term, for 1 year, can I buy the share?
Okay, all right. I take this up with Astha then. Astha, what's the view regarding with regards to where Rainbow Children Hospital is concerned?
So the view is positive in the wake of the fact that the performance in the quarter gone by was steady. In fact, broadly it was in line with the expectation. And the most important point is, first of all, their average revenue per occupied bed is looking very strong to us, and that is what is driving the growth. So we are positive on this counter and recommending a hold, as well as buy on dip strategy can also be applied. Price target can be set at somewhere around 1500 levels.
Queries from Savita. Swati, it's for you. What's your view when it comes to IRCTC for short-term period?
At the current levels, I believe that the selling pressure can be likely to be continued, and which will take a stock first to 660 to 650 levels. So fresh longs are not recommended at the current market price. If you are having any long, just hold on. I believe that the stock manages give the breakout of 700 levels. A positive momentum is likely to be carried forward to 770. For a longer term horizon, view is positive. For a short period of time, we might witness some sort of a selling pressure, but you can definitely hold on the long position for immediate target of 700 rupees.
Okay, the next one is from Manideep. He's asking about Enviro Infra. He's bought 373 at the levels of 273 and wants to know if he can continue to hold for the next 6 odd months. Enough data on the chart, Swati?
At the current market price, my view is little bit cautious in this particular stock. The counter is facing a very strong resistance of 215 to 280. Unless until it doesn't give the breakout of that level, a positive momentum is restricted. So any move above that level will turn around some positive bias, which will take a stocks to us to 225 to 30 level. I believe one can definitely hold on the long positions at the CMP by keeping a strict stop loss of a 206 rupees on the downside.
Next query is from Akhil Bakshi from Mumbai. He's holding 1200 shares of IGL bought at an average cost of 271. He's made a loss of nearly 23% in the last 3 years. Astha, should he continue to hold this counter or exit?
So, talking about Indraprastha Gas, that is IGL, I recommend a hold on this counter for the long-term perspective, not from the short-term perspective, because in the short term, we might see some sort of, downside in the stock prices. Now, talking about the fundamentals also, fundamentals seems to be, average on this counter, not very strong, because the quarter gone by was a muted quarter. But here, the main positive turns around the fact that the margin and the volumes, they are seeing some sort of a growth, and going ahead also we believe in the coming 1 year volumes and margin can see some sort of a growth. So what we expected, this counter is a long-term counter only, not in the short term. It can see some sort of traction. Long-term here means more than 12 months time horizon, then definitely it's a hold from my side.
Okay, all right. So that's with regards to where IGL is concerned. We've got our next caller. Siddhartha is calling us from Hyderabad. Siddhartha, hi, a very good morning to you. How can we help you today?
Very good morning, madam. I'm holding Techno Electric Engineering 40 shares, average price 1182 rupees.
Okay.
Should I accumulate more at the current juncture, or should I wait? I can stay for 2 to 3 years.
Okay, got your question. Astha, what's the view like for Techno Electric?
So talking about Techno Electric, right now the view is positive on this counter, and recommending a hold for this counter, and the price target which we are setting for this counter is more than 1300. Now what is positive about this counter is, first of all, the sector tailwinds is there, and their main EPC business is definitely driving growth. Second positive is about the data center, which is looking good to us, and it can help the company in posting strong set of numbers going ahead. So we believe that this counter is well poised to move till the level of 1300 or more. I recommend a buy as well as hold for this counter.
The next query is from Sai Karthik. He wants to know, Swati, your view when it comes to JSW Infra. Can he add this counter?
The current market price, I will not suggest to add on. Let the stock find out a support nearby at least 250 to 240 levels, where we can see some sort of a support formation. Then a positive momentums can be seen on a turnaround. So hold for some more time. Any dips towards to 250 to 240 level, you can add on.
Okay, all right. So that's the view with regards to where JSW Infra is concerned. The next one is from Vijay Sharma, who's asking about Dixon Tech. He's got 10 odd shares at the levels of 15,891. From a long-term perspective, can he continue to hold, Astha?
Yes, sure. Good long-term perspective for this counter, and definitely a hold from our side. Price target can be set at somewhere around, 18,000 odd levels. So we are positive on this counter with the price target of 18,000. Now talking about the fundamentals. Now this company is definitely, looking after the margin expansion, especially in their component segment. And in fact, the revenue growth which we are seeing in this counter is also looking very, very healthy. So right now, a positive stand on this counter with a hold recommendation for the price target of 18,000.
The next query is coming in from Soumya from Bangalore. She wants to know whether is it a right time to buy NSDL. Astha, any view on NSDL?
I think buying on dip strategy can be applied to this counter rather than buying at this moment of a time. So not a right time to enter into this counter, maybe at the lower level of around 1,050 also.
Okay, the next one is from Ananta, who's writing us from Vijayawada. He's got 15 odd shares of Mazagon Dock at the price of 3,380. Wants to know if he can hold more at the current price from a 6 months time frame. So Ati, on the charts?
Yes, Ma'am, definitely he can hold on at the current market price. Depth is limited. I believe that the stock will find out a very good support nearby 2550. Then positive momentums can be seen towards the 2850 level. So it's a hold for a mine at the current market price.
Next query is from Krish from Hyderabad. He bought a team lease at a price of 1,700. He wants to know whether should he continue to hold this counter or sell, or should move to a stock like delivery. Astha, any view on team lease or delivery here?
So would not like to recommend delivery at this point of the time for sure. And now, in fact, if he stay invested in this counter, then definitely it will lead to good, stock price momentum also at around 1800 to 1900 odd level. Talking about this counter, what we seeing that yes, this counter is looking good to us. Their EBITDA margin is what we are seeing is expanding. Growth is there. So overall, a positive view from my side, and our hold is recommended.
Right, so that's with regards to where Team Lease is concerned. We've got our next caller. Tapas is calling us from Mumbai. Tapas, hi, a very good morning to you. How can we help you today?
Very good morning, madam. I'm holding Moraja battery for last about 8 months. My average price is 1171. I'm holding 50 numbers. What should I do going ahead? Hold it, coming out with loss?
Okay.
Please advise, thanks.
Okay, Tapas, when you bought this counter, was it the fundamentals that you saw or technicals?
No, I bought it fundamental.
Fundamentally, okay. Astha, what's the view like on Amara Raja batteries?
Fundamental seems to be very strong for this counter. Undoubtedly, the kind of demand they are getting is very, very strong. And I believe going ahead also industry tailwind is there. So hold from my side. Maybe it will take some time to show, strength in this counter. But a long-term hold is always recommended for this counter with a price target of 1050 to 1100.
Queries from Sheikh Ilyas from Andhra Pradesh. She has 1,550 shares of Ola Electric, bought at a price of 49. She wants to know whether should she add some more here for long term. Astha, any view on Ola Electric?
No, I would not recommend a add on this counter at this moment of a time. Let the results come for the Q3 of FY26, then make any sort of decision on this counter. Right now, I'm not recommending add on this counter.
Okay. We've got our next question, which is on NetWeb technology. From a fundamental perspective, Suman wants to know if she can continue to hold this for the next 2 to 3 odd years. Astha, what's the view like?
Yes, sure. Fundamental seems to be very strong for this counter, and one can remain invested in this counter for the next 2 to 3 year perspective because their main strength in the AI, which they are doing right now. And in fact, what I was liking about this counter when the IPO came, that their growth, especially CAGR growth, was very, very strong across all the line of items, whether it is top line, bottom line, or operating profit. So yes, it is a hold from my side for coming 2 to 3 years.
Call a query from Vijay from Hyderabad. It's on Trans Rail Light. Vijay, you can go ahead and ask your query.
Yeah, I'm holding Trans Rail Lighting.
Right.
Yes, at buy price 690, 300 shares. I want technical and fundamental on this.
Swati, what's your technical view when it comes to Trans Rail Lighting?
At the current market price, definitely view is positive because the counter has approached the oversold zone, and from there onwards we are witnessing a positive momentum in the pattern of the high tops, high bottom formations. So yes, this kind of a pullback rally is likely to be continued towards so initial targets will be a 670, then above that level 700 levels can be tested. So your long positions can be held at the current market price. If you want to keep any kind of a stop loss, 620 is acting as a very crucial support levels provided by its swing supports. So keeping 620 as your stop loss, you can hold on the long positions for a target of 700 rupees.
Swati, the next query is from Puneet Jaggi. He holds around 165 shares of Updater Service, bought at a price of 256. He wants to know, do you see a reversal from the current levels in the next 3 months?
I will not suggest any positive momentums can be seen very soon because the counter is very facing a strong resistance of 190 levels. Any move about that level on the closing basis will only will witness some sort of a change into the trend, which will take a counter towards to at least 200 rupees. So you can hold on, but downside it has a very good support set around 180 rupees. So by keeping that as a stop loss, you can hold on. But on every rise, I will suggest to exit the long positions.
Okay. The next one is from Sairam. He's asking about Persistent Systems. He's got 10 odd shares. Wants to know if he can hold or book profits at the current levels. What's the view like, Swati, on the charts?
I will suggest to hold on the long positions, but longer view is definitely positive. I believe the counter has not shown any sign of a trend reversals from the high 7. No wonder a small selling pressure is witnessed, but the overall strength is definitely positive in this particular counter. Hold for a target of 6500 to 6550 levels. If we want to keep any kind of a stop loss, 6250 is acting as a very good support level. So by keeping that as a stop loss, you can hold on the long positions.
Survi from Hyderabad holds 25 shares of Infosys, bought at a price of 1,560. Astha, should she continue to hold this counter?
Yes, definitely. Infosys is a hold from my side, and we are recommending it to continue with a price target of 1700 to 1750. Given the outlook is positive, especially what we have seen in the financial performance and the deal wins, we are quite optimistic on this counter for the medium term perspective as well.
Okay, the next one is on Easy Trip Planners. Do we have the name? Okay, Shibanjan has around 11,270 shares of Easy Trip Planners, and this is bought at the levels of 10.79. Wants to know from a 6 months perspective, can he continue to hold? Swati on the charts?
My view is a little bit cautious at the current market price, but no wonder the stock has witnessed already a very strong selling pressure, and it's leading towards the oversold zone. It's already trading that levels. So the downside is limited. I believe it will find out a good support nearby 6 rupees or 5 rupees, and then we can see some consolidation phase then turn around. So it will take a time to show the positive momentums on the high side, but any pullback rally comes to at least 9 to 10 rupees, I will suggest to exit the long positions.
The next is a caller query from Somesh from Andhra Pradesh. It's on Inox Wind. Somesh, you can go ahead and ask your query.
Good morning, sir. I am holding Inox India 140 shares, average price of 130 rupees. So long term, sir, I want to know the fundamental and the technical review, sir.
Astha, what's
should I add more in the current price?
Right. Astha, what's your fundamental view when it comes to Inox India? Should he continue to hold, add more here?
Inox Wind right now, right?
Inox India.
Okay, so the view is positive on this counter, and we are positive on this counter with a price target of around 1250 to 1300, which we are attributing to this counter.
Okay, Exide Industries is the next one. Raja Shekhar from Hyderabad wants to know if he can continue to hold the 100 shares that he has bought at the levels of 331. And for how much time? I think, Swati, I'll take this up with you. What are the targets and resistance that you're seeing on the charts?
Currently, the client is under the profit itself. I will suggest to hold on the long positions. Downside, it has a very good support at around 355 levels. So by keeping that as a profit stop loss, you can hold on the long positions. The stock has a potential to reach up to 380 to 385 levels. So hold the long positions by keeping a strict stop loss of 355 levels.
From Ashwini from Chennai, he bought 2,000 shares of Bellrise at a price of 148.5. He can hold this counter for the next 1 to 2 years. Astha, your view on Bellrise Industries?
Yes, view is quite positive and recommending a hold on this counter. Although what we have seen that in the May 2025, they have come out with the IPO at the issue price of around 90 rupees. From there, we have seen a continuous upside, and there are the reasons behind it. First of all, this is, market leader in the high growth field of precision and sheet metal pressing. And this is basically used in the automobile space. So in their portfolio is looking very strong. And in fact, they are vertically integrated. So this counter is looking good to us. We have also a subscribe recommendation at the time of IPO, and right now we are also continuing to recommend hold on this counter with a price target of around 175 to 180 odd levels.
Okay, the next one is from Alok, who's writing us from Bengaluru, asking about IGI. He's got at the average price of 417 and 35 shares is what he has. Wants to know if he can continue to hold from a slightly long-term perspective. Swati, on the charts?
Yes, ma'am, I will suggest to hold on this particular counter because it is under the consolidation phase, and as of now, we are witnessing some time correction in this particular stock as well. 310 is acting as a crucial support level. So as long as it respects that support level, I believe a positive momentums can be seen back towards to 360 to 370 levels. So long positions can be held at the CMP.
So from Hyderabad holds 1,000 shares of ITC Hotels bought at a price of 201 rupees. He wants to know whether is it a good time to add more for long-term investment for the next 2 to 3 years. Astha, your view here, ITC Hotels?
Yes, it is a good time to add more, but maybe at the lower level of around 190 to 200. So now talking about this counter, what we have seen in the past also, what the performance they have given in the seasonally weak quarter, that is the revenue per, occupied room was looking very strong. In fact, the EBITDA margin is continuously expanding, and room expansion is what they are focusing right now, will definitely yield strong financial performance going ahead. So yes, we are recommending a buy on this counter and maybe at the lower level. Price target can be set at around 230 to 240 odd levels.
Okay, so that's with regards to where ITC Hotels is concerned. The next one is on L&T Finance. The person wants to know if he can continue to hold this from a 3 to 5 year perspective, and what kind of return can it generate for the next 5 years? Astha, what's the view like?
So right now, I can say that in the coming 6 months, the returns can be very, very strong. As I've already said that we are very much positive on the NBFC space as a whole, and L&T Finance is our preferred choice in that space. Company has recorded highest ever profit. What to expect more from this company in the quarter gone by, and in fact their retail disbursement was also very, very strong. It is also one of the highest disbursement which this company has done. So my idea here is, with a very strong financial performance and the kind of strong momentum we are seeing in the NBFC space, this counter is looking very good to us. In the near term or slightly medium to long term, we are recommending a price target of 350.
Last caller query on the show is from Rajkumar Chennai on Raymond Realty. Rajkumar, you can go ahead and ask your query quickly.
Yeah, hi. Thank you for giving me an opportunity. I hold 800 shares of Raymond Realty at the price of 634 with currently a loss of 1.17 lakhs. Should I hold this for long term, 3 to 6 months?
Swati, your view on Raymond Realty?
Currently, from the month of July, we are witnessing a very strong selling pressure from almost 780 to now 450 levels. The stock is trading in the oversold zone, which indicates that the depth is limited from the current market price. And I believe the stock has taken a very strong support of a 450 levels, which we have seen in the month of the March of 2025. So double bottoms has been formed at the at 450 levels, and we are witnessing a positive move. And this rally is likely to be extended towards to 550 to 560 levels. So take some more risk. I will suggest to hold on the longer term long positions at the CMP. For immediate target will be a 550, and beyond that level 600 levels can be tested. So it's a hold from my end at the current market price.
Okay, all right. So that's in regards to where Raymond Realty is concerned. Astha and Swati, it's time for a second rapid fire segment. Try to keep your answers as short as possible. The first one is from Rani, who's writing us from Tripur, asking about CDSL, if this is the right time to enter. Swati, on the charts?
Yes, definitely you can hold. Carry the long positions or create a long positions at the CMP. Upside can be seen towards to 670 to 1700.
Chris from Bangalore is holding 1200 shares of Ashoka Buildcon, bought at a price of 205. Astha, should he continue to hold or sell this counter?
Continue to hold this counter. Maybe at the cost price he can exit from this counter, but right now a hold is recommended.
Okay, NTPC Green is the next one. Mahesh from Bengaluru wants to know if he can hold or exit. He's got 800 shares at the levels of 110. Swati, on the charts?
Then hold on by keeping a stop loss of a 92. For immediate target will be a 100 to 105 levels.
Taj GVK is the next counter. Gul from Kerala holds 30 shares, bought at a price of 448. Should he continue to hold this counter? He can hold it for the next 2 years. Astha?
Yes, a hold from my side. We are very much positive on the hotel space, and that GVK is looking good to us. 400 above 400 levels can be seen in this counter in the coming 2 to 3 months.
Okay, Arijit from Kolkata wants to know about SBI. He's got 10,000 shares at the levels of 973. 6 months view on the charts. Swati?
My view is definitely positive. Very soon the counter is likely to be entered into the 4-digit 1040, 1050 levels can be seen. So hold at a current mark.
The next query is on Siemens Energy. Should the viewer continue to hold this counter? Swati, any view here?
Yes, definitely you can hold on these positions for a target of 3150 to 3200 levels.
Okay, GM Breweries is the next one. Khurshid wants to know if this is the right time to make an entry. Swati, on the charts?
I will not suggest to take a long position at the CMP. Any dips towards 960 to 950 level, one can think about it, but not at the current market price.
Venkat Ramini from Bangalore holds 500 shares of Gujarat Pipavav, bought at a price of 143. He wants to know whether should he hold or sell or add more of this counter. Astha, any view here?
Hold is recommended at this point of a time with a price target of around 200.
Okay, Avenue Supermarts is the last one. Ganesh from Bengaluru wants to know if he can continue to hold this for the next 6 months. Swati, on the charts?
Definitely you can hold on the long positions. View is positive. 4050, 4500 levels can be seen very soon. So it's all from my end.
Alright, so that brings us to the end of this edition of Rapid Fire as well as Ask Profit, and with help of Somit, today Astha and Swati, we've managed to answer 65 queries. So, and we've broken the record of 55 queries by 10 more queries. So that's an interesting one today. So thank you so much, of course, to both of you for answering all those queries for us. Viewers, we're completely out of time on this edition of Ask Profit, but do stay tuned. KYC on the other side.
There are a lot of investment theses out there, but Sameer Arora's Helios Capital believes that it's better to identify stocks that you should not invest in to find the portfolio that you should.
We don't like loss-making companies. So you have first eliminated.
What ideas are you actively staying away from in 2025 November?
When a new entrant comes, the market thinks it's competition. We think it is sanity. Fact that you reached an IPO stage is broadly you have survived. As a thumb rule, we give benefit of doubt to first quarter. The first quarter तो अच्छा होगा.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका काम किया आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका काम किया आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit.
Hello and welcome to KYC. I am Sharad Dubey, and today the company in focus would be Bondada Engineering. This was an SME company, EPC space, but then it migrated and it's having a significant market share also if we compare it to an SME company to start with. But the question remains is, why have we got this company in our KYC segment? A lot of questions for this as company is that going into new sectors as well. The first question is, of course, coming in from the recent forays, what will be the capex numbers? What's the growth potential for two new sectors, data center and even battery energy storage systems? That's the first question coming in. Second question is, now the company turns from asset light to heavy because of foraying into defense sector. That's the question we'll ask the management. And also very large order win in Andhra Pradesh. What are the key timelines coming in? And that will be a significant bump up to the overall order book. Also, any value unlocking from its group companies, a lot of news flows coming in. That also is something we'll be asking the management. And in the recent con call, they said margins will improve by 100 basis points. So what will be the growth levers for this? That's something which we'll be watching out for. And also a very strong improvement in the working capital in H1 numbers. Will that aid financials going ahead? What will the execution be? All these questions will be answered in our KYC segment. But to start with, what the company is all about, that's a very important data to look at. And of course, the company, if you look at it, is dealing with the EPC segment. Operations, maintenance, most of these things are actually coming in. But which are the sectors which the company is actually involved in? This includes renewable energy, telecom, railways, and the new forays which I had discussed. These include data center and defense as well. We can show the overall breakup in the sectors where the company is actually functioning into. The manufacturing facilities, all of them are located in Andhra Pradesh and Telangana. And the total order book is an impressive 5,989 crore rupees. Tender submission, that is 7,531 odd crore rupees. That means the revenue visibility is strong going ahead as well. But let's see the order book breakup, how it stands. And renewable segment as the major chunk, almost 4,600 odd crore rupees. But telecom, Indian Railways, especially the coverage angle, is also covered in here, and a small portion coming from the product segment. Also, the key clients is very much important. This includes a very larger marquee players, Reliance Jio, Bharti Airtel, Adani Group, Indus Towers, and even BSNL making it to the list. Largely, of course, it is there in the telecom segment, which we would be focusing on. EPC services, telecom tower EPC, telecom OFC EPC, and solar EPC is something which the company would be focusing on. And O&M means operation and maintenance service, and these are the services which you give apart from the infra services, and these are high margin products. So that is also something, a key trigger for the company going ahead. Also, the IPP services, this includes solar IPP and BSS. It's a new segment which the company is foraying into, and we will be having a lot of questions on that in the manufacturing segment. These are the important key categories where the focus is there. Apart from the manufacturing also, we look at the solar and the crash barrier system. These are the products which we would be focusing on. Net, this is the total situation and the order book situation of the company going ahead. But let's move on to overall the book-to-bill ratio. That's 3.8 times its FY25 revenue, and this is an important, you could say, the numbers coming in. L1 order is 2,628 crore rupees, and also looking at the overall numbers, the working capital cycle, that's what I have been stating to you. These all are on the lower side. Look at this H1 number. So this will aid the financials going ahead. But what's the entire structure of our KYC show? What are the parameters we judge a company? So there are 8 important parameters we will look into in our KYC show. The first one is, of course, the income statement, balance sheet, cash flow, and the return ratio. These are largely financials where we'll be judging the company and giving the ratings. Apart from that, shareholding is there, street cred. Of course, how the stock journey has been, was it been rewarding to the shareholders, long-term, short-term, both views we will take. Valuations, what does it stand from its peak levels, and overall outlook, especially when regarding the recent forays, the street really wants to know now the future related sectors, how does the company actually pan out. So the first and foremost is the income statement, which you'll be looking at. Net, you look at it, the revenue has jumped up almost 68% on a 3-year CAGR basis. EBITDA also significant uptick coming in. Net profit 126 odd %, and look at the margin numbers, it's going up almost double digit. And for an EPC player, even if they're going to a new segment, that is still showing strength. And of course, apart from income statement, the Q2 numbers are also out. That's something which I would like to share. And overall, we see the numbers are on the stronger side. The H1 numbers, mind you, the net profit, revenue, all of them seeing 100% plus jumps coming in. Margins also 121 basis points on a year-on-year. Of course, company is an SME company, so they generally report the numbers in the 6-month basis. So net, they have passed with flying colors when it comes to the income statement. So I will be giving a +1 or a thumbs up coming in for Bondada Engineering. Up next is balance sheet after income statement. Net, largely I see the debt equity ratios, even for an asset heavy company, which company wants to go into, that itself is at a favorable levels. Borrowings not so much increased, 234 odd crore rupees. There was fundraisers also, and that's why your major ratios in the balance sheet are healthy. Cash bank balance also significant up move coming in, almost doubling from 41 crore to 92 crore rupees in the H1 numbers. So net, even the income statement and the balance sheet, both of them are doing well. So I have given a +1 rating for this balance sheet as well. Also, let's look at the third criteria, that's the cash flow criteria. And one thing I'll share it with the audience is, when you are dealing with a asset heavy business, the cash flows can be lumpy, and over a long period of time is something where you should judge a company. So overall, we are seeing there is volatility coming in. So net, current levels, if you look at it, the operating cash flows on the negative side for H1 numbers. So I have given a thumbs down. That means a 0 ratings coming in. Also, the fourth one is the return ratios. That's also pretty much interesting. That's FY25, the return ratio stood at roughly 23 odd %, but a significant uptick coming in FY26, that's 30% and ROC, a healthy one, that also generally it's around 15 to 20% for the industry. That means this augurs well for the shareholders as well. So it's a thumbs up coming up from my side when it comes to the return ratios. Also, apart from the return ratios, let's look at one of the most important criteria, that's the shareholding pattern. You must be wondering why the DIs is 0%. There wasn't much participation and the company's listing was of course there around 2 years odd ago, and DIs have not participated, and that's a key concern for me. When I was looking at, if there is a lack of institutional participation, then only promoter float and the retail float is. The retail float is almost, you could say, the 100 minus 63, 64 odd percent, that's around 35 to 36%. Promoters not selling any stake. FIs, no major increase happening, just a very minor exposure. So because of lack of institutional exposure in the company for Bundada Engineering, I will be giving a thumbs down rating for this. Street cred, that's very much important, and the company has been a multi-bagger for long-term investors, but for short-term investors, 1 month return is down 19%, 6 month, nothing much happening in the stock, it's down 11%, year to date and 1 year stock, largely the numbers are same because we are about to end the year. Both of them are down 37 to 38 odd percent, but company has been a multi-bagger. So if we can show that number, since September 23, the stock has given massive returns, 1070%. So if you are a very long-term shareholder across cycles, the company has rewarded you. But if there is a recent entry or a positional entry, then the story is different. And because of the story being different when it comes to the share returns, I will be giving a neutral rating for the street cred. Also, the seventh and one of the most important functions is the P ratio, the valuations which we have taken. There was the euphoria in the stock, also in the sector industry and in the SME space way back in 2024 highs. That peak level was 160 times when you look at the forward 12-month price to earnings ratio. But now there has been a significant correction, and if you put it in numbers, that's around 75% downtick coming in terms of valuations. Now the current numbers are just 39 times its 12-month forward P ratio. That means it is significantly trading at a discount. Earnings growth has also been there, and this actually makes it very attractive. And because of this, I will be giving a kind of a neutral rating coming ahead, because the earnings is still going to be lumpy because of the nature of the industry and the new businesses which the company is entering. You must be wondering that 7 important ratings are done. The most important one rating is the outlook rating. What lies ahead? Because the company is focusing on future ready sectors as well. Recent order wins were also there. When you look at the outlook, Adani Group and ICAT certifications also coming in. There's a major announcement post the earnings season. So these are the 2 important takeaways coming in, where we will ask the management what kind of revenue potential or incremental gains can come in the financials. But apart from that, they have released a Vision 2030 as well. They expect to achieve 25 gigawatt renewable energy capacity, and also they want to scale up the data center and the BSS segment as well. Looking at the telecom leadership, which they have already been there, this is their old business. They are looking at 2 major levers of growth. One is Digital Bharat, second is the 5G expansion. But the last is also very much important. They're focusing on defense and railways. Company is also a proxy play for the Kavach orders as well. But remember, when there is a lot of B2G concentration of orders, there are execution and cash flow issues as well. And that's why at times the valuations hurt and stocks go into correction. So that's why the outlook overall for Bundada Engineering, I would be giving a kind of a neutral rating. But let's just revise the ratings overall, what actually it means for Bundada Engineering in our KYC segment, which we have taken in. The numbers, income statement, balance sheet, all of them showing good strength. So there's a thumbs up given to it. Operating cash flow, because of the nature of the business, has got a thumbs down. But the return ratios for the investors, that has shown a good strength. So a plus coming in. Shareholding, lack of institutional participation is something which we made us give a thumbs down to it. Street cred and valuation and outlook, all 3 of them, if you look at it, they are neutral kind of a thing set up. But net, we are giving them 4.5 out of 8 in our KYC rating, and that's largely the mean rating which we give in our KYC shows. Also, but let's get to the management to understand the entire setup of the company and where the outlook stands going ahead. Joining us is Bondada Raghavendra Rao. He's the chairman and managing director at Bondada Engineering. A very, very good afternoon to you, Mr. Rao. First question, of course, would be is your recent order wins have been coming in from Adani Group, ICAT certifications, and these announcements are coming first time post the Q2 numbers. So what is the incremental benefit you can expect about it, and if you would give more flavor to this?
Yeah, good afternoon, Mr. Sharad Dubey. Recently, we have signed one frame agreement with Adani for next 5 years. That is 5 gigawatt, almost kind of 5 gigawatt. But part of this actually, we got around 1,050 crores order, 650 megawatt, which needs to be installed in next 10 to 12 months in Khavda project. And we also got we also got one more order. This is Mahajanpo, is around 450 megawatt. 450 crore and 100 megawatt needs to be installed at Mahajanpo. These two are the new orders which we have declared in the Bombay Stock Exchange. This ICAT certification is for our BLDC motors. These BLDC motors are used for our two-wheeler, three-wheeler EV vehicles. We also got that there's a prestigious certification for our product and as well as the factory. These two, these two are the recent ones. And pretty much very good that future outlook for this company, because we are already L1 on almost around 2,200 crores orders from all the public sector companies, which will be declaring very soon. Maybe in the month of December, we are going to declare these orders. We are already L1 in the solar EPC side.
Mr. Rao, let's speak about your recent forays coming in the data center and the BSS segment. Of course, some concerns are there, but these are the new industries. It's not tried and tested method, which the traditional EPC company would do. But this is the new segment, data center and BSS. Give me the status update on it, and any kind of capex plans are there which are earmarked separately for them?
Yeah, both in data centers and as well as the BESS. Not only just capex model, we are also eyeing for even EPC models also, because actually this huge amount of foreign investments are coming in these two segments. So there's a lot of players are required even EPC segment also. Of course, actually we have started this BESS with our capex model, that is almost around 850 crores order which we got from Tamil Nadu Renewable Energy Corporation, that needs to be deployed in next 15 months time. That is around 200 megawatt by 400 megawatt hour, and that tendering process is going on further orders. Not only limiting to this capex model in the BESS, actually we are also eyeing for the EPC model for even data centers. Even BESS. Coming back to the data centers, we already entered into managing of data centers for Microsoft, and even huge buzz is there in the data centers. We are looking for ecosystem of data centers where we can build a block and then give it to the data centers investors, and operational maintenance of this data center, and green power supply and cooling solutions for these data centers. These three are the major investments which are going to happen. When you say, if you see the numbers, actually just in BESS, it's just only the less than 1 gigawatt is installed. But whereas by 2032, we have the requirement of almost around 250 to 260 gigawatt of BESS requirement is there. Coming back to the data center, huge amount of data centers requirement is there in India. All the foreign investors are setting up data centers in India. For them, actually, how we can do the EPC services, how we can provide them services in operation and maintenance, and also once we get the know-how of these data centers, how we can get into the up to 1 megawatt of data centers of maintenance and operations and maintenance of these data centers. That's what our future outlook.
Mr. Rao, we generally know about the data center ecosystem, but our viewers would like to know about the cooling segment which you mentioned. This is quite niche. but cooling is very much required in a, you could say a setup in the data center. Just could you give us the detail about the products in this cooling segment?
Yeah, data center is nothing but actually it is just cooling of the data center, which is the high power consumption. Most of the data centers needs to be run on 24/7 round the clock power, green power, that we are very much pretty there in that actually. Maybe we are also looking at actually from our 2 gigawatt how we can supply our green power to these data centers. In today's scenario, a lot of plug and play data centers are also coming in. A lot of companies are coming into that. Of course, we are not there into manufacturing of those equipment, but we are going to be there in their main block constructions, and as well as the powering these data centers with round the clock power supply to these data centers from our solar power plants.
Mr. Rao, of course, there's a lot of high capex announcements coming in. You did mention about BSS, which is, of course, going to have a capex including data centers as well. Largely, the analyst community feels that company was an asset-light play, and now it's slowly, some asset turns might increase. So, will this become asset-heavy, and there might be some pressure on the financials in the short period? How's your view on this?
No, definitely my answer is no, because actually we are very conservative and we are very safe play we are doing. Out of 25 gigawatt of my total vision for 2030, just only the 5 gigawatt is coming in, 5 gigawatt is coming in that capex model. Rest of the 20 gigawatt is in my EPC only, where I can manage my financials, both mix of 20 gigawatt of EPC plus 5 gigawatt of IPP, I can able to manage. That's not a big constraint as of now what we are looking at.
All right, so management has stated they are still preferring to play asset light and large amount of business. That's roughly around 80% in your target. It will be coming via EPC. So that's the clarification coming in from the management. But Mr. Rao, apart from this, Andhra Pradesh important order, the IPP order which has come in, that's a 2 gigawatt project coming in, and of course you have not mentioned that in the order book itself. The amount is on the higher side, that's roughly 9,000 odd crore if I'm not wrong. What are the key timelines for it? Just give us the entire expectations of this progress and by when the execution and the cash flows will start coming in.
Yeah, this is, we got the GIVA from the state government of Andhra Pradesh to set up a 2 gigawatt solar power plant. And right now, actually, how we will convert this 2 gigawatt, including BESS also, we are thinking, because actually we have not yet finalized the contracts with the off-takers. This contract is to set up a 2 gigawatt plant, for which actually we are in the process of pooling the almost around 8,000 to 9,000 acres of land in the state of Andhra Pradesh. And yes, you are right that actually this is the 9,000 crores investment is there, and in same time 9,000 crores order is going to come for our EPC arm also. Right now we are in the right path, that we are in the process of acquiring the land and even the connectivity. This power needs to be connected to the central grid, that is the CTL. We have identified the substations and we are in the process of getting the connectivity approvals. If these two things will happen, can happen in next 6 months, once it is two things are in my hand, then I will start bidding for this supplying of this power 2 gigawatt to the various people, like big data centers I can participate, or even public sector companies I can participate. But right now it is a staggered program. Maybe next 2.5 to 3 years time that we are going to complete.
Yes, Mr. Rao. Interestingly, Mr. Rao, there is a section of the community which invests in unlisted space also. There's a lot of interest because you have a lot of arms which are not listed yet. Are we going to see any value unlocking in the future, say in the next 6 to 18 months, any of your arms coming to the listed bourses or some mergers happening?
Of course, actually, all these three unlisted arms are extremely doing well, actually, than what is our expectations. Like our Bondada E&E Private Limited and Bondada Green Engineering Private Limited, even our Bondada EcoBuild Private Limited, all these three companies, even our Adpol Technologies Private Limited, all these three companies are doing pretty much better, good means much better than what we expected actually. All these four companies have the opportunity to unlock this value of these companies in maybe next 1.5 year to 2 years time. Maybe initially we will come with our bundled green engineering where we are manufacturing a lot of MMS structures and telecom towers, and thereafter one after one it will come. So the numbers are pretty good, and future outlook is looking very, very promising.
Well, that's pretty interesting on that. That means value unlocking coming in the next 12 to 24 months when it comes to the unlisted arm, and that's a key question being asked from the HNI community and even in the unlisted space as well. But moving on to the financials, you stated in the con call that the margins are expected to improve by 100 basis points in H2. What are the levers for that? Is there a cost reduction plan or there's something else?
No, as you all know that actually we have venturing into the small scale projects to the big scale projects. Now, whatever we have undertaken the projects which are very big at one single location, so that actually our overheads and other things can be optimized, number one. Number two, whatever the projects we commissioned so far, like 1 gigawatt and another 2.5 gigawatt of solar power projects under execution now, all these projects will come to the stage where actually we have to book the O&M revenues. Even our BSNL project O&M revenues also started. Basically, this O&M revenues, if comes at least 10 to 15% of O&M revenues adds to mixture of our total revenues, this O&M revenue comes with pretty good margins. Based on that, actually, we are expecting that actually another 100 basis points improvement and increase in our profit margins.
Mr. Rao, there has been an improvement in the working capital numbers. I was seeing the FY25 numbers and I compared them with H1 numbers. There has been a significant improvement coming in and across all the parameters. So this improvement in working capital, is this sustaining in H2 also? You're expecting that to happen? And if that happens, will we see the cash flows improving? Because they have been kind of volatile.
Yeah, EPC companies always this volatility is there, but definitely our focus is on collecting the receivables. Definitely we have very big targets, stringent targets are these collections, and we are on right track. So no problem in this working capital management. I think we have set this working capital, both fund limits and non-fund limits from the banks also till 2020, financial year 2026. And there's a huge focus on collections. I think the last 6 months or 7 months, actually, we have done very good collections from our receivables also.
All right. Thank you very much, Mr. Rao, for giving your views and clearing all the queries which we had for our viewers had written us to. But Bondada Engineering, looking at the key management takeaways from our conversation, 3 important things stood out. They are looking for more data center ecosystems for growth and give a lot of value-added services around this ecosystem. So the second important thing the management has stated is they are still playing safe on an asset-light model. They have stated that out of the 25 gigawatt target which they have given, 80% will be on the asset-light EPC segment. They will have a higher exposure. And the unlisted arms, that's what the street was looking out for. Value unlocking is expected in the next 12 to 24 months. There are 4 unlisted companies which the management had spoken about. So that's also something which is very important for the existing investors and the folks who are tuning into KYC. But that's all for today. Stay tuned to NDTV Profit.
There are a lot of investment theses out there, but Sameer Arora's Helios Capital believes that it's better to identify stocks that you should not invest in to find the portfolio that you should.
We don't like loss-making companies. So you have first eliminated.
What ideas are you actively actively staying away from in 2025 November?
When a new entrant comes, the market thinks it's competition. We think it is sanity. Fact that you reached an IPO stage is broadly you have survived. As a thumb rule, we give benefit of doubt to first quarter. The first quarter तो अच्छा होगा.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic.
Markets volatile ahead of Nifty monthly expiry. Nifty off day's low above the 25,950 mark. Sensex stays flat. Realty stocks rally while metals snap the two-day losing streak. Rupee remains volatile. US President Donald Trump says he had a good phone call with China's Xi Jinping, highlights extremely strong ties, says he plans to visit Beijing in April. A thick cloud of ash reaches Delhi after a volcano that was dormant in Ethiopia for 12,000 years erupts. Indigo, Akasa Air and SpiceJet said that their flight operations were hit. DGCA issues strict advisory. And the Prime Minister leads rituals at the second Pran Pratishtha in Ram Darbar in Ayodhya. This marks the completion of a new chapter for the Ram Mandir. Karnataka Bank soars in trade after Cupid CMD Aditya Kumar Halvasia buys 38 lakh shares. The shares have been bought at a 5.6% premium with deal valued at 7.1 crores. And what's the best way to craft a strategy for reasonable returns? And why is there a case to bet big on financials and IT? Listen into a Slice of Profits exclusive chat with Samir Arora straight from Helios headquarters in Singapore. Good afternoon. You're watching Markets at 12 with me, Hiral Dadia. Now, this is the show where we get you updates on the top buzzers and news updates at noon. But first things first, let's quickly take a look at what markets are doing at this hour. Absolutely directionless is what I would say, because see the kind of volatility that you're seeing. It actually managed to dip in the red. It's trying to make its way upwards and get to that 26,000 mark once again. But a pretty flattish day of trade is what you're seeing. Volumes are absolutely thin, and taking Nifty expiry into consideration, you will see this kind of action that will prevail as well. Let's quickly pull up Bank Nifty on the screens and see what that is doing in trade, and then we'll look at the sectoral heat map. A very similar chart of Bank Nifty is what you're seeing if you compare that to Nifty 50 as well, but slight outperformance with gains of 0.3% coming in on Bank Nifty as well. If you can have the sectoral heat map and then the Nifty heat map. Real estate, which was one of the top losing sectors yesterday, saw cuts of around 2%, has actually seen a bounce back today as well. 1.3% up move coming in there. You have the PSU Bank Index, which is in the positive. Healthcare and pharma also, which was in the negative yesterday. A couple of stocks like Dr. Reddy's, Lupin, Glenmark are the ones which are contributing to the kind of gains that we are seeing when it comes to the pharma pack as well. Metals, again, 0.5% up move coming in. You have JSW Steel, Tata Steel, these and Hindalco. These are the three majors on Nifty 50 which are actually supporting the metal pack in trade today. What's losing out? Media. IT again is seeing profit booking after that surge that we saw in yesterday's session, and it seems the comeback of IT in the US markets has not really enthused the Indian streets as well. FMCG continues the downtick in today's session, but marginal downtick around 0.2% is what you're looking at. Let's quickly look at all the stocks on Nifty 50, and then we look at the broader markets as well as to what they are doing in trade, because last couple of trading sessions have been really painful for the broader markets as compared to the large caps. Reliance Industries is firing in trade today. SBI is another one which is seeing some smart moves as well. What's losing out? You have Infosys, which is under pressure. SBI Life is one of the top losers in trade, so good profit booking coming in there. HCL Tech is another one that you should be watching out for. Let's look at the broader markets, the mid cap and the small cap index, and see what they are doing in trade. Pretty much similar, 0.2% higher on the mid cap 150, and if you have to look at small cap 250 as well, trading absolutely flat, trying to make its mark back in the green, though most part of the day so far it's remained in the red. But let's quickly shift focus to the newsmakers of today. Indian pharma majors, Dr. Reddy's and Lupin, both of them are stepping up their game when it comes to their ambitions in the biosimilar segment. And if you look at this segment as a whole, they've constantly said that this is going to be the major growth engine for both of these companies. Let me get in my colleague Varsha, who joins us with more details. Varsha, both of these companies, it's a biosimilar push that's actually supporting the stocks today. What are you picking up, and what is the latest development?
Yeah, exactly, Hiral. So biosimilar, as you rightly said, would be the next leg of growth for these companies and for overall pharma companies, I would say. Talking about Lupin, the complex generics and the specialty portfolio will form overall 70% to FY30 revenue, which will inch up margin for them. Talking about the product strategy when it comes to US, they're going to double their share of complex products, and they're going to continue investing when it comes to R&D, and over 50 product filings are planned, which includes your respiratory complex injectable biosimilars. Talking about the biosimilar pipeline, almost 4 to 5 products are expected in next 2 to 3 years, say in your oncology, in your ophthalmology, and also in the bone density as well. Talking about the US business outlook by FY27, they're expecting $1 billion of US revenue, and the biosimilar will meaningfully start contributing to the US revenue by FY27, and they target 5 biosimilars in US market by FY30. Overall, if you see, the margin that they're expecting is around 24 to 25%. Even Jefferies is bullish when it comes to Lupin on the back of biosimilar business. Talking about Dr. Reddy's, they have entered into a blockbuster market, which is a major revenue potential for this company. So the recent news for Dr. Reddy's, the European Commission has approved one of the biosimilars, AVTO3, which is a biosimilar of Progelia and Exiva, and the approval is valid across EU and US. The estimated size of the original drug stand at around $5
$5 billion when it comes to FY24, so huge potential there. And what does these drugs treat? So they treat bone complication when it comes to advanced cancer, and Dr. Reddy's has also done partnership with Alvotech, wherein Alvotech will develop and manufacture this product, while Dr. Reddy's will register and commercialize is in US and Europe, for which US they've got exclusive rights and semi-exclusive rights when it comes to UK. Even recently, Dr. Reddy has also done licensing agreement with Alvotech for one of the biosimilars which is used to treat cancer, and the estimated size of that product is $29.5 billion. So overall, you can see from the market size that biosimilar will be next leg of growth for these companies, but because of the pricing pressure in biosimilars, all these companies into biosimilars may face some pressure when it comes to margin. But overall, yes, the next leg of growth for all the pharmaceutical company will be biosimilar at large.
Okay, so strong moves coming in on a Dr. Reddy's and Lupin. But what's happening with a Glenmark? Because that stock is in focus as well on the back of a launch, and this is a world first COPD treatment which introduces a triple medicine therapy delivered through a nebulizer. Varsha, what does this mean for a Glenmark and for the patients as well?
So overall, if you see, so they've combined 3 drugs into one nebulizer. Now, how this will help? So this opens airways, reduce swelling, and improves breathing, and help patients who struggle with inhalers. So overall, this is the first company to come up with this product wherein 3 drugs are used to make one nebulizer. Now, why this is important? Because first ever time these 3 medicines are available together, and this makes treatment easier for the patients and can become a new standard of care. Now, this launch shows Glenmark's focus on innovative and affordable respiratory care, and also they say that this will make advanced treatment more accessible. So overall, yes, a positive note, because a single company who is making this nebulizer for the patients who are suffering from, or rather who cannot use inhalers or find difficulties using inhalers.
Okay, so 3 stocks that are buzzing in trade today. In fact, Aurobindo itself also is up in trade, and these are the 3 to 4 counters that are providing support when it comes to the pharma index as a whole. Thank you, Varsha, so much for that. But moving on to a stock that is in the spotlight, Bharat Electronics, one of the top losers in yesterday's session. In fact, last couple of trading sessions have been really weak for this counter. If you pull up even a 5-day chart of Bharat Electronics, that will tell you what's happened to that one. In the last 1 month, that's a 3% downtake. The volatility has been extremely high when it comes to defense companies. But today, it's seeing some bit of buying interest which has come back. And this is because they formed a JV with a France-based company for Hammer. Now, what is Hammer? Why is this important? Let me head across to my colleague Mahima for all the details. Mahima, what are you picking up? The stock is at the day's highest levels, and it seems the joint venture that they've formed with a French company would be working for them from a long-term perspective.
Yeah, absolutely, Hiral. It seems like that, just to give viewers a brief about what this JV is, as you rightly mentioned, it's a French company called Safran Electronics and Defense. So they've inked a JV together. The agreement is for production of Hammer Smart Precision Guided Air-to-Ground Weapon in India. It will be a 50-50 JV between the both of them. What is Hammer? Well, it's a precision guided weapon system, adaptable to multiple platforms, and including Rafale as well as light combat aircraft Tejas jets as well. In terms of significance of this particular weapon, it will localize the manufacturing, supply and maintenance of Hammer. Through this, indigenized level will increase to up to 60%, reducing import dependence for India. So it will, push forward the ideology of Atmanirbhar Bharat. Key sub-assemblies, electronics and mechanical parts will be manufactured locally and will allow phased transfer of production technology from Safran to BEL. Now, the full form of this Hammer basically is highly agile modular munition. Just to give you a brief about the guidance also that BEL has for FY26, they expect a 15% revenue growth, margins at 27%, capex more than 1,000 crores is what they've planned in FY26. Defense non-defense mix will be 90% and 10%. Order inflows excluding the QR SAM at that 27,000 crore, and overall 57,000 crore of inflow is what they're looking at. So this is the overall view of what this JV means for BL and what the outlook looks like for the company.
Thank you so much, Mahima, for that. So BL, the stock is at the day's highest levels as we speak. But moving on, real estate as a pack is in focus as well. In fact, Anant Raj is buzzing away in trade after a strong second quarter momentum. In fact, my colleague Neeraj also spoke to the management, Amit Sareen, managing director at Anant Raj, about the second quarter performance and how the company plans to sharpen its focus on data centers that will drive the next leg of growth. The stock trading at the day's highest levels. Let's quickly listen in to what the management had to say.
See, we should be able to, right now the MOU has come in place, the things are moving in very fast, and by this financial year, by the end of this financial year, so by March 26, we would zero in on the land will be with us, thanks to the government, and then we start our work. So before Andhra Pradesh starts kicking into the numbers of the actual data center, is going to be about 3 years.
Okay, so 3 years is the gestation period when they're talking about data centers as a business as well. But good momentum coming in on Anant Raj in trade today. Moving on, let's look at the sector as a whole now, because Nifty has continued to underperform with several top developers posting steep YTD corrections. A couple of reasons which are not really working in favor of real estate as a sector in spite of that bounce back that we are seeing in today's session. It's important to highlight all the concerns as well. And my colleague Anushi is standing by to tell us more in terms of how has the past underperformance been so far and what are the factors that the investors and the street is worried about. Over to you, Anushi.
There are a lot of investor concerns which are outweighing some of these benefits that we are mentioning about interest rate cuts or even with the GST rationalization that has taken place. In fact, first, let's take a check in terms of how the index has done in comparison with Nifty 50. So while Nifty 50 has majorly remained flat in this 1 week to 1 month period, Nifty Realty has corrected over 5 to 7% in these two time frames. In fact, if you take the year to date into account, 15% is the kind of correction that we are looking for Nifty Realty, making it one of the worst performing index for this particular year versus an uptick of around 9% that we've seen for Nifty 50. Now, what's leading to this concern and which are some of these stocks which have relatively underperformed? Puravankara and Arvind Smart Spaces have seen major correction. And we are looking at a stock price decline of around 35 to 36% for both of these counters. In fact, the other players also, that's on the luxury side where the outlook is relatively better. Even see something like a DLF, Lodha Developers or Prestige Estates, there's correction across the board that we are looking at with Godrej Properties and Oberoi Realty also 26% to 29% of correction being seen for this as well. While for the mid-income space, that continues to underperform even the luxury players that are there. But let's understand and let's decode what are these major concerns. So if you look at the concerns now, pre-sales growth this time was majorly driven by sustained sales. So there was like a lack of new launches which had taken place. In fact, we can see this in the launch volumes itself, which were down about 61% year on year for top 15 of these developers which were there. This is on account of higher housing prices also that we've looked at. Post-COVID, there's been a substantial surge in terms of where the pricing growth has been concerned, which has hurt the affordability index as well. Now, the most recent concern for the street is also the labor costs, which are expected to rise about 10 to 15% due to the new labor code which is in effect, which will lead to a 3 to 4% of an uptick in terms of overall development cost for these real estate players also, which will then impact the profit margins. But if you talk about the outlook ahead, luxury and ultra luxury continue to drive the value growth momentum that we are seeing. It's not the volumes that we are speaking about, it's value that we are talking about. In fact, there's a strong expectation of a healthy launch pipeline. This is from the second half that we are looking at, and this is a critical piece in terms of some bit of recovery for these real estate players that we are looking at. 18 to 20% is still the growth expectation that the street has penciled in for FY26.
We have Prime Minister Narendra Modi who's speaking in Ayodhya at the Ram Mandir. Let's listen in.
राष्ट्रीय स्वयंसेवक संघ के परम पूजनीय सरसंघ चालक डॉक्टर मोहन भागवत जी, उत्तर प्रदेश के मुख्यमंत्री योगी आदित्यनाथ जी, श्री राम जन्मभूमि तीर्थ क्षेत्र ट्रस्ट के अध्यक्ष पूज्य महंत नृत्य गोपाल दास जी, पूज्य संत समाज, यहां पधारे सभी भक्तगण, देश और दुनिया से इस ऐतिहासिक पल के साक्षी बन रहे कोटि कोटि राम भक्त, देवी और सज्जनों, आज अयोध्या नगरी भारत की सांस्कृतिक चेतना के एक और उत्कर्ष बिंदु की साक्षी बन रही है। आज संपूर्ण भारत, संपूर्ण विश्व राममय है। हर राम भक्त के हृदय में अद्वितीय संतोष है, असीम कृतज्ञता है, अपार अलौकिक आनंद है। सदियों के घाव भर रहे हैं, सदियों की वेदना आज विराम पा रही है। सदियों का संकल्प आज सिद्धि को प्राप्त हो रहा है। आज उस यज्ञ की पूर्णाहुति है जिसकी अग्नि 500 वर्ष तक प्रज्वलित रही। जो यज्ञ एक पल भी आस्था से डिगा नहीं, एक पल भी विश्वास से टूटा नहीं। आज भगवान श्री राम के गर्भगृह की अनंत ऊर्जा, श्री राम परिवार का दिव्य प्रताप इस धर्म ध्वजा के रूप में इस दिव्यतम भव्यतम मंदिर में प्रतिष्ठापित हुआ है। और साथियों, ये धर्म ध्वजा केवल एक ध्वजा नहीं, ये भारतीय सभ्यता के पुनर्जागरण का ध्वज है। इसका भगवा रंग, इस पर रचित सूर्य वंश की ख्याति, वर्णित ओम शब्द और अंकित कोविदार वृक्ष राम राज्य की कीर्ति को प्रतिरूपित करता है। ये ध्वज संकल्प है, ये ध्वज सफलता है, ये ध्वज संघर्ष से सृजन की गाथा है, ये ध्वज सदियों से चले आ रहे स्वप्नों का साकार स्वरूप है। ये ध्वज संतों की साधना और समाज की सहभागिता की सार्थक परिणति है। साथियों, आने वाली सदियों और सहस्त्र शताब्दियों तक ये धर्म ध्वज प्रभु राम के आदर्शों और सिद्धांतों का उद्घोष करेगा। ये धर्म ध्वज आह्वान करेगा, सत्यमेव जयते नानृतम, यानी जीत सत्य की ही होती है, असत्य की नहीं। ये धर्म ध्वज उद्घोष करेगा, सत्यम एक पदम ब्रह्म सत्य धर्म प्रतिष्ठित, अर्थात सत्य ही ब्रह्म का स्वरूप है, सत्य में ही धर्म स्थापित है। ये धर्म ध्वज प्रेरणा बनेगा, प्राण जाए पर वचन न जाही, अर्थात जो कहा जाए वही किया जाए। ये धर्म ध्वज संदेश देगा, कर्म प्रधान विश्व रची राखा, अर्थात विश्व में कर्म और कर्तव्य की प्रधानता हो। ये धर्म ध्वज कामना करेगा, बैर न विग्रह आस न त्रासा, सुख।
So that's a new era of Satyameva Jayate. That's what Prime Minister Narendra Modi is talking about at Ram Mandir in Ayodhya. But shifting our focus to a new launch in the auto space when it comes to powertrains, the new Tata Sierra is set to debut Tata's 1.5-litre turbo petrol engine, and this unit is set to deliver around 170 horsepower and 280 Nm with both manual and automatic transmission options on offer. Let's cut across to the event where the launch is taking place.
Like we were describing, it's not just any ordinary product, it's just not any SUV, it's an idea. It's something that stands for a set of principles. So when we talk about what the Sierra is, it's good design. But as we've said, good design is everywhere. The level of fidelity that our competitors and our customers expect is extremely high. So what is the differentiator? Good design is no longer, I would say, a USP. It's a standard. So the differentiator is the emotional connection. It's the way people perceive this vehicle that sets it apart from any other vehicle. Now, if you want to connect emotionally with the customers, a good way to do it is what we did, is to mine our heritage. Obviously, certain programs and products transcend their own existence. And the original Sierra did this more than any other in our portfolio's history. It became a cult car. It stood for something, an idea of what it represented to that generation of people. Of course, in 1991, what did the original Sierra represent? It was an avatar for a whole generation in terms of what India could be, what Tata Motors represented. It was freedom. It was an idea, it was an aspiration in terms of a whole generation of what it could be. Now, obviously, the original Sierra had a lot of iconic elements to it. The glass house, a very stable classic design, which was all horizontal, very confident, and at the same time, a simple, bold identity that really became timeless over the years. So when we started to do the new car a couple of years ago, it was a set of principles and ideas. This is not a retro design. This is a car that captures the spirit of the original vehicle, but translates that into a modern contemporary vehicle that meets the demands of the customers for this generation. Of course, the people who remember the original car will see the original ideas in this new one, but for a new generation, it re-represents those ideas that become timeless. Now, design is a long exercise. It's a group effort, and in many ways, that original sketch is an exercise of 2 hours, and then there's probably 2 years worth of work behind it. So we always say that good design is 1% inspiration and 99% perspiration. It's to create an iconic design. It's to create something that has cross-generational appeal, and I always say, it's all in the details. It's a relentless pursuit of perfection. It's the hard work. As I was coming onto the stage here, I looked across all of my colleagues, not just in design, but in all the departments, and I thought about so many discussions and debates, over the development of this product that were important, essential. It's the culmination of everybody's work. But I would particularly like to point out and acknowledge the work from our design team, especially our Indian design team. So if you guys could just stand up, just to take a bow, because it's the work. It's the work of this group of people who were extremely passionate about their work, but it's also the work of all of our other colleagues in the other departments. We had a lot of, like I said, discussions and debates, some of them a little bit hot, but nevertheless, it was all worth the effort and the result.
You know, so that's interesting because it's the Tata Sierra which is back. And, you know, the interesting commentary that I read over here was that this is a philosophy which, you know, resonates with India today. And that's the reason why Tata has bought the Sierra back. Let's see what the sales looks like, because it's going to be a cult car that the street is watching out for. But completely out of time. With that, it's a wrap on this edition of the markets at 12. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
There are a lot of investment theses out there, but Sameer Arora's Helios Capital believes that it's better to identify stocks that you should not invest in to find the portfolio that you should.
We don't like loss-making companies. So you have first eliminated.
What ideas are you actively staying away from in 2025 November?
When a new entrant comes, the market thinks it's competition. We think it is sanity. Fact that you reached an IPO stage is broadly you have survived. As a thumb rule, we give benefit of doubt to first quarter. The first quarter तो अच्छा होगा.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका काम किया आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका काम किया आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it.
Welcome, you're watching NDTV Profit. This is Profit Buzzers. I'm Mahima Vacharjani, and with me is Varsha. Let's take a quick look at the markets before we go on to everything that we've planned for you on today's show. In terms of where the markets stand right now, the Nifty 50 has come down below the 26,000 levels. It was just a touch and go where it did see gains of about 20 points for that 26,000 levels. Now trading absolutely flat for the Nifty right now. The Bank Nifty also, if we can try to pull that up and see as to what that is looking like in trade, the Bank Nifty is trading around 0.03% higher, so flat for the Bank Nifty as well. Let's try to pull up the Nifty 50 constituents to see as to what counters are buzzing in trade today. You've seen counters like BEL topping that chart up 2%, as well as Dr. Reddy's, SBI, Hindalco, all names in the green and flying in trade. But counters like SBI Life, Infosys, HCL Tech, some IT names not doing fairly well in trade today. Let's try to pull up sectoral heat map and see as to what sectors are gaining today. You have your Nifty Realty still topping that chart, up 1.3%, followed by something like a PSU Bank, Nifty Pharma, Nifty Healthcare. Nifty Pharma largely led by counters like Dr. Reddy's, Glenmark Pharma as well. But something that's not doing well is Nifty IT today, down by about 0.8 odd percent. Nifty Media also down by about 0.8 odd percent. You have your private banks which are in the red today, against your PSU banks being in the green. You have your consumer durables also under pressure. FMCGs largely flat. Let's try to pull up the advanced decline ratio. It was in the favor of the bears since the start, but while the gap was widening during that 10:30 or 11 odd AM, the gap has now narrowed down. You have around 1,300 odd advances versus that of 1,000 odd decline. So that ratio is 1.3:1. Let's try to pull up the constituents on the BSE 500 to see as to what's changed there, because some of these have turned red in a big way. You have AWL Agri, of course, on the back of the block deal happening. Your ITI, where profit booking is happening. Rights, Honeywell Auto, ACC, as well as RCF, all down by about 3 to 4% each. You have Orient Electric, which is up on the flip side, almost 13%. Craftsman Auto, Anupam Rasayan, Latent View, as well as Rallis and HEG, all up by about 12 to 5% each. So these are some of the names that are buzzing in trade today. But with that, let's also welcome in Prashant Apse, Senior VP Research Analyst at Mehta Equities, joining us now. Prashant, hi, a very good morning to you. Overall, now that we are done with Q2 earnings, just want to get a sense, any particular trend that you've picked up in Q2 that you think is here to sustain post Q2 and will be something that you'll see coming up in Q3 or Q4?
I think, yes, good afternoon, everyone. So I think auto sector is going to continue the mood what has presented in Q2 earnings. They have really performed well, I think, like M&M as well as Maruti, or the two-wheeler segment like Bajaj Auto. I think this segment can do well continuously for even Q3 as well. So that is one sector which I am getting a lot of confident due to the GST cut, which is directly benefiting the auto sectors. Rest other sectors are still under pressure. I think the miss out of earnings in Q2 is a reason why the stocks have been underperforming.
Okay, all right. So that's with regards to where the Nifty Auto is concerned, and that's where Prashant is bullish on, Varsha.
Yeah, actually, and sticking to that, let's see what Ather Energy is doing. Let's pull out that chart also, because has quietly hit a major milestone, which crossing 5 lakh cumulative sales, which was backed by steady growth, rising market share and sharply improved financial picture this fiscal. The company is now the third EV scooter player which has strengthened margins and is gearing up for its next big expansion with new platforms, new stores and the way. To break down the sales trajectory, market share shifts and what analysts are saying, let's go across to Puneet. Puneet, what are you picking up when it comes to Ather Energy?
Well, thank you for that. It's definitely been a stellar performance over the last few years. 5 lakh sales mark, as you rightly said, but 98% of all those sales have just come in the last 4 years. It reflects the strength that Ather has shown in this particular time frame. It's also got listed in this year, so it has that additional, pivot also now as a listed company to show that performance. So when you look at the last 3 to 4 years in terms of sales, they were just at 23,000 odd units in FY22. Which has now grown by almost 6.5 to 7 times to almost 1.4 lakh units that they've sold in, for this for FY26 year to date. So they've already crossed the milestone what they did in the whole of last year. So the next few months will be very interesting for Ather at this point of time. When you also look at the market share, and it's been a steady gain since April. They were the number 4 player at that particular point of time with intense competition with Ola at 14%. But in October, they hit a 20% market share mark. 1 in 5 scooters sold in India in the month of October was that of an Ather, and now firmly in the top 3 positions. So when you look at the market share over the last few months, Ather has gone from being the number 4 player at roughly about 14% market share to almost 20% in the month of October, and now it's a 3-way between Bajaj, TVS as well as someone like an Ather, while Hero has also been increasing its share. Ola is definitely a laggard in this particular point of time. So it gives you a competitive positioning of where the EV two-wheeler market lies right now. When you also look at the financials, that has also improved materially over the last 3 to 4 years. They were at EBITDA margins of almost 37% on the negative side. That has improved to negative 17% in the first half of FY26, and that is giving the confidence to a lot of brokerages as well. 5 of them cover the likes of Nomura, MK amongst others, and all 5 have a buy call on it. We'll just get to that in a bit, but when you look at the overall market share as well, while overall they are at roughly about 17% in the market share, the company actually gives out each region that they do well in, and surprisingly they are at almost 25% in South India, something that TVS is actually holding very strongly. So middle and rest of India, they are opening a lot of new stores, so you will see that incremental market share go up in those states, but it's a very interesting stat that the company puts on. But what's ahead though? This is all in the past. They have mentioned 2 new platforms. The EL will be for the scooters, and 3 new models expected to launch in the next 18 to 24 months on this platform. And the Zenith, which is an EV motorcycle platform as well, will be a key one. Brokerages, as I rightly said, 5 of them currently have a buy call on this, and all 5 expecting a return potential of 15 to 18%. So that's the lowdown on Ather Energy. It's stock you need to have on your radar going forward.
Well, thank you so much, Puneet, for all the details. Well, Prashant, your view when it comes to Ather, because also wanted to know the risk and headwinds that investors should keep an eye on when it comes to this company, and overall your view, should investor chip in or they should sell this stock? What is your view overall?
So when we compare 2 major players in the EV segment, Ola and Ather, I think what went wrong with the Ola has been very much positive for Ather. The product quality, the management, performing well in terms of their promises, what they have given post their IPO, and the financials which are slowly improving to a better margin improvement. I think next financial year there will be something like EBITDA positive going forward. So that is the one positive thing. But what risk one should understand at this point of time again? See, the losses are still very continuing. So obviously the way they are making their market share, so there can be some kind of pressure for in the PAT level for next 1 or 2 quarters. So that would be the one risk for the market. Overall, the traditional players like TVS, Bajaj Auto, they are also doing very good in terms of their EV sales as well as their traditional sales. So competing with the traditional two-wheeler company would be a major risk for Ather. If you compare Ola and Ather, I think Ather will do very well in terms of long-term outlook from the current levels.
Okay, all right. So that's with regards to where Ather Energy is concerned. The stock is up 113% since its listing. But moving on, some of the stocks that are making news are Siemens Energy on the back of its earnings, Sudarshan Chemical, as well as Vedanta. And my colleague Jasmeet joins us to give us more details as to why these stocks are buzzing. Jasmeet?
Well, Red, thank you for that. Starting off with the Siemens Energies first. If you look at the overall picture of the company's financials, there's a strong set of numbers coming in for the company, though the margins have remained muted. On the other hand, company also records a new order stable at 2,351 odd crores. While if you look at the overall order backlog, it's up nearly 47%. That's to 16,000 odd crores. Looking at the key numbers, the revenue is up by 27 odd percent, while the EBITDA has also expanded on the back of better operational efficiency. While if you look at the net profit, it's up nearly 31%. If you look at the next stock on my radar, that's Vedanta. While Vedanta's parent company has filed for a subsidiary IPO in the US. Now this particular company is Copper Tech. Now what this means for Vedanta is basically the money is likely to be used to fund one of the copper mines, and this will reduce the overall impact where the Vedanta group was supposed to merge with the Vedanta. So this reduction in the risk is creating an overall positive sentiment in the market, and overall the funding raised to this IPO will be used in further copper mine as well. Now all in all, the stock is buzzing on the similar news. If we look at the last stock on my radar, that is Sudarshan Chemicals. Well, the company has launched a new chemical, and that's what's leading the stock to buzz in the market. While the chemical is Sudaprem Yellow, while this particular chemical is used for pigment coating applications.
All right. Okay, Jasmeet, thank you so much for getting us those details. Prashant, I'll come to you on Siemens Energy. Prima facie, it looked like the earnings were good. I'm not sure what the street is not enthused with. Probably it's the order backlog which is piling up for them. Is that the correct reading, or there's something else in the fine print?
I think obviously the business model is based on the order book increment. So there is some kind of lag in the order book levels. But I think it was clearly expected by the markets at this point of time, the way how the industry is moving towards in the energy sector. But again, looking at the numbers, slightly under pressure in terms of EBITDA. But again, it's a excuse for the markets to take some kind of negative action. I think valuation-wise, bits expensive at this point of time. The expectation of earning growth was very much high, and the numbers were not so good. So that is the reason why 3 to 4% of fall is given today in the market.
Understood, Prashant. Thank you for that view. Well, moving on, margin as a tech company will always be going to improve due to the operating leverage, says Harsh Jain, who is co-founder and COO of Grow. He also highlights that overall 90% of the cost is fixed cost. And do listen into that conversation, what he has to say about overall.
Overall, we operate like a tech company, right? And there our costs are very, almost every cost that we have, 90% of it is a fixed cost. Say cost to grow, cost to serve, cost to operate. All those three things are pretty much fixed. Almost 10 to 12% is a variable cost. So whenever we'll see the growth, which will keep on happening because of the new customers coming in and the new products we launch, the revenue goes up and the cost doesn't go up. So the margin will, as a tech company, it will always keep on improving.
Right. Prashant, what is your view on Grow, and what investors should do when it comes to this counter?
I think investors should continue to hold this company as a portfolio stock, as a proxy for Indian capital markets. The way the market share is about 26% in the current levels, I think that will drive the capital market as an index or all the markets. So overall, with respect to the performance, even the earnings which they have reported very soon was very much expected. I think 140, 150 level can be a good level to even accumulate more at this point of time. But as a portfolio stock, it should be a long-term investment.
Okay, all right. So that's the view with regards to where Grow is concerned. But moving on, Paras Defence is the counter that is in focus, and this is on the back of the MOU with Inter-University Accelerator Center that it has done. This is to develop commercial grade MRI magnet systems. MOU is for indigenous manufacturing. The MOU is to make sure that this happens in India, and India is self-reliant when it comes to superconducting MRI magnet tech. Just to give viewers a brief about what the forward outlook is for the company, it expects 40% revenue growth in FY26. It maintains or expects to slightly do better in terms of profitability in FY26 and expect order inflows of around 1,000 to 2,000 crore overall by the end of FY26. The order book pipeline of 2,000 to 3,000 crore over the next 18 to 24 months is what they're aiming at. So that's with regards to where Paras Defence is concerned. The other one in focus remains is BEL. It's entered into a joint venture agreement. This is with a French company called Safran Electronics and Defense. The JV is basically to make Hammer smart air-to-ground weapons in India. The JV is to be formed with a shareholding of 50% each. Just to give viewers an understanding of what Hammer is, it's basically a precision-guided weapon system adaptable for platforms like Rafale as well as light combat aircraft Tejas. This basically the significance behind this is that it will localize manufacturing, supply as well as maintenance of Hammer at an indigenous level, and this will rise up to 60%, reducing our dependence on import, and will manufacture electronics, mechanical parts locally. This will be phased, of course, in different segments, and transfer production and technology from Safran will take place in a phased manner. Now, just to give viewers a brief of guidance that the company has given for FY26, they expect 15% revenue growth, margins at 27%, capex of more than 1,000 crore is what they've planned. Defense to non-defense mix will be 90% and 10% each. Order inflows excluding the QR SAM at 27,000 crores, and overall inflows of 57,000 crore is what the company is expecting. Prashant, your view with regards to both of these defense counters, Paras Defence and BEL, and if any other counter that you're liking in that space?
I think BEL is the one stock one should focus more on, the way they are getting into a lot of new defense and other engineering equipments. to make sure that will be a great validation for their top line as well as on the greater margin improvement. So I think in the defense sector, we continue to like Bharat Electronics on the valuation wise, again on the back of their order book as well as their improvement in the EBITDA margin. So I think overall the sector looks very strong for us, but again it should not be a trading opportunity. It should be a buying opportunity for a long-term investor.
Well, thank you, Prashant, for that view. Moving on, let's see what Glenmark Pharma is doing in trade, because Glenmark has launched a world's first medicine, a triple medicine in one, which is given through a nebulizer. The stock is up almost 2.24% on the back of this. The product, if you see, combined 3 drugs, and this helps open the airways, reduce swelling and improve breathing, and help patients who struggle with inhalers. Now, why this is important, because this is the first time ever that these medicines are available together in a nebulized form and make treatment easier and simpler for patients who have chronic obstructive pulmonary disease. Also, if this become this could become a new standard of care. So overall, if you see 3 drugs in one, I would say, nebulized form, which is what Glenmark will be doing, and this is why the stock is up almost 2 to 3%. Next on the list is Dr. Reddy's. If you see, let's pull up that chart. Let's see what that counter is doing in trade today, because this is up almost 2% in trade, because it got approval from European Commission, which they've approved the drug, which is AVT03, which is a Dr. Reddy's biosimilar drug of Prolia and Exiva. Now, this approval is valid across EU and EEA countries, and this follows a positive European opinion in September 2025. The estimated size of original drugs, that is, Prolia and Exiva, stand at around $5 billion in 2024. That's the kind of opportunity that the company is eyeing on. And what these drugs treat is, one is, so they treat a bone complication from advanced cancer. Also, Dr. Reddy has done a partnership with Alvotech, wherein Alvotech will develop and manufacture AVT03. Now, Alvotech is nothing but a global biosimilar company. Dr. Reddy will register and commercialize in the US and Europe, wherein they've got exclusive rights for US and semi-exclusive rights when it comes to Europe and UK. So overall, a big positive when it comes to both of the pharma companies, and that's the reason why the stocks are up. Prashant, your view when it comes to Dr. Reddy's and Glenmark Pharma, any view on that? What should investors do? Because if you see the biosimilar, wherein the Dr. Reddy's have got the approval, is the next growth driver, I would say, for many pharmaceutical companies. You say the likes of Lupin or Aurobindo or Biocon, and of course Dr. Reddy's. So what is your view when it comes to these companies? And if not Dr. Reddy's, what would the other companies that you would advise to investors?
I think among these two, Glenmark looks very good for me at this point of time. The way the new product which is going to be introduced for the nebulizer segment, I think that would create a lot of big market for Glenmark, and that is not available in India right now. So they will be the market leader for that kind of segment. And I think with respect to valuations, with respect to the segment growth, I think Glenmark can do better when we compare with the other pharma companies. Even Dr. Reddy's looks very good for me at this point of time. The way they are expanding their product portfolio into the new segments, that will also create a lot of buzz in the market. But right now, the overall I would be on the clarity on the US and India deal, which will give a lot of clear picture for the whole sector to grow faster than what we are expecting. So even the Q2 earnings were not so good for Dr. Reddy's, but again, I think once the clarity comes out from the US and China deal, so there will be good Q3 earnings for both the companies.
Okay, all right. So that's with regards to where these pharma companies are concerned. But moving on to the realty space. Now, though the Nifty Realty is the top sectoral gainer today, the index continues to underperform, with several top developers posting steep YTD corrections. Pre-sales momentum has softened and new launches have dropped sharply, and affordability pressures are weighing on the overall sentiment. Anushi joins us with more details as to what's happening in the space exactly. Anushi?
There are a lot of investor concerns which are outweighing some of these benefits that we are mentioning about interest rate cuts or even with the GST rationalization that has taken place. In fact, first, let's take a check in terms of how the index has done in comparison with Nifty 50. So while Nifty 50 has majorly remained flat in this 1 week to 1 month period, Nifty Realty has corrected over 5 to 7% in these two time frames. In fact, if you take the year to date into account, 15% is the kind of correction that we are looking for Nifty Realty, making it one of the worst performing index for this particular year versus an uptick of around 9% that we've seen for Nifty 50. Now, what's leading to this concern and which are some of these stocks which have relatively underperformed? Puravankara and Arvind Smart Spaces have seen major correction. And we are looking at a stock price decline of around 35 to 36% for both of these counters. In fact, the other players also, that's on the luxury side where the outlook is relatively better. Even see something like a DLF, Lodha Developers or Prestige Estates, there's correction across the board that we are looking at with Godrej Properties and Oberoi Realty also 26% to 29% of correction being seen for this as well. While for the mid-income space, that continues to underperform even the luxury players that are there. But let's understand and let's decode what are these major concerns. So if you look at the concerns now, pre-sales growth this time was majorly driven by sustained sales. So there was like a lack of new launches which had taken place. In fact, we can see this in the launch volumes itself, which were down about 61% year on year for top 15 of these developers which were there. This is on account of higher housing prices also that we've looked at. Post-COVID, there's been a substantial surge in terms of where the pricing growth has been concerned, which has hurt the affordability index as well. Now, the most recent concern for the street is also the labor costs, which are expected to rise about 10 to 15% due to the new labor code which is in effect, which will lead to a 3 to 4% of an uptick in terms of overall development cost for these real estate players also, which will then impact the profit margins. But if you talk about the outlook ahead, luxury and ultra luxury continue to drive the value growth momentum that we are seeing. It's not the volumes that we are speaking about, it's value that we are talking about. In fact, there's a strong expectation of a healthy launch pipeline. This is from the second half that we are looking at, and this is a critical piece in terms of some bit of recovery for these real estate players that we are looking at. 18 to 20% is still the growth expectation that the street has penciled in for FY26. Regulatory overhang also, which was a major concern in FY25, which has also led to this correction that we've seen in the first course of the year, is now largely behind, especially for the south-based players. So that is on the positive side that we are looking at. Sales volumes across key cities, however, may stagnate and may not exceed 4% growth is what we are seeing. So volume picture continues to be an overhang for the overall real estate space, but let's see how they've performed against the guidance. DLF continues to lead the pack, 75% of it achieved in the first half itself, while Prestige Estate and Godrej Properties also had a relatively strong H1. H2 to be stronger for Godrej Properties going forward as well. When Lodha Developers had a muted H1, they expect strong launches in third quarter, so that is one factor that we should be watching out for. However, in the mid-income, or rather the affordable side, Signature Global and Arvind Smart Spaces have not done so well. In fact, we've seen about only 37% of guidance being achieved, but they have still maintained their FY26 guidance, so that is a critical piece that we should be seeing. So that's the overall perspective that we have for real estate for now.
Okay, Anushi, thank you so much for bringing us those details. Quite a comprehensive link, Prashant, on that real estate segment. Just want to get a sense, like Anushi was mentioning in the link, a lot of these counters are still, far away from where their FY26 targets are set. What's the view like for the entire space, and any particular counter that stands out for you?
I think the worst is behind us right now. The way how H1 has been performed for the real estate sector, I think the expectation of lower sales in terms of pre-sales as well as new launches has been totally discounted in the price correction what we have seen from last few months. So I think in this space, I think Godrej as well as Prestige, these two counters looks very good for me with respect to their price correction as well as their target reaching for the next 3 to 6 months. So I think overall these two stocks can continue to do better, and the valuations looks very attractive at this point of time.
Right. Thank you for that view, Prashant. Well, moving on, Chief Economic Advisor V. Anantha Nageshwaran says India's economic engine continues to fire as the economy stood at $3.9 trillion at the end of March 2025. But he also strikes a note of caution, warning that global geopolitics is in a huge state of flux. Listen in to what he had to say.
The economy already sort of crossing the $4 trillion mark in the course of the current financial year. We were at $3.9 trillion at the end of March 2025. And geopolitics is in a huge state of flux. There is a lot of discontinuity. And economic growth is a very vital prerequisite not only for delivering prosperity but also maintain our standing and leverage in the global scheme of things. So I think whatever we do with respect to greening the economy, energy transition, environment, dealing with climate change and climate volatility have to be aligned with our priorities both in the near term and the medium term. As a country, we do take climate change seriously. We are well aware of the potential consequences of global warming and climate change, and more generally for agriculture, environment, and coastlines, etc.
Well, viewers, time for a quick break. We will be right back. Lots more lined up on the other side. Stay tuned to NDTV Profit.
There are a lot of investment theses out there, but Sameer Arora's Helios Capital believes that it's better to identify stocks that you should not invest in to find the portfolio that you should.
We don't like loss-making companies. So you have first eliminated.
What ideas are you actively staying away from in 2025 November?
When a new entrant comes, the market thinks it's competition. We think it is sanity. Fact that you reached an IPO stage is broadly you have survived. As a thumb rule, we give benefit of doubt to first quarter. The first quarter तो अच्छा होगा.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Thank you so much for staying tuned in. You're watching Profit Buzzers on NDTV Profit. Let's take a very quick look at the markets. And in terms of the sectors that are leading the way, there's of course realty that is in good shape right now, 1.5% uptake coming in as far as realty is concerned. And in terms of the other sectors, there's PSU banks, pharma, defense.
metal that are also on the front foot. What's not doing so well is media, IT, oil and gas, exactly in that order. Those are your top sectoral laggards as well, and that's something that you're looking at. And in terms of BSE as well, let's also take a very quick look at that counter, because you do have that particular counter where the shares have nearly rallied 15% in the past month. 1% uptick is something that it's holding on to right now, outperforming the broader mid-cap index. On a 1 month basis, the move has largely been driven by a strong second quarter print. And you do have record top and bottom line performance as well that you're looking at when it comes to BSE, and as well as healthy growth in terms of options revenue. Let's also take a closer look when it comes to this particular counter. In terms of the key triggers, Sharad, help us out with what is really helping BSE at this point in time.
Interestingly, Shreyanshi, if you look at the numbers, they have been very strong for the Q2 segment. And also in a market where there are lack of triggers, BSE is still showing a strength, and that's pretty interesting. And it's actually aiding the capital market theme stocks as well. Easing regulatory fears around the weekly options expiry rule has still boosted investor confidence, as we are seeing a follow-on buying both in the HNI and the domestic counters. A strong technical setup also on the chart coming in. A higher high and higher lows pattern is being developed. And overall, we see that there might be more steam left in the rally for BSE going ahead, because the company has stated that the IPO pipeline is still robust. They have a capital market business also where that's growing pretty much very strong, and a 15% up move covers much more of a near-term optimism. That's what the technical analysts have been saying. And interestingly, the negative surprise, however, can be if regulation comes in or macros or volume slowdown comes in, that may temper the rally. But net, the setup which it looks like in the medium term is strong for BSE. And the valuations, they are also at a higher side, you could say, on their average 47 times. 3-year average is at 40 times. But there has already been a sustained move in this counter. But the analyst consensus is still mostly on the buy or the hold. Almost 95% of that rating is coming in this segment. So street is still bullish on BSE, and we are seeing that in the day's trade also.
Well, absolutely, and the stock seems to be cheering that at this point in time. 1% uptick coming in as far as BSE is concerned, and that is much smaller than the move that we're seeing on a 1 month basis as well. Let's also get Gaurav Bissa, Senior Vice President InCred Equities, to join us on the show this afternoon. Gaurav, thank you so much for taking time out and joining us this afternoon. I wanted to understand what you think about a BSE in good shape as of today and for a 1 month basis as well. How are you looking at this one?
Hi, good afternoon. Thank you for inviting me to the show. See, as far as BSE is concerned, it had a very smart move. It's been trading a rising channel, or rather ascending channel pattern, as we call it, on daily as well as weekly chart. It gave a breakout from what is known as a descending channel or downward sloping channel breakout, and since then we have seen consistent buying formation happening on daily time frame. It is in the formation of higher top, higher bottom, as your colleague mentioned. It is near the previous previous swing high levels of 3,000, 3,040. So in my opinion, for me to buy, I think we have already seen a good part of buying emerging. I'm not saying the setup is weak, but I would rather wait for it to give a close above 3,000, in which case it will confirm a swing breakout and start its journey towards 3,300 and above. And this would also be favorable in that point in time. So either you play for a move above 3,000 to trigger, or you buy on declines or dips towards 2,650 to add some more based on the higher top, higher bottom formation.
Okay, all right. So that's with regards to where the technicals are concerned for BSE. But if you take a look at the markets, they're stepping into December with history on their side, as the month has traditionally delivered positive returns across the Nifty mid caps and the small caps. Somit joins us with more details on how December can pan out for the markets. Somit?
Data suggests that there could be a Santa rally in the month of December, and that could be the 4th consecutive month of positive gains coming in for the benchmark. Now, what the last 10 years of December month is suggesting is that 6 out of the last 10 years we have managed to close in green. The average returns have been close to 1.6%. More than 7% move is something that we have seen twice in 2020 and 2023, and more than negative 3% move is something that we have seen just once in 2022. When it comes to the Nifty mid-cap index, that has managed to close in green 7 times, average gains of 2.1%, and the mid-cap index has outperformed the benchmark nearly 6 out of the last 10 years. And it has closed in red just 3 times in 2016, 2019, and in 2022. When it comes to the Nifty small cap index, that has managed to close in green 8 times. Average gains have been 3%. Positive returns of over 5% is something that we have seen thrice, that is in 2020, 2021 and 2023, and the 2 times when the index closed in negative was in 2016 and 2022. And given the current setup, it seems like the mid cap and the small cap could outperform the benchmark in December. Now if you look at the sectoral indices, there it's the Nifty IT index that has managed to close in green the most number of times, 8 out of the last 10 years, while the average gains have been close to 3.7%. For the Nifty Metal Index, 7 out of 10 times it has managed to close in green, average gains of 4.3%. When it comes to Nifty Real Estate and FMCG, both these indices have closed in green 6 out of the last 10 years. Average gains have been anywhere between 1.4 to 3.9%. For Energy and Auto Index, again 6 out of 10 times it has managed to close in green, average gains of close to 1.2%, and followed by Nifty Pharma Index and Nifty Bank Index. 6 out of the 10 times Nifty Pharma has managed to close in green, while Nifty Bank has managed to close in green 5 out of 10 times, and the average gains have been 0.8%. So no sectoral indices have on an average closed in red in the month of December. Now comes the most interesting part about the stocks. Now these are the stocks that have managed to close in green more than 7 times in the month of December, and if you look at the average gains, it has been more than 5% in that standalone month. SAIL, 7 out of 10 times it has managed to close in green, average gains of 12%. Dixon, it has a listed presence of 8 years, so 7 out of 8 years it has managed to close in green in the month of December, and the average gains have been close to 10 odd percent. For stocks like Titagar Rail and JSPL, these stocks have managed to close in green 8 to 9 times in the month of December, and the average gains have been close to 8 to 9%. For companies like Persistent and Adani Enterprises, these stocks have closed in green 7 out of the last 10 Decembers, and the average gains have been close to 7%. Now on the flip side, these are the stocks that have managed to close in red 7 out of the last 10 Decembers, and average returns have been more than negative 1%. Aditya Birla Capital, out of the 8 Decembers, it has managed to close in red 6 times. Average gains or average returns have been negative 1.6%. For ICICI Prudential Life, 7 out of 9 times it has closed in red, average returns of negative 1.5%. And finally, it's Grasim, which has closed in red 7 out of the last 10 Decembers, and average returns have been more than negative 1% on an average.
All right, that's a very interesting analysis that Somit has put together with regards to how December can pan out for markets. But Gaurav, I'll stick with you for this one. This December, what are you expecting? Are you expecting a Santa rally to happen? Do you think we'll, at least try to cross the, life highs by the end of December? Is that what you're seeing on the charts? And secondly, for the next 1 month or so, any particular counter that you are seeing momentum build up from here on and can be good entry point from here on?
So to answer your first question, we are quite optimistic that we may see a new lifetime, at least in Nifty 50 index. If you see, we missed the mark by 30 odd points. We went quite higher. And overall, if you see, Nifty has been trading in a range, and historically in the last 2, 3 months, 4 months, if you see, Nifty has been trading in a 500-point range, and that range is getting shifted higher. So that's a good sign that the base formation is inching higher. So you have your formations of higher tops, higher bottoms, that is already happening. On the other hand, the range is also getting shifted, so the base is rising. So in my opinion, in December, there's a very good chance that Nifty may go about 26,300. To answer your second question, I would rather stick to a space which has been outperforming, where the volume participation is quite robust, and the setup is also strong. And one name that comes to mind is M&M Financial Services. So if you see M&M Finance, it's seen multiple breakouts. It has seen a 6-month, a 9-month triangle breakout. It has also seen a 6-7 year rising trend line breakout. Volume participation so far has been good. We have seen follow buying happening. The breakout happened yesterday. Today also we have seen positive move happening. Momentum indicators are going quite strong. Volume, as I said, it's picking up quite interestingly. And if indeed we have a weekly close above 350, 355, then confirmation would be even more sweeter. So in my opinion, for somebody who has a 1 month horizon, can definitely look at M&M Finance.
All right, so then M&M Finance is something that you can look at if you have a 1 month horizon in mind. But let's also move on. Talk to you about the sectoral gainer right now, and that's Nifty Realty. In fact, within that pack, There's an Anantraj that's holding up quite well for itself, 3.2% uptick thereabout coming in, 3.8% at this point in time that you have on that stock, of course, buzzing away in trade after that strong second quarter momentum. And in terms of the commentary coming in from the management, that's quite interesting because we spoke to Amit Sarin, who's the managing director at Anantraj, about the second quarter performance, but he also expects that they're going to be sharpening the focus on data centers, and that is something that he sees driving the next leg of growth. Let's go across and listen in.
See, we should be able to, right now the MOU has come in place, the things are moving in very fast, and by this financial year, by the end of this financial year, so by March 26, we would zero in on the land will be with us, thanks to the government, and then we start our work. So before Andhra Pradesh starts kicking into the numbers of the actual data center, is going to be about 3 years.
All right, then there you go. That's the word coming in from the management in terms of the data center business as well. And they are looking to sharpen the focus when it comes to Delhi as well, apart from moving away from the Haryana strategy that they very well have in place at this point in time. Prashant, very curious to know what your take is when it comes to something like an Anantraj.
So very positive and optimistic when it comes to a data center investment, what Anantraj has done. But clearly, we are not able to see how much growth can come into the data centers because the outcome is still due for a company to perform well in the next 6 months. So at these valuations, I think it's a great value buying for investors, at least looking at a exposure towards the data center, even though the company is majorly into real estate companies. But again, data center will be highly in focus. Global markets are also under pressure with respect to AI and all. So I think considering those things, the investments are at the high risk for Anantraj at current point of time. But valuation gives a lot of comfort level for us to have a very optimistic view for the company.
Okay, valuation is giving comfort for something like an Anantraj is what Prashant is indicating. But shifting focus and taking a look at a very interesting story. There's a sharp divergence that is kind of emerging within high PE stocks, with some companies delivering strong earnings momentum that justifies the premium valuations, while others are struggling to show growth despite trading at steep multiples. My colleague Sharad joins us with more details on this. Sharad?
Looking at this graphics itself, it's quite, that understanding that these expensive stocks, are they actually worth it? If you're actually having positions, should you keep these positions on or should you exit them? So I have taken my analysis in the Nifty 500 index. Over there, we have taken stocks with more than 50 P coming in. I have removed the financials for our analysis. And look at the first table which you are putting out. Devyani International, 12-month forward P is 271 times. But over the next 2 years, the EPS CAGR, that level is something which we are looking at. That's 236%. And also the same case applies for Nykaa. This goes in at 159 odd percent. To put it across, there's a strong EPS growth coming in these stocks, and they might actually justify the higher valuations also. Piramal Pharma story, same 132%. Aditya Birla Real Estate, that's also 132% gains expected. And these valuations, you look at it, they are on the higher side. Also a consumption name comes into the pictures, Eternal. 164 times 12-month forward PE coming in, but they're expecting the EPS to double going ahead. So the question remains is, should you hold and buy these stocks? The second question is, should you hold and exit these stocks? And these are the high P, low growth stocks. Weak EPS growth, will they justify these valuations or not? Capital goods space, cements is there, single digit growth coming in, and the valuations on the higher side, 50 times. Same thing goes for Cochin Shipyard, just 7.3% EPS CAGR expected in the next 2 years. Consumption names, Berger Paints and Nestle, higher valuation, but no growth coming in the EPS, and that's why the analyst community is giving a thumbs down. And Page Industries, which has time and again tested the patience of the investors, just 9.6% EPS CAGR coming in, and the valuations still on the higher side. So the question remains is, these high P stocks and the earnings growth is also low, should you exit these counters or not? So of course these are high valuation stocks, but two different sides of the coin coming in and giving stress to investors as well as our viewers.
All right, Sharad, thank you so much for putting that piece together. Prashant, I'll quickly come to you on this one. He talked about a lot of counters, but I think what's interesting to understand here is stocks that are at a very high P, but with very low EPS growth CAGR, and that includes counters like Siemens, Cochin Shipyard, Berger Paints, Nestle, as well as Page Industries. Page Industries, of course, being an expensive one. But what is your view with regards to some of these names? Do you think that there could be a turnaround from here on?
I think it's very difficult because when we see very low visibility in terms of profitable growth and DPS growth, see the high valuations are now a very big concern for investors at this point of time, considering historically a high P will always give some kind of great growth in terms of EPS. But if it is missing, then it's a good way to take a decision to exit the stocks. And the way how high P and high growth sectors are performing, I think high P will always give some kind of high growth expectations, and that has to be justified in their earnings going forward. So overall, low P, high P, and low growth in terms of profitability, there should be a reason to exit the stocks.
Alright, and that's the take coming in as far as some of those counters are concerned. Thank you so much, Gaurav, as well as Prashant, for joining us this afternoon and helping us out to understand what is the picture when it comes to some of these counters. But let's move on to some important commentary. Then Commerce Minister Piyush Goyal has praised the newly implemented 4 labour codes, saying that the reforms have been warmly welcomed by both employers as well as trade unions. Let's go across and listen into that slice of commentary as well then.
Well, the 4 labour codes are truly an outstanding testament to the trust that Prime Minister Modi has earned from all sections of society. The fact that 140 crore Indians today have confidence in our Prime Minister, that both employers and workmen organizations, trade unions, have heartily welcomed it. It is a very balanced, well-articulated, well-thought-of compilation of 29 laws in these 4 codes. It ensures good practices, the occupational safety of our workmen, minimum wages at a national level for all workers, social security, including for gig workers. In a way, it provides opportunities for our sisters and daughters, women folk, to come into the formal workforce. It is truly a game changer that Prime Minister Modi has come out with. I'm sure the states will now come out with the necessary rules and the enabling legal framework to be able to get the maximum benefit of these 4 labour codes.
Alright, so that was Piyush Goyal speaking about the 4 new labour codes that have come in. But shifting our focus to new launch, when it comes to powertrains, the new Tata Sierra is set to debut. Tata's 1.5-litre turbo petrol engine. This unit is set to deliver around 170 HP and 280 Nm with both manual as well as automatic transmission options on the offer. Let us take a look at this event that's happening, and they'll be soon launching the product, and everybody's waiting to see as to how the new look of this car will be looking like. In fact, there have been a lot of launches recently in terms of where SUVs are concerned. But we'll wait and watch as to how this launch takes place. Everybody will be keeping an eye out on to take a look at the particular car. But what's the smartest way to build a strategy for reasonable returns, and why is there a strong case to bet big on financials? And overall, as we take a look at how this happens, and as we wrap up the show, here's a slice of Profit exclusive conversation with Sameer Arora straight from the Helios headquarters in Singapore. Listening.
Your investment thesis and philosophy is about identifying stocks and ideas that you don't want to invest in.
Correct.
Right? So for those people that don't know about this, can you very quickly explain that? And then I want to get into a few aspects
By
of
the way, nobody has any other philosophy.
Right.
The whole world has only this philosophy. It's just that they express it differently because they want to show that, what they buy with care and all that. But first they reject. So let me explain in simple terms. Mr. Buffett, suppose means he said, but once in a while he's violated it, that I don't buy tech stocks. He does not say, I study tech stocks, I met the board, I met the management, I understood the prospects, and then I said, I don't want to buy it. He said, I don't like it, because in his mind, it has to be rejected out of hand.
Right.
So his highest conviction is not in what he bought, it is in saying that I don't like tech. Otherwise, you should say, I will study it, I study everything, and then I don't buy it. So even Indian, say, big mutual fund might say, I like value. We don't like loss-making companies. So you have first eliminated
But
so
okay,
so I'm saying,
sure.
Actually, everybody's like that. It's just that the way our business works.
You do it more actively.
No, you say what you do.
Right.
You don't just say what the world wants. What the world wants is, we buy 20 companies which are so good, they have long term this thing. We met the promoter, we looked in his eye, we saw the depth of his this thing, passion.
Belief and passion.
And my bet is that the promoter also does not know that he will succeed so much.
Yeah.
Therefore, according to us, it is easier to know what will do badly rather than to know what will do well in life. And ultimately it's a sorting or a screening process. So in that screening, if you can eliminate the bad, which is easier to do, you are left with the pool which is more this thing, instead of directly trying to find the best company and the best management.
So by doing that, you by the way, you've got a lovely office and look at that view. But by doing that, you limit significant capital loss. You limit the mistakes that you make.
So the idea is that if there are say 500 companies in the index and the index return is X, let's say 14-15%, then broadly, because of the way averaging works, some half the stocks are doing better than 14 and some half are doing worse than 14. Right. And some 1/3 are doing much better than 14. And this is just, you can see in pure numbers for any market, and some 1/3 are doing very badly. So we say that it is very difficult to know ahead of time that which fellow will do well, because you will know it only with time. But it is easier to know what is, broadly speaking, a candidate for bottom 1/3.
Sure.
And if you can eliminate that, you can't totally eliminate, but if you can reduce that in the universe from being 1/3 to being 5%, 10%, that means if you buy 50 stocks, you will still get 2-3 very bad performers. But you should not get 30%, which is the market. No, 30% is the market average.
Sure. So but I do want to ask you about that. And the reason why I wanted to provide this context is I want your opinion on the IPO market as things stand right now. The companies that are coming in ultimately had to come in at some point. India is a growing economy, growing market, and more companies had to hit the market. But what do you think about the quality of the companies that are hitting the market currently when you put it through the lens that you use to evaluate your portfolio?
So in big picture sense, if I look at the mutual fund side, because we here don't even get as many anchor possibilities. So in this whole calendar year, they've taken 5 anchor positions so far out of whatever, maybe 60, 70, or maybe I don't know how many have gone. So you have to screen. But actually the guy who's ready to be IPO'd has already passed many tests.
Yeah.
Because if all of these were, say, broadly private equity funded, there would have been 10x the number of companies that go public would have been funded. For example, food delivery must have been some 20 companies before, now 2 are left or 3. Or if you say, actually 2, I'm talking quick commerce, 3 maybe. If you talk about logistics companies, education companies, the fact that you've reached an IPO stage is broadly you have survived.
But doesn't it go against or have a cross against one of the metrics, which is valuation?
No, it's not, because valuation can't be today's valuation.
You have to be forward.
So first thing is, big picture, it should be obvious that whatever this guy is doing is very useful or different. It is not just. So we have to differentiate between an IPO which looks like a new age company, but is actually an old age company, but has a better shop or a better, or all colors of all, or you've rolled up 20, you bought 20 unlisted guys and made it into.
What are some of those companies for you? And you've spoken a lot about these food delivery companies.
No, food delivery.
The platform companies.
There is a value which you can see. The value is they are protecting you from the pollution. Could be one value. They are saving you time. They are saving you parking.
Yeah.
They are saving you road rage. They are making you use Netflix better, because otherwise you spend
more time.
Exactly. Now, if some fellow says, I can do it myself, that means his time is not worth it.
He
should himself become maybe a delivery guy.
And he was not part of that market anyway.
Yeah, there's enough market. No, I'm saying in all of these, not all of these, in the companies that you are buying, if it is a new age company, not all IPOs are new age, then it should be, this guy is doing something good.
There are a lot of investment theses out there, but Sameer Arora's Helios Capital believes that it's better to identify stocks that you should not invest in to find the portfolio that you should.
We don't like loss-making companies. So you have first eliminated.
What ideas are you actively staying away from in 2025 November?
When a new entrant comes, the market thinks it's competition. We think it is sanity. Fact that you reached an IPO stage is broadly you have survived. As a thumb rule, we give benefit of doubt to first quarter. The first quarter तो अच्छा होगा.
The NDTV Profit has come a long ways. You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
The NDTV Profit has come a long ways. You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
Good afternoon. You're watching Small Cap Buzzers on NDTV Profit with me, Somit Sarkar. When you look at the benchmark index Nifty 50, it's trading very range bound inside the range of 25,930 to 26,030. Tight 100 points a range it's what trading at. And currently, if you look at the index, it's trading around the 26,000 level. Not much of an action that we are seeing on the expiry day. And when you look at the sectoral indices, is the Nifty Real Estate Index that has been gaining, that is the highest gaining sectoral index in trade, and this is after 5 days of continuous fall that we have seen in the index. Apart from that, it's the Nifty PSU Bank Index and the Nifty Pharma Index that have been gaining in trade. On the flip side, it's Nifty IT Index that is down the most, down around 0.7%, largely because of the up move that we had seen the previous day, some profit booking that is coming in trade today. If you look at the FNO stocks, it's Paytm, Tube Investments, LTI Mindtree that have been falling the most, while on the flip side or on the gaining side, it's Aditya Birla Capital which is up 3%, Phoenix Mill, Godrej Consumer, Prestige Estates and Federal Bank which have been gaining anywhere between 2 to 3% in trade. If you talk about the small cap stocks, Magnolic Cloud, we will be talking about that counter. That counter is down 10% in trade. Yatra Online, after the CEO resignation, is down 7% in trade, followed by Zota Healthcare, All Cargo Logistic. In fact, that counter has been down for the last third consecutive session. It has been hitting a lower circuit of 5% in trade. On the gaining side, it's Orient Electric, which is up 14%. Capillary Tech, we'll be talking about that counter as well in this segment. That is also up around 14%. Tasin Products up 10%. Peninsula Land, Lumax Industries and Primo Chemicals up anywhere between 8 to 10% in trade today. But shifting focus, let's talk about Pakka Limited. The company has been in focus on the back of multiple announcements that have come in. Firstly, let's get in Mahima to understand more about this company.
Right, so overall, if you take a look at how Q2 has been for Pakka Limited, main accounts such as ICTC was added this quarter. B2C revenue have doubled in the past 6 months. There's a strong pipeline of Q3 and Q4 products that we're looking at. New range of delivery containers, range of delivery meal trays, as well as assortment of ancillary products. The two projects, the first one being Project Jagruti, the total capex is planned at 675 crores. Debt will peak in FY27 at 600 crores. This includes both term loan as well as working capital. For the Guatemala project, overall restructuring and funding is happening. Stage 1 will take place by June 26, Stage 2 by 2028, and Stage 3 also timeline post 2028 will be determined. Now in terms of regenerative packing, that is also something that they are taking up. Sugarcane based paper, barrier coated papers as well as PM4 to be commissioned in 6 to 8 months, first of its kind of course in India. In terms of long-term vision, the company targets to reach that $1 billion revenue, currently at that $15 million right now. A 20 times growth is what they're aiming at. So this is the overall view of what the company wants to do from here on and what the outlook is looking like.
Well, thank you Mahima for that explanation. Let's welcome in the CFO, Nitika Suryavanshi. Firstly, ma'am, I'm sorry I'm asking you this question, but how do we pronounce the name of the company? Is it Pakka Limited or Pakka Limited?
We call it Pakka Limited, but even Pakka works good. It's a good connotation for the organization, so it's all good.
Right. Okay, the first question then that would be from my side is, what does this path of $1 billion that you have by 2030 look like, and which segments will be the main growth engines for this target that you have?
I think overall the packaging industry, if we look at packaging as a whole, we are looking at it as a very sunrise sector. It is driven by demands specifically from the food, from e-commerce, and also from consumer electronics. So I think in terms of the demand, there's a strong pull. So I would call it a sunrise sector, and this is why we are aiming for this kind of growth. And we have our ammunition ready. We are investing on R&D, on innovations. There are new products, as Mahima also mentioned. So there are new things that are coming in, and we are quite hopeful about taking things forward in the same direction. The industry overall is looking at a double-digit growth, and I think that further fillets our belief in the entire thing.
And with this strong growth that you're outlooking or seeing going forward, how are you managing the margin volatility, given the fact that you will be scaling up exports, quick commerce? So there would be some margin volatility as well. How do you manage that, and what is the kind of margin guidance that you could give us?
So in terms of what we've been doing in the past, I think we would be carrying that entire zeal of cost management efficiently at our side. This is what we've been driven by. If you look at the trend that we have maintained, we've focused more on production efficiency, cost efficiency, to be able to improve our margins or even sustain them in difficult times. And this is what we keep going. We would want to keep doing and taking this forward. That comes not just from the machine-related efficiencies, but we look at it from the whole chain of inventory management, where to source, when to source, how to stock, till the time the payments are realized. So it's more related to cost efficiencies that we would focus on.
And any guidance on the margin number, ma'am?
I think we would rather say that we would be striving towards improving even our past records, and that's all that I can say for now.
Okay. When it comes to the B2C segment revenue that have doubled in the last 6 months, what's driving this traction? And if you look at the category expansion, is it category expansion or better distribution?
It is actually both. When I say distribution, yes, we've increased our geographies. When we say category expansion, we have definitely added some new product lines even to the B2C. So we are driving it both ways, and we are, this is expected to continue going forward.
Right.
As in what I would say is a consumer-oriented product needs to be accessible wherever the consumer is. So B2C provides a very quick answer to that in terms of efficiency related to availability at the right time at the right place. So I think that would continue.
And when it comes to the new ancillary product range like cups, cutleries and clamshells, how quickly can you scale this up to a double-digit revenue contribution, say, going forward? So how much time will it take for that?
So we are not depending only on what we can do or investing heavily on capexes that we can handle. We are also looking at collaborations with partners who are as capable as we are. And we are looking at outsourcing some of these products. And that's how we are planning to scale it up till it reaches a level when we are ready with our own facilities, and then, those kind of shifts.
The project Jagriti, around 675 crore is the capital expenditure outlay that you have given for this project. What are the critical execution risk that you could foresee over the next say 12 months?
I don't see any risks going forward. I think we've had our tough times behind us, where it was more about collaborating with the financial institutions, getting things in order, placing the orders for the products, etc., etc. I think we've already done our phased implementation. So I think there is no more risk that I foresee. Plus, I think the team is quite experienced. We've learned from our mistakes during the last projects that we did. I think we are, this is where we are now, and it is just an upward movement from here, hopefully. Fingers crossed.
And when it comes to the Guatemala project, why the phased approach here? And is funding ready for all the 3 stages that you have planned?
We are in talks in terms of funding, hopeful, and the discussions are ongoing as we speak even now. In terms of phasing it out, the idea was just that we wanted to have Jagriti in place first. So we would want to have all our resources in terms of time, money, people devoted only to one single project to be able to achieve it within the timelines, and then maybe focus there. So as a parallel, what we are doing is that we are installing a small capacity so that we can handle it well. And once Jagriti is up and running, we would start expansions there.
And ma'am, given the fact that you have such major expansion and major capital expenditure plan, what about the debt scenario? What is the current debt? Where do you see that peaking? And what is the deleveraging plan that you have currently?
So I think what Mahima mentioned is correct. There is a certain escalation in the project that we already announced in our last board meeting. Financial tie-ups in place and ongoing discussions for that. In terms of what we are looking at from that project is basically a very niche product that we are coming up with, which is basically a substitution of plastic and metal-based flexible packaging to a packaging which removes both these layers. So it's a patented product that we will be coming up with, a very beautiful answer to whatever we see today in terms of flexible packaging. And I think the market value of the product would be much higher than what we are dealing with at present. So the revenue growth and the margin generation would be good enough to cover our debt servicing as well as the term loan repayments. We don't see any risk there at all.
Right. You're aiming to increase your market share to 10 to 15% from 1.5% currently. What is the biggest bottleneck today? Is it capacity, distribution, or customer awareness?
I think I would not say customer awareness. I think we are quite well adapted with what the customer requirements are. I think it's more about the reach, and that's what we are planning to do. We are definitely also planning to increase the bouquet of products, and that's how I think we will be able to increase that market share.
And lastly, ma'am, just wanted to understand how sticky are these institutional wins like Compass, Sodexo, Mahacom? Are these recurring or just project-based?
These are project-based, but then they lead to a lot of expansion in the demand because the awareness level is multifold. As in, there is so much that we can do with, say, placing an ad or placing a collateral on a YouTube or a LinkedIn kind of a media. But this is like mass awareness of what we are doing, and also a lot of education that happens in the same time. So sustainable packaging is something that has actually gotten a lot of attention in the recent past. But then there is still more to learn. There are still more new applications that are coming in. So I think those kind of events provide that kind of a platform where the incremental awareness and education is multifold.
Right. Thank you, ma'am. Thank you for joining us and giving us the way forward for Pakha Limited. Well, let's also welcome in Narendra Solanki, the Head Fundamental Research, Investment Services, Anand Rathi Shares and Stockbroker. So you heard the management, strong growth plans, 1 billion is the revenue target by 2030, massive capital expenditure that they have planned going forward. How are you looking at this counter? Any views here?
Yeah, good afternoon. First of all, let me just give you our disclaimer. We do not have any active recommendation or coverage in this particular stock. But yeah, definitely we have heard the views of the management, and I think the sector or the segment in which this company operates is a very interesting space. If you see, these are paper products, and overall, if you see, the growth is there, and even if you see from environmental standpoint of view, the government is actively trying to remove the retail usage of plastics as far as possible. So this could yes replace into the packaging form as a another choice. So in this kind of business, generally it's more of a volume game and distribution game. So I think that needs to be keenly watched for how does the company perform in both these situations. Plus, for investors' point of view, I think it is necessary. It is also one needs to understand that these are capex heavy businesses wherein you need to put up a lot of heavy machinery initially, and then you need to ramp up in terms of volumes rather than seeking to look out at pricing improvements. So as and when the volume ramp ups comes and the utilization peaks, so that's where the performance improves. So I just glanced through the financials. So right now the return ratios are low, probably because the company has just undergoing capex. So maybe it's 2-3 quarters away wherein we might see some capex completing and the production coming online, and then I think we may see some kind of a better performance going ahead. So I think broadly it's still 2-3 quarters away before we see any further improvement in that stock.
Shifting focus to Aeroflex Industries, the stock is up almost 6% in trade today. The company posted a strong second quarter numbers and the revenue crossed the 100 crore mark for the very first time. Let's get in Jasmeet with more details on the counter.
Well, right, thank you for that. If we look at the overall stock, it's buzzing on the back of volumes today. The stock is nearly 6% up, but on a 6-month basis, the stock is up by 10%. On a full year basis, stock is down by 10%. If we look at the company, what the company does, this company operates into metallic flow space where they produce hose, fittings and assemblies of various metallic pipes and tubes. Now, talking about the key financial of the company, Q2 was a strong quarter for the company where they reported the revenue over 100 crores for the very first time. Company also reported a very strong EBITDA margin in particular quarter. If we look at the overall growth sector, which led to the overall growth, would be the hydro air fitting subsidiary, which almost doubled the amount of growth. It had 15 odd crore versus 3 crore in the previous quarter, more than double actually. And the next one is liquid cooling data centers of the company, which performed really well. If we look at the other highlights of the company, the domestic sale contributed 27%, which is again up from 19% in the previous half of the year. If we look at the guidance for the management, they maintained the EBITDA guidance will be in the range of 21 to 22%, though the Q2 had a higher margin range. The management still guides one of quarter being the Q2 and ranges between 20 and 22 for the coming quarters. If we look at the overall space, overall guidance for the company, management also guides the hydro and capacity expansion going forward from here on. It'll be interesting to watch how the stock reacts from the Q3 onwards.
Right. So coming to you on this counter, that is Aeroflex, have you tracked this counter at current valuations? Does it seem to be a right buy?
No, we do not have any recommendation on this stock as well.
Right. Have you tracked Yatra as a stock? The stock is down 7% on the CEO resignation today, but the CEO is actually moving to the chairman position, so it's most likely an internal change. How are you looking at this announcement?
Again, it's not under our coverage or any active recommendation, so we do not have any recommendation. But yeah, definitely, I think you have to see what are the reasons for this resignation. So I'm not completely aware of the text of that announcement, right?
Right. Capillary Tech has delivered a sharp turnaround in FY25, moving from losses to profitability as margins have improved and operating performance has strengthened. Let's get in Jasmeet with more details on the counter.
Well, Red, thank you for that. The company recently got listed almost on last Friday, and it's nearly up 25% in trade since the listing day. If you look at the overall company, what the company does is company operates in a SaaS-based platform space where they also provide various data and loyalty programs for the company. The company offers products that help the brand understand the various analytics for the customer and see how the customers react to various messages of the brand sends. If you look at the overall IPO details, the IPO was at a size of 877 odd crores, while the first issue was at 345, though it was an OFS heavy IPO, the IPO still saw a stellar boom post the listing. If you look at the listing price, the company had listed at a 3% discount at a price of rupees 560 odd rupees on the BSE. Now talking about the annual key financials, the FY24 revenue was at 525 odd crore, but FY25 saw a jump in the revenue to 598 odd crores. But in terms of EBIT, from a negative 67 odd crores, company moved into a positive EBIT of 4.8 crore. And the margins remained almost flat to nil margin at 0.8% as of FY25. If you look at the net profits of the company had a net loss of roughly 60 odd crores in FY24, and by FY25 they had a profit of 13.2 crores, showing a growth momentum from here on. Talking about the key cost of the company, which is the customer acquisition cost, it stands at roughly 25% as of FY23, and it further reduced, and as of H1 of FY26 the cost stands at 18 odd percentage. But that's something to watch out for, because it was at 17% in FY25 and we saw incline there as well. Now in terms of geographical mix, company's major revenue comes from North American geography, roughly 56%, while the Asia revenue stands at 24% and the EMA revenue stands at 19 odd percentage. If we talk about the annual contract value of the company being the very important aspect, we see that it has been increasing. It was at 57 odd crores. We saw increase to 122 crore in as of FY25, but again H1 of FY26 we saw a booking of roughly 38 odd crores. All in all, we see a positive momentum in the stock, but the numbers are something to watch out for going forward.
Narendra, do you track this counter capillary tech? It's recently listed. Strong up move in the share prices today.
Yeah, no, we do not have any active recommendation, but yeah, on overall IT space, I think in IT space, there is very limited room for downside, and things are gradually looking up, especially on back of trade deal news with US happening very soon. So markets are expecting that sooner than later, I think we may get some good news regarding the trade deal. So that's one reason which is giving some tailwinds to the IT as a sector. And from a medium to long-term point of view, also in next 2 to 3 quarters, we could also start seeing some good traction building up for the sector. So I think it's a good point in time to start building up positions in the sector.
Right. Shifting focus to the F&O market, given this fact that it's Nifty expiry today, let's get in Sharad with more details on what's been buzzing in the F&O side.
Well, not much buzzing in trade, Somit, because the market is having what we call a fatigue, a congestion happening both calls and the put side itself. But let's go one by one for the Sensex heat map. Largely the banking names are doing well, SBI, BL and Reliance holding up in the green. But net, we could say it's even Stevens when it comes to the share prices. But there's kind of a profit booking coming in just 1 day's trade days of trade of up move in the IT counters. This includes Infosys, HCL Tech and TCS. Interestingly, Tata Motors PV is still seeing selling pressure. So it's still, you could say that overall the markets are in a very, very small tight range. Looking at the Sensex futures, the spot rates, that's also jumped up just slightly above the 85,000 odd levels mark. And the overall contracts are actually coming in the lower volumes. Sensex most active calls and puts, it's even Stevens here in both the numbers you're looking at it, and both of them actually 85,000 in both levels. We are seeing a movement happening in the options data, but the overall the PCR numbers that has come on the lower side as well, and that's a stable. BankX top trades, the smaller contributors are doing well in the trade. This includes Yes Bank, Federal Bank and even IndusInd Bank, but the lack of support which we are seeing earlier, that has changed. At least HDFC Bank is in green, so that is what is supporting BankX, and that is having a better technical chart setup than Sensex. BankX is the important call and put options also in the stream, but the important stocks which should be in your radar is the long build-up stocks. A new name coming in since the last time we spoke at 10:45, Godrej Consumer and Phoenix Mills making it to the list, especially in the realty pack. Looking at the short covering names, they include AB Capital and Muthoot Finance. That has spiked up to 2% in the day's trade. Long unwinding shares, looking at these numbers also, they include IGL as well as Adani Enterprise. There's of course a standard disclosure on that. And lastly, I would like to point out the short build-up stocks, and interestingly, Paytm has made it to the list, and LTI Mindtree is also down 1.5%. So Amit, a lot of sectoral rotation is coming in and no clear sense of trends we are gathering in the F&O space. So it'll be pretty much important to look at how things pan out going ahead.
Thank you, Sharad, for that deep dive into the F&O segment. Moving focus back to the small cap stocks, Magnolic Crowd is down around 10% in trade. What could have been buzzing in this counter? Let's get in Varsha with more details on the same.
Well, thank you so much for that. You know, in the last 5 days, the stock is down almost 27%. And also, if I were to talk about the Q2 numbers, the numbers were not that good because revenue and net profit remained flat. There was slight dip in operational performance. Total contract value, though, exceeded 118 crore in Q2, and contract wins were led by large-scale surveillance projects in railways. If you see, revenue was flat, EBITDA was down 5%, margins were down 200 basis points, and net profit was flat at 28 crore. But H2 is expected to see some revival because company recently approved fundraise of 500 crore, and H2 FY26 will be aided by execution of existing order book and new opportunities. Hence, H2 is expected to be on a growth mode, while new opportunities are expected from defense, fintech, and etc. So overall, you know, if you see because of the pressure when it comes to Q2 numbers, the stock has seen the hit, and also H2 is expected to be better. And overall, if you see the volumes were almost 13x of 30-day average.
Right. Narendra, any view on Magnetic Cloud? In the last 5 sessions, the stock has declined nearly 27%.
No, we do not cover this stock.
Right. Do you cover Orient Electric?
No.
Right. Tarsen product, any views on that counter? That's up around 9% in trade.
So Tarsen we had under our coverage, but right now it's trading above our target price. So we do not have any updated recommendation on it.
Right. Well, thank you for joining us and giving us your perspective on the stocks that we discussed. With that, it's a wrap on this edition of Small Cap Buzzers. Stay tuned and keep watching NDTV Profit.
There are a lot of investment theses out there, but Samir Arora's Helios Capital believes that it's better to identify stocks that you should not invest in to find the portfolio that you should.
We don't like loss-making companies. So you have first eliminated.
What ideas are you actively staying away from in 2025 November?
When a new entrant comes, the market thinks it's competition. We think it is sanity. Fact that you reached an IPO stage is broadly you have survived. As a thumb rule, we give benefit of doubt to first quarter. The first quarter तो अच्छा होगा.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think we are trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you are doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
समझो जरा भी
प्यास जिसके हम ना हो।
जान रहे दिल ये तो जान दी है तू।
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
और रहमान
सोनू निगम के लिए जोरदार तालियां।
The NDTV Profit has come.
Hello and welcome to India Market Close. You are watching NDTV Profit and I am Sharad Dubey and with me is Hiral Dadia. Now looking at the markets today, it has been a very short tight range and the monthly expiry is also at play, but comfortably Nifty is above the 26,000 odd mark. Last 10-15 minutes there was a spike coming in. Nifty Bank also not much movement happening, but technically it is better placed as well. Let's look at the overall constituents, how they have been moving in the Nifty index today, and we are seeing a sea of green coming in. Earlier this was of course a 60-40 towards the red side, but now that has moved. BL, SBI, Dr. Reddy's, that has actually picked up. And if you look at the selling, we are seeing the IT counters, Wipro, Infosys, and even you could say the other IT stocks such as TCS, which is a heavyweight in Nifty, also falling across. Tata Motors PV and SBI Life are also the stocks where the selling pressure is there. But net, you could still say that the overall indices is still under a range. Let's look at the sectoral indices, how they have been performing, and largely we see there has been up moves coming in, especially last 15-20 odd minutes, where a lot of sectors which were in red have moved on to green. Nifty PSU Bank, Nifty Realty and Pharma, these three holding the fort in the green, but the sell-off we are seeing especially in the IT and the consumer durable space, but it's not a very massive sell-off, but keeping the market in a range bound, especially if you look at the broader indices. Also the advanced decline ratio is something which you will be looking out for, and look at it, it is still giving a kind of a mixed kind of numbers, but the inclination is coming towards the bullish side. Advances 1360, declines at 1025. Hiral, what are you gathering from the broader indices? That seems lack of triggers in the markets.
Absolutely, Sharad. You know, triggers are missing in terms of where markets go, and the last couple of trading sessions have been really painful when it comes to broader markets. If you pull up the mid-cap 150, it's trying to make a mark, seeing gains of around 0.2%. But if you see in terms of the small cap index as well, absolutely drooling under pressure is what you were seeing, and now that mild recovery, trading flat in trade today. In terms of individual stocks as well, no major movers. Orient Electric is one of the companies which are seeing some smart moves in trade today. Excuse me. Karnataka Bank, 8% up move on this counter, and this is on the back of the stake purchase that's happening, and Sharad is going to get us more details. Craftsman is seeing some good moves. Balaji Mines is in the positive with gains of nearly 6% coming in there. You have Honeywell Auto, which is trading under pressure. ITI, which is seeing selling pressure as well in trade today. So Yatra Online is another one that we need to watch out for, and a Physics Wala as well. So clearly, you know, individual stocks, no major, upticks or downticks that are coming in. It's a pretty balanced market. No major trigger that's missing. But from a setup perspective, if you have to look at the closure of trade, the last 1.5 hour of trade, anything that you're picking up, Sharad?
Well, there would be a volatility coming in the 90 minutes because there's a monthly expiry also at play. But Nifty is in a very tight range the last three sessions, 26,050 to 26,150. And Nifty Bank also the key levels. Of course, the range is on the higher side. They're ranging between 58,500 to 59,500. The Nifty PCR, that has cooled off. That's a stable 0.9 times. And interestingly, the monthly expiry is also at play. The last 90 minutes, the stocks may turn volatile as well. Lack of triggers in the market. There is a fatigue coming in. And even the broader indices, they are continuing to underperform the benchmark indices. That's something which we'll be looking out for. Buying coming in the PSU banking space, metals and realty, but remember this is a sectoral rotation or a churn. This is just a technical moves happening, nothing major. In the European markets, they are opening up, but there is a bias of negative as profit booking is coming in this global counters. But the rollover data is very important. Till now, this data is there around 61% for both Nifty and Nifty Bank. This is likely to go up to almost 70 to 80% as we go on to the closing of the day. Top stock rollovers, AB Capital 95%, HCL Tech, largely IT names are having the highest rollovers. Now let's get in Coforge and Tata Consumer and Info Edge also making it to the list. But largely, Hiral, I can say the rollover data is still on the lower side. That means the F&O activity net is on the lower side. Volumes would be lesser this time.
Volumes will be lesser this time, and that's what the data is indicating so far. In fact, let's take this question with our guest Kush Bora from kushbora.com and Pankaj Pandey from ICICI Securities joins. And welcome to the show, gentlemen. Kush, let me come to you first. As Sharath was indicating on the back of expiry, the anticipation is that volumes are expected to be low this time around. And in terms of the volatility as well, seems absolutely high. What is your expectation in terms of closure today?
Hey, hi, Hiral. First, a very good afternoon. Hi, Pankaj. A very good afternoon to all the viewers as well. It's a little surprising, expiry, you would expect the volumes to be higher, but surprisingly so, they are not. Even yesterday, the volumes were a little concerning. I think Sharad used the right word to describe what's happening in the market right now, which is fatigue. Now, just to put in context, from the late September, early October, those Nifties rebounded and jumped over 6%. Bank Nifty actually over 9% in the same time frame. So the indices have had a good run. Even in the last 10 odd sessions, both the indices have had a good run. Then what's happened now, along with the fatigue, are two factors. One, the monthly expiry has kicked in. So yes, some volatility, some profit booking, is par for the course and is to be expected. Also, secondly, no clear announcements on the India-US trade deal is just keeping the market cautious. So if you ask me, I think on the whole, the near-term trend for Nifty and Bank Nifty that was upwards is very much intact. I think what you're seeing is largely on account of expiry. I think tomorrow, day after, we should resume our uptrend. Mild concern on the daily setup is that there is a negative RSI divergence which is setting up. So that could be a bit of a concern, but it's an early stage. If we do turn around and if the indices start moving higher and the momentum indicators start moving higher, then yes, this could well be ruled out. So till the 20-day moving average is maintained, which is about 25,850 on the Nifty and 58,300 on the Bank Nifty, I think you're good to hold your long positions, keep your stop losses at these levels.
Okay, so that's with regards to Nifty and Bank Nifty as well. And staying with this, Kush, any topics that you have?
Sure, Hiral, going with both long recommendations, a positional trade on Apar Industries. The stocks had a good run. We did discuss this about a week or so ago as a weekly pick, had a sharp run up. Is seeing mild profit booking, but today also taking support of the 20-day moving average and moving higher. So for positional targets of 94.80, 9900 and a stop loss at the 86.80 mark, Apar Industries. And also one stock which is showing signs of turnaround is Coromandel. The stock supported taken support of the 200-day moving average, crossed above the 20 and the 50-day moving average in the last few sessions. Mild resistance at the 2320 mark, but I think once that is taken out, you can see the stock zoom to 2360 and 2425. Those will be your targets. Keep a stop loss at the 2240 mark.
Interesting, but one stock which has taken a lot of interest is Karnataka Bank. Last three sessions, their stock has been in juggernaut and going up. There is an interest has caught of ace investor Aditya Kumar Halvasia. He has been accumulating the stock, almost 83 lakh shares in the last two sessions. That means already he's having 2% stake in the company. In October also, almost 0.8% stake was acquired in South Indian Bank. If you look at the street credit, he's the chairman and the managing director at Cupid and a board member at Tourism Finance Corporation and Apollo Microsystems in the listed play as well. Now there is a connection also. I dig deep into some data. The old MD of Karnataka Bank, Mr. MS Mahabaleshwar, is on the board of TFCI as well, which is largely promoted by Aditya Halvasia. But there is some alpha. We did some research on this company and there are 4 key triggers going ahead which augurs well for the company. Company is undergoing a turnaround in the new management board. Recently appointed industry veteran Raghavendra Srinivas Bhatt as the MD and CEO, and management has stated that they're expecting higher growth in H2. Company will be focusing on 2 things: for expense cut and recovery of NPAs. And interestingly, I checked the numbers also. NIMs have seen a good expansion. The net NPA asset quality has improved and the stock is cheap. 12 months price to book value of just 0.62 times, and last 2 sessions has seen highest volumes in the last 3 odd years. Very interesting phase coming in here. But Pankaj, the question is Karnataka Bank. Everybody is interested in this small mid-cap name, and now a big investor, Ace Investor, has also come in. What will be your views on Karnataka Bank?
Yeah, hi, good afternoon. Thanks for having me. I think on the banking overall, we feel that quarter on quarter and YOY, the bank earnings have sort of bottomed out. Now, private banks had already done well. So we are within BFSI, we are seeing sector rotation. So PSU banks and the tier 2 banks are sort of doing well. While we don't have a coverage on Karnataka Bank, what we like in the tier 2 segment is again something like Catholic Syrian Bank. Besides that, South Indian Bank is another bank what we like, and in addition to that, City Union Bank is another stock which we like. So I think some of these banks had undergone significant amount of pain, and they are sort of restructuring their book, and the benefits of that is going to accrue over the next 1 or 2 years. And valuation-wise, most of them are sort of comfortably placed compared to their private sector counterparts. So I think which is why we are seeing renewed interest in these tier 2 names.
Renewed interest in tier 2 names is what Pankaj is saying. But with this, if I have to come to you, Kush, Karnataka Bank, in the last 5 days itself, the stock has rallied nearly 23 to 24%. Still a little bit away from its 52-week high of 231. Are you seeing a further upside, or would you say it's best to book profits at current levels and then buy on dips?
Categorize this as per the time horizon that the investor or the trader might have. If you have been holding on to this one for the last 6, 8 months, 9 months, and then you're starting to see some profits, I think it's a good idea to take money off the table, at least partially, perhaps re-enter at those 195, 200 odd levels, because as you rightly pointed out, the stocks actually zoomed higher in the last 3 sessions on the back of good volumes, mind you. So from a near-term perspective, I think it's a good idea to partially book profits, but with the kind of rebound, that we are seeing and the base formation near the 170 mark and the zoom up higher, I think the risk reward ratio trade, is warranted here. But I would still suggest that even that has to happen at the 195, 200 mark. So let the stock cool off a little. With the kind of spike that you've seen and the base formation that you've seen in the last month and a half, there is a favorable risk reward ratio trade to be made where 170 acts as your stop loss, and on the way up, your targets are about 220. And once that is taken out, you're looking at a 245 as well. So yes, I would look at it from a positional standpoint more rather than a near-term trading bet.
Okay, so, that's with regards to Karnataka Bank. But now it's time for a stock of the day. And all eyes are on physics, Fala. In fact, eyes were on the day of the listing, post-listing as well. And the kind of volatility the stock has seen has been immense. Valuations have been a concern. We've called it the stock of the day because it was at the day's highest levels with gains of little over 4.5%, cooled off slightly, but still at that 4%, 3% mark as we speak. Jasmeet is standing by to tell us more. Jasmeet, I know there's not a lot of information with regards to physics, Bala, but if we could help the viewers understand as to what's happened with the stock and what were the concerns and what should one watch out for?
Well, right, thank you for that. Now, if you look at the overall stock, let's quickly understand by the listing of the stock, how did the stock perform altogether. If you look at the listing, the company had a stellar debut followed by a steep extended correction push. Company got listed at 33% hike, and currently it's down roughly 14% since the day of listing. If you look at the overall intraday buying, which has improved for the stock, which is reducing the volatility going forward. Now, today's rebound we see it after coming a 4-day of constantly making loss, and we see a snap coming in here. Now, let's quickly understand what led to this correction post-listing after 33% jump altogether. Now, firstly, the valuations were stretched relatively to the early stage of fundamentals, which led to the overall listing and the sharp decline of the stock post-listing. Secondly, the company still remains loss-making with an expansion plan where they want to target a lot of offline centers. Thirdly, if you look at the overall capex plan, company has a very high capex plan, which is a concern in the near term given the company is still into a loss-making phase. Lastly, the offline push that the company is constantly making, though it would increase the footprint of the company all over India, but also would increase the operating leverage of the company. Next, let's quickly understand, are the valuations actually stretched and what valuation the company trading at? If you look at the peer benchmark, that implies that company was roughly valued at $4 billion during the time of IPO. And if you look at the current valuation of the company, it roughly stands at 197 times for compared to the peer of Viranda Learning, which is roughly 20 times. Viranda Learning is a firm which provides again learning services through online and offline platforms as well. Something like Viranda is trading at 20 odd times, but something like Physics Wala is trading at roughly 197 times. Now, lastly, the offline centers, which deliver roughly 47% of the overall sales, would be a positive sign for the company, given it would increase the offline stance. But again, the 48% stance, the balance stance coming from the online is something that's helping the company grow, given that's a profitable side of the business and not the offline business. Well, if you look at the last aspect of what is dragging the overall value of the company is the employee cost, which is roughly at 460 crore, causing the overall drag in the margins and making the company a loss making. Last part, is there anything positive? Is there a part of profitability? Let's quickly understand that. If we look at the management, they reiterate to be PAT positive in next 12 months when we spoke to them lastly. If you look at the other aspect, the online business of the company is improving, and that's something to help the company going forward act as a leverage for the company. Also, if you look at the expansion plan, management has plans to expand in South Indian region. Given the stance stands lower, increasing the new geography will obviously increase their operating profits as well as the top line. If you look at the other aspect, AI is something that the management again had mentioned about a leverage in terms of hiring more employees as well as using AI to reduce the operating leverage by creating a lot of value-added services to solve the doubts of the students. And the last aspect, the capex plan of the management stands at 1,150 odd crores, where they plans to expand and increase geographical stance. So all in all, we see a mixed set of picture as of now. The stock is doing well today. It's almost up 3%. But again, Q2 and Q3 going forward, something to watch out for how the company turns around the top line and the profitability.
Thanks a lot, Jasmeet, for that. But three important listings have come in this space. Jasmeet discussed about Physics Wala, Lenskart was there, Grow was there. Let's show all these three stocks, how they are doing in the trade today. Physics Wala is up almost 3 odd percent. Lenskart, a spike, up 2%, and Grow. Recently, the management also spoke with us as well on the earnings season as well. All three are actually in the green in the trade today. Pankaj, fundamentally, since there is a very short time frame coming in the technicals, what would be your pick out of these three newly listed companies? There was a kind of a up move when they listed, then there was moderation. But over the long term, if you had to pick out of these three companies, which would have a better risk-reward ratio?
So my clear bias is towards Lenskart for the kind of opportunity which they can tap. And also, I think you have a large unorganized segment. So I think this is the only company which is in the organized space. So I think Lenskart is what I would prefer. And in terms of IPO note, we had given a subscribe to that. So I think we continue to like this company.
Okay, continue to like a Lenskart, and that's interesting between the three IPOs that we're talking about. But moving on, a couple of newsmakers that are buzzing in trade today. Jasmeet is standing by with us to tell us more. Jasmeet, which are the newsmakers that you've picked for the day?
Well, thank you for that. Starting off with Style in India Fluorochemical. Well, this company, the management reiterates the guidance going forward. They maintain a guidance of revenue top line growth of 30 to 36% by FY26, and that is no stock is buzzing in trade. Well, the second reason why the stock is buzzing in trade is that management had raised the fund by the promoter stake sale, which they have applied to the same business without any interest charge, showing a positive sign and momentum for the particular stock. If we look at the next counter in my list, that is Solex Energy. Well, the company has announced commencement production of 2.2 gigawatt of photonics modules, and this particular state-of-the-art facility is located in Surat facility. If you look at the third counter which I have, that's Jefferies on LG. They have initiated a buy rating on the particular stock, and that's why the stock is buzzing in trade with a target price of 1980. Now, what they see is they see the strong market leadership in this particular company given the diversified product mix going forward, while they also see that the entrance, the distribution, and the backward management of the company is well maintained, and that's what is bringing the overall buy rating for the particular stock. Lastly, they also make a note that the notable balance sheet cash that will support the company going forward and help the company with the future growth. If we look at the last counter, that's Siemens Energy India. While the stock came up with a positive set of numbers, but the stock is tanked in trade today. While this particular downfall comes on the back of the increased order backlog, roughly at 16,000 odd crores. If we look at the key numbers, we see revenue is about 27 odd percentage, while the EBITDA is about 24%. The margin remains flat on the back of change in product mix. On the other hand, the profit is also done well. It's up all 31%. So these are the stocks buzzing in trade on the back of the news.
Okay, so interesting newsmakers that we're talking about. Kush, coming to you, few of them seeing some good run in today's session. Siemens Energy under pressure on the back of earnings, but on the charts, anything that you would like?
So Hiral, more of a wait and watch kind of an approach here, because 3,100, to be precise, was the support zone that is being tested. It slipped under that level. I think there could be some more downside that could come in, perhaps about 2,900, 2,975, another 100 points of a dip, and the stock could find support, and maybe then you can consider, but not at the moment. I think one of the stocks that we discussed was Stallion. We all know the kind of tremendous run that it had, but then again, fall from grace, slipped nearly 50%. So rather than an advice, this is more of a caution to traders and investors for stocks that run up so high that you can't really catch them, and when you do, they start hitting lower circuits. So just be a little cautious on stocks like these. So more of a word of caution rather than an advice on Stallion.
Stallion interestingly went up also, Kosha, because the management commentary came and they actually reaffirmed their FY26 guidance. And of course, there was a big stock fall also coming in. They had gone up as high as, you could say, almost 400 odd levels as well. If you could just show us the 2 to 3 month odd chart, we'll understand where the game has been there. You see, that was from 80 that went up to 400 and then now corrected back to 200. But also, there are some stable players also there in this industry, in the fluorination. We have SRF, we have Navin Fluorine. Pankaj, I wanted your views on that. Of course, there's a bullishness is there on these chart setups, at least on a medium-term basis. Overall, for the fluorination players, what are the key triggers for growth? I'm sure there's expansion and the demand also.
So I think within the chemical space, fluorine is a sort of a less crowded space, and I think what is driving is again the R32 gas prices. So I think whether it is Navin Fluorine, which is doing additional capex, or whether it is SRF or even Gujarat Fluorochemicals, I think all these companies are looking attractive to us. And I think overall sense is that while the numbers for some of these companies have been good, even the second half is expected to become a lot more better. And I think the capacity expansion is done in order to have the better quota, which I think the developed world is sort of exiting. So next 5-6 years, probably these companies should have or should deliver good set of numbers. So we like the entire space.
Okay, so Navin Fluorine is another one should be watching out for from this space as well. One sector which is actually seeing a good run-up in trade today is real estate. In fact, it is one of the top gaining sectors as well at the day's highest levels, with gains of 1.8% coming in there after seeing profit booking in yesterday's session. So the moves in terms of real estate have been pretty strong. But a couple of things that we need to note over here is the reasons as to why this underperformance, because on a YTD basis, your Nifty 50, which is up 9% versus this, the real estate index itself is down almost 15% in trade. In fact, it's Purvankara and Arvind Smart Spaces. These two have seen the major correction in FY26 so far. In terms of individual stocks as well, if you look at the DLF, Lodha, Prestige, Godrej, all of them have been in the negative territory. The key investor concerns have been that the pre-sales growth that has been driven by sustenance this time around, and there have been no new launches. That is what is concerning the investors, and the volumes are down nearly 61% when you talk about launches as well. Secondly, the prices which have been ballooning is what has been impacting investor sentiment and the volumes, and the labor costs which are expected to rise by almost around 10 to 15% due to the new labor code. That is something which will impact business as well. Clearly, if you talk about outlook, luxury and ultra luxury is what will drive value momentum from here on. The street is expecting almost a 18 to 20% pre-sales growth in FY26, and the volumes may stagnate and not exceed that 4% growth is what the anticipation is. So that's what we are looking at in terms of real estate. Before we listen to what the management of Anantraj had to say, a quick view, Pankaj, from you in terms of real estate. With the underperformance, a 15% downtick on a year-to-date basis, plus the commentary that is coming in and the expectation that we have, what would you advise investors to do with real estate companies?
So I think one needs to be selective in real estate. So when we sort of look at real estate first half, most of the companies had a pretty soft half. But in the second half, we see a lot more launches, and most of the companies are sticking with their pre-sales guidance for FY26. So for example, Brigade, while they have guided for 9,000, 8,300 or 8,000 is expected to happen in the second half. Similarly, even for DLF, I think they are comfortably placed to achieve 22,000 odd crores of their pre-sales guidance what they've given. The second half becomes a lot more crucial while the stocks have not performed. But my sense is that it is better to sort of wait it out for another 3 to 6 months because largely most of the companies are quite optimistic about meeting this. So this is not the time to sort of let the real estate go from the holdings as of now.
See, the divergence is coming in Nifty Realty. That's down 14% as compared to Nifty's gain of 10 odd percent. Nifty Realty has not participated much. A lot of triggers Hiral has discussed. But technically speaking, is there value emerging for a positional trade, Kush? And if that is there, what would be your realty stock which you will be picking up?
So Sharad, there is a case to be made for realty as a pack and selectively as stocks as well. Because if you look at the medium term, support zones for the realty index itself, that comes close to the 870 mark. Now, granted, that there is some distance away, but not more than about 4%, from here on. So yes, the medium term support zones for realty index will kick in. Now, that said, the risk reward ratio will be very attractive on some of the names. So which are the names that could do well? The ones that have shown strength and not really fallen as much as, some of the others have. And Prestige Estates, is one of them. If you see the stock, despite the kind of correction, it's held on to, some of the key averages fairly comfortably above the 200-day moving average. So there is definitely relative strength, in Prestige Estate. DLF also just a few sessions ago has shifted or slipped just below that 200-day moving average mark, but now comes in at the support of 710. So I would stick with some of these big names. So Prestige and DLF make the cut for me right now. You could start with a small allocation at these levels and increase as the stocks start to move higher.
In the Nifty Realty pack, looking at Anant Raj, the stock is the second biggest gainer. It's up almost 3 odd percent. And we have got an important commentary coming in from the management as well. Amit Sarin, the managing director, Anant Raj, spoke about the Q2 performance and how the company plans to sharpen its focus on data centers that will drive the next leg of growth. Listen in.
See, we should be able to, right now the MOU has come in place. The things are moving in very fast. And by this financial year, by the end of this financial year, so by March 26, we would zero in on the land. The land will be with us, thanks to the government. And then we start our work. So before Andhra Pradesh starts kicking into the numbers of the actual data center, it's going to be about 3 years.
From realty space, capital goods also is in focus. BSE has done actually really well if you compare that with the mid-cap stocks index in this month itself. And that's up almost 15 odd percent if you compare that. And today also it's showing strength. Now, what has led to the rally? Overall, the numbers have been strong, the Q2, and there's a follow-on buying happening post the earnings as well. Healthy growth coming in the option revenues and a strong technical setup is also there. That is why we are seeing BSE's technical chart showing a good up move. But a company also stated fundamentally that the IPO pipeline is strong. And the near-term optimism which is there in this counter, it seems like a 15% up move can come from the current levels as well. And there is a negative surprise element also, especially on the regulation and the macros front. That might be a trigger which might pull down the capital-related stocks. But overall, the valuations, that has come on the higher side now because of the already an up move in BSE. 1 year forward PE at 47 times, its 3-year average of 40 times. But analysts are still bullish on the stock. Almost 90% plus analysts have at least a buy or a hold rating coming in. Kush, this is a question for you for BSE. The medium term chart level is actually good, but it seems like a 10 to 15% up move can still come from current levels. Is it right, or should someone book some profits on BSE?
No, absolutely agree with you. In fact, I think it was some time ago when we released a call on BSE with a second target of 2,900 plus, and that was comfortably hit about 3 sessions ago. My profit booking along with the markets, but if you see, the stock has paid its dues. About mid of June, the stock was close to these 3,000 odd levels, then corrected sharply. But the rise has also been equally sharp, high delivery, volumes in the last 2.5 months, which is also encouraging, coupled by this price move. I won't be surprised to see the stock hit new highs, cross this 3,000 levels, which were the recent swing highs, and then go past 3,250 as well. So if you have a position in BSE, it's not a bad idea to continue holding on to this one. A near-term stop loss on this one is 2675, which is the 20-day moving average. I think the next leg of rally is just beginning. So I remain constructive on BSE. Also, just add to the capital market theme, which is 361 WAM. This is a stock that we discussed yesterday as one of our weekly picks. Is still holding ground in a relatively weak market. Even yesterday the stock was holding ground. So yes, if you want to consider an alternate play, 361 VAM is your stock.
Okay, so that's a positive view coming in on a 361. Pankaj, how are you looking at the capital market play, and where would your bets be taking into consideration? The data in terms of September, October is pretty decent. November, let's see what that looks like.
In the capital market space, my clearly one and only bias is AMCs because our sense is that while yes, the inflows were excluding NFOs were somewhere about 20,000 odd crores, but typically whenever the market has done well or during the festive season, we see some bit of a profit taking in the markets. Our sense is that going forward, those inflows should sort of normalize. The SIP numbers are pretty much intact. And I think this is one segment where you don't really carry any kind of a balance sheet risk. The stock can deliver mid to high teen kind of return depending on earning growth plus the combination of inflows. So I think AMC stocks are portfolio stocks, and I think even better than some of the banks also.
Okay, so AMCs is what Pankaj is looking at. But thank you. Thanks for your views, Kush and Pankaj. Stay with us. We'll quickly slip into a short break. And within that, let's listen to Indian IT stocks, the views that are coming on these on the back of the global tech spending, which has shown early signs of recovery. But this is the moment to buy or just a short-lived bounce. Rajiv Batra of JP Morgan sees a gradual pickup, while Sameer Arora of Helios remains cautious. Sandeep Agarwal is more bullish, saying that valuations have bottomed out, and Arvind Chari believes that the real turnaround is going to depend on the fresh digital budgets from global clients. The debate on IT is far from settled. Let's take a look at those expert comments.
I have started looking at very small companies which are into domestic space, because I think what has happened in last 5-7 years, because of very low margin, most of the large players, whether it was Wipro, HCL, Tecem, all of them have an IT now proposed. Everyone has exited the domestic space, and there is huge demand in the domestic from the domestic companies for IT infrastructure, IT system integration, and all that. I see some of the companies which are very small and they are more agile and they will get better opportunity here. They will definitely grow very, very fast, and there could be substantial, earnings growth also.
The sad part of our investment or the global investment thesis is everyone has a rear view mirror. On a rear view mirror term, if you look at the valuation of MSCI India IT, it is trading close to 19 to 20 forward P basis. But when you look at a trailing earning growth, it is flat, that is 0% to around plus 2%. So when you look at a PEG ratio, your PEG ratios are coming more than 5x or close to around 8 and 9x for the entire sector space. Now, this is the same curse which FMCG sector has gone for the 10 years. This is the same curse India has gone through for the last 18 months when the PEG ratios became uninvestable. But right now, that same problem IT sector is seeing, where your earning growth is missing compared towards other sectors like India overall or like discretionary and financials, and valuations are not that cheap enough.
For us, it's a discipline of valuation, right? We look at companies over a 2-year forward valuation. We forecast for 5 years and we look at 2-year valuation, and we try to see whether on a discounted basis, are we able to buy at a discount to intrinsic value. These companies, they came very close to our buy prices maybe 1.5-2 years back. We're kind of missed at that level. Okay. But that's fine. I mean, there are enough opportunities to play in India. But the way we do it is we do cover all of them. Like, we have active coverage. When you say active, we'll actually meet them very regularly. We have an updated model.
There are a lot of investment theses out there, but Sameer Arora's Helios Capital believes that it's better to identify stocks that you should not invest in to find the portfolio that you should.
We don't like loss-making companies. So you have first eliminated.
What ideas are you actively staying away from in 2025 November?
When a new entrant comes, the market thinks it's competition. We think it is sanity. Fact that you reached an IPO stage is broadly you have survived. As a thumb rule, we give benefit of doubt to first quarter. The first quarter तो अच्छा होगा.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributed to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
Welcome back to India Market Close, and now to our segment Bulls versus Bears, and the stock in focus is Grow. We have been talking about it post its listing, then its earnings, but what are the key takeaways coming from this? And management also spoke with us, but from there we'll see that the bull case is that a strong Q2 operational performance has come in, the margins has also come in well enough, and the revenue also saw a strong jump coming in. These were the numbers recently company came out with, but there was an adjustment also in the PAT year-on-year basis, and that reversal was there for management incentives. So the question is, will we see some more adjustments in the PAT so that they go up? Second thing is that the stock itself is up more than 50% from the IPO price, and a significant jump in the listing gains was also, that was a decent 14% listing gains, but there has been correction from its highs also. It's down 20% on profit booking. Also, let's look at another key factors is post IPO institutional buying has been seen, and that accumulation is coming from both the HNI and the domestic funds counter, but valuation concerns are still remaining. It's very high as compared to its peers such as Motilal Oswal, Angel One, on both price to sales or even the P earnings basis. Bull case is that the market share growth has been strong, especially in the cash and derivative segments. That has jumped up more than 7 to 8% on a year-on-year basis, and also increasing its lead against its closest peer Zerodha. While bear case, looking at it, there is a competition coming in for most of the players in the fintech space because wealth management is getting crowded, and also M2F, which is a margin trading facility business, that is also getting very crowded. So this is the last bear case coming in for Grow.
So whether to go with the bull case or bear case is the question. Pankaj, I know, we spoke about Physics Wala, Lenskart and Grow together, but how are you looking at a Grow taking the way business has panned out, the way numbers in the first quarter have panned out, and the commentary is seeming very strong?
So for me, I think the choices are very clear. I would want to recommend HDFC AMC, which is, carries a market cap of shade over 1 lakh crore, or a Nippon AMC, which carries somewhere about 55,000 odd crores, rather than a broking company which is closer to or higher than some of these.
So that's with regards to the other names. Grow is not something which is very much on Pankaj's list. But few of the other names I want to discuss, and especially with Somit, is because he's discussed all of these in the small cap show. Capillary Magellanic and Aeroflex, all the three counters. Capillary at the day's highest level, saw a 21-22% uptick coming in there. Magellanic also, if you pull up that one on the screens, along with the Aeroflex, again, a 9% downtick in a Magellanic is what you're seeing. And you have a Aeroflex, which is up around 5 to 6% in trade. What have been the key highlights that you've picked up on all the three names with the kind of surge that we're seeing?
So for Capillary Tech, if you look at it, seems like some buying has come back again after the listing. The stock listed back in November 21st. And since then, the stock is up around 25% since listing. What does the company do? It operates in a SaaS space. And if you look at the IPO that was done, it was just around 878 crore rupees, of which 345 crore was largely fresh issue. The stock is gaining largely because some buying interest seems to be back in this counter post the listing that we had seen. When it comes to a counter like Magnetic Cloud, if you look at, that stock has also been gaining in trade. And if I look at the volume data, it's just opening that. I'm not able to find that data.
On Magellanic Cloud, again, the revenue and net profit was very flat. Their TCV is expanded beyond 118 crores in the second quarter. And the order wins that they've got under surveillance in railways, I think that has been one of the key highlights that we've been talking about as well. But clearly, the fundraise approval, the defense and fintech project boost, do you think that's something which will probably work for them?
They're also expecting the second half to be much better on the back of execution of the existing order books and new opportunities. And the financials have also been the growth has been quite strong. From 74 crore, the PAT has increased to around 103 crore over FY 23 to 25. EBITDA has also doubled from 108 to 206 crore, and revenues have increased from 420 odd crore to 600. So steady growth in financials is what we have seen, and second half is expected to be better. That could be a positive point coming in for this counter. But I would want to highlight one stock that has been falling in trade today, and that's IGL largely. The stock is down 2.5%, and this could be largely because the stock is moving out of F&O, and hence we are seeing some correction or some positions that are getting wind off here. So that could be largely the reason behind this move. Kush, any view, this downtick in IGL, is it largely because of this?
Could well be because this has been an active F&O counter. But just on a lighter note, I think this was more of a shorting candidate, and that opportunity now goes away. So it's coming at the support zone of the 190, 192 mark, which is medium-term support zone. Perhaps tomorrow or day after, once the stock stabilizes around these levels, it could go into sideways mode. So not a recommendation to buy. It's just that the stock's broken some of the key levels on the back of fairly good volumes, and as you rightly pointed out, it could well be because it's coming out of the F&O. But still, this dip does not make it a good candidate to buy even at these levels.
Right. And Pankaj, how's the city gas distribution IGL looking on the fundamental basis, this counter? Are valuations now cheap, and is it a good time to buy?
So oil and gas, typically the entire pack carries a pretty cheaper valuation compared to the overall market. But that is where the good part stops. I think growth-wise, things are still a lot more challenging. We still don't have much clarity in terms of how the APM allocation will sort of flow out. So this is not a space I would sort of recommend to sort of chase.
Okay, so that's with regards to where IGL goes. Let's look at a BEL. That stock is up nearly 2% in trade today. And this is on the back of the joint venture agreement that they've signed with a French company when it comes to Hammer. Now, Hammer are weapons for which it's a strategic tie-up, and that's the reason why you're seeing this kind of a surge that's coming in on a BEL. Pankaj, your view when it comes to BEL plus Paras Defense as well, who's signed an MOU for a strategic development. And you have defense as a sector which has been ruling under pressure over the last couple of days. Today, some bit of respite coming in. How would you look at it, and any top picks there?
So Bharat Electronics, I think, is one of the few companies in the defense space which has been sort of delivering very steady set of numbers, because when you look at a shipyard, their numbers are pretty lumpy. And you have other segments there also things are sort of quite lumpy. I think this company has been sort of delivering 20% kind of a growth for a decent period of time with the good EBITDA margins. I think order visibility is pretty good, 70,000 plus odd crores. So they've got a visibility of more than 3 years. I think Bharat Electronics should be the top pick in the defense space. And I think this stock has done well, and we are quite comfortable despite the fact that it trades at slightly rich multiples. But given the stability in growth, this is our top pick in the defense space.
But oil marketing companies is something that remains in focus, and this is after Investec has downgraded its rating on all the three oil marketing companies, that is IOCL, BPCL and HPCL, to sell from hold. They have maintained the target price for individual companies, no changes on that front, but downgrade the rating. And one of the major reasons why they have actually downgraded the rating is the sharp run-up that we have seen in all the three counters. They are saying that the stocks are up around 20-25% since October 2025, and the market at this point seems to be overlooking the biggest risk. The market is cheering the fact that the gross refining margins or the refining margins for few of its product have been on an increasing trend, but this increase in the margins or this increase in the refining margin is something which has been impacting the marketing segment, is what the brokerage is saying. In marketing segment is much more important for the oil marketing companies as compared to the refining segment. Hence, they believe that it's a good time to sell oil marketing companies because their earnings could get impacted going forward, and the best play or the preferred play for them in the refining segment would be through Reliance Industries. And interestingly, JP Morgan had also come out with this note on Reliance Industries where they did maintain their overweight rating on the counter, hike the target price to 1,727 from 1,695. They say that the valuations are relatively better compared to peers and attractive. And if you look at Reliance Industries, it is trading at a discount of nearly 15% compared to the actual value. They say that the earnings drag that we had seen from the refining and the petrochemical segment in FY24 and FY25 is largely over, and they're expecting earnings growth to be much better from here on. And they have also pointed out few key catalysts when it comes to the calendar year 2026. They believe that Jio IPO will be an important trigger to track for Reliance Industries going forward. Apart from that would be commissioning of the new energy business and growth in the retail business going forward can be supportive for the stock price. And there was another note, in fact, by JP Morgan's commodity team as well, and they have predicted that oil prices, if the current scenario continues where there is excess supply and less demand, then if you look at the oil prices, they could fall to nearly $30 per barrel from the current prices that we're seeing, which is around $60 per barrel plus by the end of year, that is by the end of 2027. So that's a sharp downtick that they're expecting when it comes to oil prices going forward. But this is largely based on the fact that there will be more supply coming in and demand would continue to go down for oil products. Obviously, they have not reduced their overall prediction. They're just expecting that this could happen going forward. But overall, they have still saying that crude would remain at around $57 per barrel. That's the prediction for Brent crude for 2027. Right. Pankaj, oil marketing companies, have you tracked this counter? Yes, you must have tracked this counter. Sorry for asking that. But yeah, when it comes to oil marketing companies, refining margins are on an uptrend. But when you look at the marketing segment, that has been impacted as of now because of rupee depreciation. So overall, how are you looking at the oil marketing companies at this moment?
I think overall, when you look at, we see good amount of volatility in GRMs because last year we had GRMs in the range of say 3.5. Even till Q1 it was something similar. Whereas when you look at in Q2 it was about $10 for both, say something like IOC or BPCL. And so expecting further sort of improvement is a sort of a challenge. But I think within the oil and gas companies, the oil marketing companies are relatively better placed. My sense is that crude is expected to remain low. So despite currency depreciation, marketing is still something which will continue to sort of make money for them. The GRMs could be volatile, but given the sharp run up in prices, what we've seen, probably this is not the best time to chase oil marketing companies at current levels.
So do you agree with the fact that one should prefer Reliance Industries over oil marketing companies at this moment?
Absolutely.
Okay.
All right. The preference is Reliance over OMCs from Pankaj. But today the market, there is a fatigue and a very small range the market is functioning in. Not much action happening in the volumes in the expiry space, but there's a lot of action happening in the chatter from the street. Somit comes in. Any stocks here?
Well, as you were saying, there's a fatigue in the market. In fact, the cash turnover also is showing the same thing. By 2 p.m. at least the cash turnover was down 1% compared to what it was the previous day and 15% down compared to what it was the average volumes that we had seen for the previous 5 days.
But when it comes to stock-specific action, Stylum is one counter that has been buzzing in trade. It's up 5%. Dealers are indicating that a big corporate development might be announced very soon. We had indicated about such corporate development that could happen even previously, but what dealers are now saying is that this could be announced in the next 1 week, and they're expecting a strategic investor to come into the company, and one of the promoters could likely announce a stake sale very soon. When it comes to Sona BLW, there are buy flows at lower level on institutional desk in this counter. Both foreign and domestic institutions have been accumulating this counter actively at lower levels in trade today, and delivery volumes could well be on the higher side for Sona BLW. When it comes to Torrent Pharma, multiple dealing rooms have suggested a buy call to their clients on technical charts, so keep an eye out for Torrent Pharma as well. And lastly, when it comes to Vedanta and JSW Steel, large HNIs have started to accumulate this counter in trade. If you look at both the counters recently, there was a lot of weakness, a lot of selling pressure that we had seen. This is expected to turn around going forward, and hence some accumulation on the large HNI desk in both JSW and Vedanta is what we are seeing in trade today.
Vedanta has been in focus as well on the back of the arm which is filed for confidential papers for US IPO. A quick view in terms of Vedanta and JSW Steel, Pankaj, I want to talk to you about, because metals as a space been volatile, but a lot of buying interest that's emerging there.
It's sort of, just to put some context, Vedanta trades at somewhere about 4.5 times forward basis EV by EBITDA, whereas JSW is somewhere about 9.5 times. Our clear preference is again something like, say, Tata Steel, which trades somewhere about 6.5 times, and along with Vedanta. So these are the two stocks which are relatively valuation-wise attractive. See, the safeguard duty has not been of much help. We've seen at least the ferrous prices being lower. Though for Vedanta, I think aluminium prices being higher and backward integration should help in sort of a better set of numbers. So I think these are the two companies relatively looking attractive on a valuation side.
Vedanta. Kush, you know, from what Somit actually indicated, buy flows coming in on a Sona BLW and a Torrent Pharma. What are your charts indicating?
Oh yeah, both of them very healthy. Sona BLW, we know for the reasons, for the sad reasons that the stock crashed, and now you're starting to see a gradual uptick on this one. So yes, definitely, this is something that you can consider. It will also have the tailwind of the auto ancillary space doing well. So that catch-up value will also come in. Positionally, I think 545 is a good level in the next 3 to 6 months for the stock to go ahead and clock 485, 480. That's a support zone. So a good risk-reward ratio on Sona BLW. Torrent Pharma is more of an investor pick, and every time it corrects, comes close to the 20 and the 50-day moving average support zones. Not a bad idea to start accumulating. The same is the story this time around. If you see the fall for the last 5 sessions, then it's come on the back of very, very low volumes, and the upticks have been on volumes which are at least about the 20, the last 20-day moving, last 20-day average volumes. So yes, the stock is very close to support zones, rebounding once again. If you want to consider, you could consider an entry at this point. Keep a tight positional stop loss at the 3,600 mark, and positionally the stock would head to 3,800 and the recent swing high of 3,875. So Torrent Pharma does look good at the current levels.
Wise, Torrent Pharma is a pick coming in from Kosha. But Indian pharma majors Dr. Reddy's and Lupin are stepping up their biosimilar ambitions, looking at this segment as the next major growth engine in the US markets. Varsha is here with the details. Varsha, two stocks, two important triggers also. Of course, the biosimilar is very much important. What are you taking right now from here?
Yes, absolutely. So biosimilar, it's the next leg of growth for these two companies. In fact, for majority of pharma companies. Talking about Lupin's biosimilar gain, almost 70% of business they're expecting from complex generics and specialty when it comes to FY30. Well, over 50 product filings are planned when it comes to respiratory, complex injectables and biosimilars. Onto the biosimilars pipeline, almost 4 to 5 products are expected to come online in medium term, be it in chemotherapy, in autoimmune diseases, and also to treat certain eye conditions. Talking about the US business outlook by FY27, they are expecting $1 billion of revenue in US by FY27 with 5 biosimilars in the US market by FY30. Overall margin guidance has been expected to 24 to 25% in FY27, and even Jefferies has maintained a buy rating on Lupin on the back of increasing trend when it comes to biosimilars. Talking about Dr. Dr. Reddy's lab, if you see, they've entered into blockbuster market of wherein European Commission has approved their drug AVT03, which is a biosimilar of Prolia and Exiva, which has a market size of almost $5 billion when it comes to US in in 2024. What these products do is they treat certain bone complications from advanced cancer. Dr. Reddy's have also done partnership with Alvotech, wherein Alvotech will develop and manufacture the drug, which is AVT03, and Dr. Reddy's will register and commercialize this in US and Europe, with US being an exclusive market for them, and for Europe and UK semi-exclusive market for them. And recently they've also tied up with the same company for biosimilar which treats cancer. So overall, a lot of deals are being made when it comes to biosimilar from a lot of pharmaceutical companies, and we also must watch out the pricing pressure which is expected or which is going on when it comes to biosimilars.
Varsha, hold on with us. Glenmark Pharma is also in focus. The stock, let's just pull out the chart. It's the top gainer in the Nifty Pharma Index also, and near the day's high level, stock is up 3% odd. The company is in focus after it launched its world first COPD treatment, introducing a triple medicine therapy delivered through a nebulizer. It is complicated, but Varsha will simplify it for us. Varsha, what is it?
Well, it's a triple medicine in one given through nebulizer, and this combines 3 drugs. This helps to open the airways, reduce swelling and improve breathing. Now this helps patients who struggle with inhalers. So basically 3 drugs into one nebulizer, which is Glenmark Pharma is coming up with, which is the first company to launch this product. Now why this is important? As I said, this is the first time ever these 3 medicines are available together in a nebulized form, makes treatment easier and simpler for the patients and could become a new standard of care. Overall, this launch shows Glenmark focus on innovative medicines, and of course the track on the research and development, and the company says it will make advanced treatment more accessible. So overall, because of the first company coming up with this nebulized form, the 3 drugs into a nebulized form, is one of the reasons why the stock is up as of today.
Right, Glenmark Pharma in fact was part of our cover segment as well yesterday. The street was expecting some product launch, and also some more positive announcements are expected to come in when it comes to one of the US facility as well. So keep an eye out for Glenmark Pharma in trade. Kush, coming to you on Glenmark Pharma, how is the charts looking? The stock is up 3%. Is there more upside from current levels?
Yeah, so with, the fall has halted. That's the first positive, and by that I mean from those 20 to 50 odd levels, the stock had actually underperformed and corrected quite a bit. Now the fall's halted around the 1800 mark. If you see now, there is a mild, rising trend line support that's coming in. Not a very sharp one, but you'll take it. After this kind of fall, you'd want the stock to consolidate gradually and then move higher. So at least that is very clearly visible on the charts. I would suggest that yes, from a risk-reward ratio, this does make a good positional bet with a stop loss of about 80 to 100 points. On the upside, the stock has all the potential to cross the 1950 mark. Once that is taken out, you could well see 2100 also. The move could be gradual, but with the kind of base formation and the up move that you're seeing, this does make a good bet. So I would consider Glenmark Pharma at the current levels as a positional bet.
Choice of course is Glenmark Pharma, but the equity asset class that has given fatigue to all of us today in the day's trade, and a lackluster performance in terms of volume on the expiry day. But there's another asset class which is giving a lot of concerns to the investors, and it's on a downtick. That's the Bitcoin. Ajit Khurana, founder at Reflexical, joins in with us. Ajit, there has been a significant downtick coming in Bitcoin and strong liquidations all across, large participations from the institutions, all are selling. Will you see this selling continue going ahead?
We have indeed seen a lot of concern, because we found that on 19th November, when the news came in that FOMC rate decreases may not happen, as a result liquidity in the market might dry down, we saw greater than $500 million of exits from the ETF flows. Even presently, while the open interest has increased, but at the same time the funding rates are negative, thereby indicating the likelihood that there is a lot of fear in the market. But there is one spark from the short-term point of view. Whenever the funding rates are negative, which is not all the time, it's about 30% of the time, we could see a short squeeze which can cause an up spike. Medium term to long term, of course, things remain very bullish, but on the downside, short term, there is some fear.
Ajit, the risk-on sentiment is something which is very much important, and Fed rate cut expectation is something that's roughly 90% in the current odd levels. What would be the medium-term targets for Bitcoin if you had to put it technically? Of course, there is a pullback happening right now over the last 24 hours. But if you had to give important targets for Bitcoin, or say when will it reclaim that $1 lakh mark, what would your views be on that?
So one thing you should know is that the short-term, medium-term and long-term definitions for crypto are shorter than what we do for equity markets. So if medium-term for us is post-March of 26, I think that in calendar year 26, not just should it reclaim the 100K mark, that may happen actually in calendar year 25 itself, but I think that we should be looking at a new high. All in all, in the Trump presidency, which probably has a few years left, a couple of years left more, I think that we should certainly be crossing the 200K mark.
And what would be your advice to Indian investors who have invested, given the fact that volumes are still low here?
So three advices. First, regulatory advice. Please participate only from money sent from your bank account, and if you recover money, put it back into your bank account, because the regulator, especially the tax regulator, is very strict. Number two is a highly volatile asset such as Bitcoin requires you to use some sort of an averaging strategy, what we call SIPs in mutual fund markets. Please divide your money into multiple parts and participate at various levels. Now is not a bad time to enter, which is not to say it can't go lower. But I think that given that the peak was at around 125, 126, those numbers should again become visible pretty soon. So if you have an SIP, we are talking of the next several months of SIP only, not several years.
Well, thank you, sir. Thank you for joining us and giving us your perspective on Bitcoin. With that, let's slip into a short break and we'll be back with more news on the other side.
There are a lot of investment theses out there, but Samir Arora's Helios Capital believes that it's better to identify stocks that you should not invest in to find the portfolio that you should.
We don't like loss-making companies. So you have first eliminated.
What ideas are you actively staying away from in 2025 November?
When a new entrant comes, the market thinks it's competition. We think it is sanity. Fact that you reached an IPO stage is broadly you have survived. As a thumb rule, we give benefit of doubt to first quarter. The first quarter तो अच्छा होगा.
The NDTV Profit has come a long ways.
You are the new
Welcome back. You're watching India Market Close on NDTV Profit. But let's also get in Aditya Agarwala and Sudeep Bandyopadhyay to talk to us about what's happening in the markets and what should one look at. But Aditya, let me come to you first. In terms of levels, first up, volumes are thin. It is expiry. What is that closing level you would be watching out for in today's session?
Good afternoon, Neil. Thanks for having the show. Clearly, we are trading at the lower point of the day, lowest point of the day as we speak because of the expiry session. I'll closely be monitoring anywhere between 25,800 to about 25,900 on the downside. That happens to be the immediate support. And if for some reason market stands to close below this key support area of 24,900, or even for that matter, if we see a further selling pressure from here. I'll monitor for 24,800 in tomorrow's trading session, because a close below that will again open gates for 200 to 300 point correction on the Nifty. Overall, things are looking little weak as far as the index is concerned. Could be a short-term blip, but yes, as of now, looks little on the weaker side. Also, one needs to keep a very close eye on the VIX, because that is something that had shown a sharp spike couple of trading sessions back. And if we see that kind of a spike come back into the Indian markets on the VIX, then you could be in for more volatility as you head into the December series. And as you would know, usually December series is encountered with thin volumes because of a lack of participation from the FIIs, which leads to more volatility in their markets. So be a little watchful of two things. One is 25,800 on the downside, and the VIX that has to be on your radar. If that spikes above the level of 13, then you could be in for another volatile session, at least in the December series.
So the VIX is cooling off, and that 25,800 mark, that's very much important, and the closing today, that was something we'll be tracking as well. But Aditya, what are your technical picks?
So I've got a couple of recommendations on the long side because the undertone of the market today is still bullish. So MFSL is something which is looking quite interesting to me, continues to make higher highs, higher lows, for a target of 1800 on the upside with a stop loss at 1660 on the downside. That is the first recommendation, Sharad. The second is Glenmark Pharma. I noticed you guys were also discussing about Glenmark Pharma. It's a quite interesting looking chart setup, taken support at the lower end of the trend line, and from there it's bouncing back. In fact, if one sector I think that can be the hiding place in the event of a volatility, it could be pharma, and Glenmark Pharma does stand out in that entire pack. So for a target of 2000 on the upside, I'd look to be a buyer here with a stop loss at 1820 on the downside.
Okay, so a buy coming in on a Glenmark, but let's get in my colleague Mahima to talk to us about what's happening with a Yatra. On the back of the chairman, Dhruv Shringi, the co-founder who resigned from the post of a CEO after 19 years, the stock actually corrected in trade, was down nearly 7 to 8%. A good recovery that has come in at the day's highs now. Let Mahima give us all the details. Mahima, over to you.
Right, so Yatra Online was started in 2006 by Dhruv Shringi, who was one of the co-founders, and of course led the company as the CEO also for 19 years. Has decided to now step down, and the reason that's mentioned in his resignation is due to personal reasons. Of course, he will still remain the chairperson in the board and will continue to be the whole-time director as well. They've appointed Siddhartha Gupta as the CEO with effect from November 2025. Just a brief about what Siddhartha Gupta has done so far. He was the president of Mercer India, a business of Marsh McLennan, and previously he served as the CEO of Mercer Metal, which was a talent assessment arm of Mercer. He's also held leadership roles in SAP as well as HP. In terms of how Yatra has done under the leadership of Dhruv Shringi, of course, it got listed in 2023, up 24% since its listing price. Last 5 quarters, it has moved from the consumer business and shifted to the corporate business, and that has brought in a lot of growth for the company. They plan to cut down the consumer business from 55% in gross bookings to just 35%, and corporate business to grow to 65% from 45% currently. FY26, they're expecting 20% revenue growth and 30% EBITDA growth. Antique also did come out with a note for Yatra Online. They've said that overall they've maintained buy with a target price of 230 on this counter. They believe that this move appears timely for the next leg of growth. Of course, Dhruv will be looking over the company from being the whole-time director as well as the chairman, and also will be looking to how the business can be grown from here on. But they're also expecting overall a 45% CAGR for the next FY25 to 28 leg. So this is the overall view of what's happening with Yatra Online, and of course what this leadership change means for the counter.
Sudeep, have you tracked Yatra as a counter? Given this leadership change, it didn't seem to be big negative, but the street had earlier taken it in a quite a negative way. The stock was down 7%, although it has recovered much and is now up around 1% in trade.
Well, I don't think the street understood. There is absolutely no change. They have brought in incremental talent. Dhruv remains with the company. He has become the executive chairman. So, he's not going anywhere. He's very much there and he's continuing. I mean, it's just a formality that when you put in a resignation as CEO, you have to give some reasons. So he must have put personal reasons. but he's very much the executive chairman. He continues in executive role with the company. And I'm sure the new CEO who they have recruited, who they have brought in, will be reporting to him only because Dhruv will be the executive chairman. So I don't see any change or in leadership because of this. Incremental talent has been brought in. That's good for the company, and fresh thinking should come, and that's also good for the company. Of course, the model has been tweaked over the last few years, and that has worked wonders for the company. The B2B business has been very, very interesting for Yatra. So to say, and the company has reaped rewards of that as well. The way the travel and tourism and is poised world over, including India, I think Yatra is going to continue to perform well over the next foreseeable future.
So if we compare Yatra, IsMyTrip and Ixigo, what would be your top pick in this space?
Well, I'm probably a little biased towards Yatra. So I will go because I believe the potential of Yatra hasn't been fully realized yet. And now is probably the time for it to really come to the fore. Ixigo also is good. There is absolutely no problem there. I think they also have scope for growth. And look, the entire travel and tourism space is booming, and it will continue to boom in the foreseeable future. That's the prediction world over.
A sudden spike coming in Ixigo as well in the intraday charts, and of course Yatra coming in the green as well. But moving on, Commerce Minister Piyush Goyal has praised the newly implemented 4 labour codes, saying the reforms have been warmly welcomed by both employers and the trade unions. Listen in.
Well, the 4 labour codes are truly an outstanding testament to the trust that Prime Minister Modi has earned from all sections of society. The fact that 140 crore Indians today have confidence in our Prime Minister, that both employers and workmen organizations, trade unions, have heartily welcomed it. It is a very balanced, well-articulated, well-thought-of compilation of 29 laws in these 4 codes. It ensures good practices, the occupational safety of our workmen, minimum wages at a national level for all workers, social security, including for gig workers. In a way, it provides opportunities for our sisters and daughters, women folk to come into the formal workforce. It is truly a game changer that Prime Minister Modi has come out with. I'm sure the states will now come out with the necessary rules and the enabling legal framework to be able to get the maximum benefit of these 4 labour codes.
Commentary coming in from the Commerce Minister on the new labour code, and this will be reshaping the multiple sectors going ahead as well. From diagnostics to staffing and even real estate platform companies and even IT exposure can be there. Some may gain, some may face fresh costing pressures going ahead. Let's go across to Mahima for the full breakdown. Mahima, what are the sectors and the stocks which will be impacted here?
So on the positive side, there are 2 sectors that stand to benefit. One is the diagnostic sector and the other is hiring companies. I'll start with diagnostic companies because the stocks in focus, of course, include Thyrocare Technologies, Metropolis Healthcare, Dr. Lalpath, Suraksha Diagnostics. Now, how is this positive? First of all, the law mandates recurring annual volume of health checkups for workers over 40. So this will get them more inflow of health checkups coming in, and this creates stable revenue stream for this entire sector. The next one is hiring companies. Stocks in focus includes names like TeamLease, Questcorp, SIS. Now the companies that were operating informally will now formalize the overall process of hiring, and this could probably lead to more inflows coming in for all of these companies. This will increase demand for professional staffing and payroll services as well. On the negative sides, this will impact real estate companies as well as platform companies and IT companies. For real estate companies, of course, a lot
lot of these counters include Godrej Properties, DLF, Prestige, Brigade, Oberoi, as well as infra companies like L&T and ABB, etc. But this is because overall labor costs for them will jump by around 8 to 12%. Projects may face temporary slowdowns as developers might overhaul the payroll, and increased statutory costs will also, of course, will be a part of this, but this might be passed on to their clients. The next one is platform companies, Swiggy, Eternal, Urban Company, etc. Delivery also could see an impact because aggregators are now required to remove 1 to 2% of their overall turnover, capped at 5% for social welfare of gig workers. Analysts believe that this could have an impact of anywhere between 4 to 10% on the overall EBITDA of these companies. But eventually, analysts also believe that this too shall be passed on to the customers. Lastly, for IT companies, of course, stocks in focus includes Coforge, TCS, Infosys, Wipro, etc. Now, for this particular segment, clear fixed-term rules may boost project-based IT hiring, and stricter security norms could overall raise employee costs for them, and IT firms could see 5 to 10% increase in terms of their payroll costs. So this is the overall view of what the labor code means for different sectors.
Okay, so those are individual sectors, thanks Mahima, that could see impact of the new labor code. So Deep, let me come to you. We've got the positives, we've got the negatives. Anything that you would want to add on it as to how do you see companies reacting to this?
I think, if at all there are negatives there in the short term, maximum medium term, because eventually costs will have to be passed on and they will be passed on. The adjustment which is required immediately is, from the platform companies, Swiggy, Zomato, Urban Company, and Delivery, and others. Amongst all this, I think I'm a little, perturbed with Urban Company because they run services which are extremely competitive. Mostly unorganized sector is what they're competing with, and escalation of cost will have effect on their business. So they will have to tread very, very carefully. So I'll watch Urban Company carefully because cost escalation in their case may be a little difficult. As far as Swiggy and Zomato is concerned, I think it's 1 or 2 rupee, 3 rupee maximum, which will be the cost escalation. And I think that can be easily absorbed by the customers, and I'm sure they will pass on. For delivery also, I don't think we are too worried. As far as the real estate companies are concerned and some infrastructure projects are concerned, there will be cost escalation. So short-term EBITDA may get hit, but eventually in the long term, I think these will all be passed on. And we will have the companies continuing to perform the way they were performing. Some amount of restructuring may affect a P&L performance in the medium to short to medium term.
Right. The all-new Tata Sierra 2025 has launched with the SUV's starting price is set at just 11.5 lakh crore rupees for now, with full price expected to be announced in December 2025. But how does the new Tata Sierra look like? We have Punit joining us from the event.
Well, thank you for that. It's definitely a key launch. I have made my way into the car right now to just show you the plush interiors that Tata has launched at a very attractive price point of just 11.49 lakhs. Now, it is the introductory price, so you will have to get your hands on it to get the initial benefit. But just look at the cabin interior. It's a dual tone. You get the plush interior now, but it's also, you can look at the number of screens that are visible. They have a soundbar in as well, with a very ergonomic steering wheel to go with that. When you also look at the back, it is very, very exterior to say the least. But let me just take you to the front as well, because there are a couple of highlights that you need to watch out for. When I make it out of the particular vehicle, it will be visible to you that there's a lot more action. Now, of course, we are at the key launch one, which is the yellow color silhouette, and it offers an end-to-end DRL, the first in the segment what they've highlighted. You get a lot more exposure at the start as well, with a huge grille to say the least, which also has the air vents. But for Sierra, it is an ICE launch. The EV one is going to come very soon as well. You can see around me also there's a lot of people, a lot of commotion there for the new launch. But at 11.49 lakhs, it goes head on with the likes of Creta amongst others. Could this be the disruptor? Tata has given all that you need to make that purchase, but it's a key launch which is in a segment that sells almost 45,000 units in a month. So you do need to watch out how Tata competes with the likes of Creta as well as others in the segment. But they have hit it out of the park, to say the least, and a lot more expected in the coming few months. 6 colors. This is the yellow one, to say the least, but it's a key launch and a very strong one, to say the least, for Tata Motors.
Your way out to the car has already made way for 2 other people who've already got it, I think. So I think Noah's really waited to let you take another look at it. But I think it looks like an amazing car. And I think this should be something which I remember having a conversation with you a couple of days ago where you've said that this is a cult car and probably this would be the one which would support a Tata passenger vehicle as a company as well. So let's see what happens. But thank you for that. Interesting one, you know.
Hiral, it's like a flashback. My childhood also, there was a car in the family that was Tata Sierra as well. So of course we knew that the vibes coming like how a Qualis was. But Sudeep, any kind of memories are there? Have you ever ridden this car? The Tata
Not really,
Sierra,
but
the older
Qualis,
one?
you mentioned Qualis. That used to be a favorite for all of us. And remember that car was in a position to take 7-8 people. And that was very, very useful when families used to travel and all that. And I know people used to, use Qualis as a replacement for Ambassador. The Ambassador's replacement was Qualis, nothing else.
Oh, that's great. So the Ambassador's replacement is Qualis.
Qualis. And Aditya, would you be a buyer of a Sierra?
Not really, Hiral, because there are so many new cars which are coming up. There are a whole host of new models from Hyundai, from Mahindra, from Tata. Maybe evaluate between them and go for it. Honestly, if you ask me personally, I did not quite like the look and feel of the new Sierra. Though it brings back old memories because I have been in the car. It belonged to one of my relatives, so I have been in the old Sierra. But unfortunately, I did not quite like the new look of Sierra.
So Aditya, you don't like the car, but what about the stock Tata Motors PV? It has been on a downtrend since that demerger has happened. But do you see a reversal to happen anytime soon here?
No reversal anytime soon, but I think it's a good risk to reward stock if you're looking to add maybe a automotive stock in your portfolio, especially a four-wheeler one into passenger vehicles. It's not a bad stock to buy in your portfolio, but it'll take some time for the stock to go up. At current levels, I don't think so there is any immediate triggers for the stock to go up. There's lack of momentum in the stock. Just that risk to reward is in favor. On the downside, 315, 320 is a good support area. On the upside, once stock starts to go up, can test levels of 500 and plus.
10 minutes of trade, Aditya, what would be your BTST trade?
So I will stick to Glenmark Pharma for a BTST trade. I think so. This is one stock which is looking really quite interesting to me for a target of 2000 and a stop loss at 1820 on the downside.
Right.
All right, Sudeep, one last query on the auto space as well. But before that, we're holding on to a thought. There's a lot of movers, shakers happening in the day's trade. Varsha, what are the stocks on your radar today?
Well, a lot of stocks on my radar. Let me start with, top gainers, wherein Orient Electric, if you see, volumes are more than 90x of the average. Share is down 5.3% in last 5 days, fell 9.5% in last 30 days. Next on the list is Craftsman Automation, wherein stock is up most in 6 weeks, volume triples. This stock is buzzing on the back of volumes. Volumes are at 6x of its 30-day average. Talking about Neogen Chemicals, well, the trading volume was 41% above 20-day average. Stock declined 38% in past 52 weeks, snapping 5-day losing streak. Next on the list is Himadri Specialty, wherein volumes are at 14x of 20-day average. Stock is up most in 15 weeks, snapping 3-day losing streak. Next is HEG, wherein shares is up 0.4% in last 5 days, the biggest intraday gain since 29th October. Well, talking about the top losers, let me start with Acutaas Chemical, which is down 4%. Stock is up 60% in last 1 year. Talking about Authum Investment and Infrastructure, earlier in day, if you see, stock reached lowest level since August 14. Shares is down 5.8% in last 5 days and 13% in last 30 days. Talking about ITI, shares are down 2.02% in last 5 days, fell 5.6% in last 30 days. Lastly, Honeywell Automation, if you see, the volumes are at 0.4x, which is trading below 200 EMA at rupees 37,860.
Sudeep, of course, the chemical space is buzzing in trade. And you see this companies have doing well. Any pick in the chemical space you're liking, where there is a risk-reward ratio is good? Of course, there is the anti-dumping duty and pricing pressure in most of the categories. But if you had to pick up a couple of good categories where the risk-reward ratio is good, what would be that?
Well, if you're talking about specifically chemicals, specialty chemical and agrochemicals, I think this is one segment where, we have been kind of very keenly watching. We believe that, the problems of this sector is they're near their end. We have seen the very bad results coming from these companies for the last 7-8 quarters. Things have started improving. The green shoots are visible. The entire destocking phase of the industry is over. There are less pressures from China as well. And the logic of the sector gaining momentum, which was China plus one, still holds in spite of the global challenges. So we are positive, mildly positive, I would say, in the sector. We do like SRF. We do like, UPL. It's one of the largest in its category. It's probably the 5th largest in the world, with businesses spread across continents. It had suffered quite a bit, but I think somebody with a slightly longish term outlook can look at picking up appropriate chemical, specialty chemical, agrochemical stock for their portfolio now at this stage.
And how's Deepak Nitrite looking like? Because I remember till last year it was one of the darlings in the market. But in the last, on a YTD basis, the stock is down nearly 38% now.
No, definitely that also can be looked at, but we looked at from the the potential for things moving up quickly, and I do like UPL there. I do like SRF there. There's absolutely no problem with Deepak Nitrite as well.
Okay, so that's with regards to where the chemical space goes. Aditya, do you like anything from the chemical space?
One is Navin Fluorine and the second is United Phosphorus, UPL. I like that too as well. UPL clearly after the numbers, stock just zoomed past, and after that we've seen a bit of a correction and a consolidation as well. I think it's a good idea to latch on to the stock at current levels all the way down till 5,700. 55, 5,600 is a good support area, and if you're holding on to it for at least a year or so, you can see levels of 7,500 on the upside. Talking about UPL, this is also one stock from the agri-chemical space which is looking quite interesting, and on the upside, stock can easily test levels of 820 to about 850. On the downside, good supports are somewhere between 710 to 720. So my sense is these two stocks are looking interesting. Navin Fluorine and UPL can be bought within the specialty chemical pack, and as disclosure, both these stocks are recommended to our client and could be part of their portfolios, no personal holdings.
Okay, so Navin Fluorine and UPL, two stocks you should be watching out for. Sudeep, a quick view when it comes to banks, because the dichotomy between the PSU banks and the private banks is immense right now. Bets are more towards the PSU banking space versus the private banking space. And within that as well, people are preferring smaller banks versus the larger banks. What would your view be and what would your top picks be?
Well, I completely subscribe to that view. I think there is a significant valuation gap between the private sector banks and the PSU. And the valuation gap has got accentuated over the last few quarters, I would say. Look at NBFCs and good private sector banks. They are trading at anywhere between 5 to 7x of book. Whereas, the largest public sector bank, State Bank of India, which is also the largest bank of the country, trades at 1.1x. So obviously there is a significant gap. I'm not saying they will be identical, but some amount of bridging of the gap is bound to happen. Now, if you look at the smaller PSU banks, again, the valuation gap is significant. Banks like Bank of Maharashtra are they're very good banks and quoting at a significant discount to their private sector peers. Of course, there is this talk about merger. One more round of merger and consolidation amongst PSU banks to make bigger entities. When that will happen, who will merge into whom, this is all in the realm of speculation. But in spite of that, I would say looking at smaller PSU banks and even the largest PSU bank at current valuation does merit a sense. Also, some of the private sector, not so fancied banks like a Karnataka bank, is quoting at a significant discount to their peers like a Federal Bank or a Catholic Syrian Bank or a City Union Bank. So even you can selectively pick up smaller private sector banks where the valuation gap is significant.
Aditya, how's Angel One looking like on charts? A sharp spike that we had seen in the last half an hour of trade here.
So definitely looks quite interesting to me, and especially after the listing of Grow and the kind of run-up that you've seen in Grow. Angel looks interesting. It's already also corrected from its recent highs of 28.50, 28.60 kind of levels. I think it's a good stock to buy at current levels. Place a stop loss somewhere around 26.50 on the downside and look for a target of 2900 on the upside.
Thank you very much, Aditya and Sudeep, for joining us and giving your views on the technical and the fundamental perspective. And today is the expiry for Nifty and a very volatile session also. This is the third straight day we are seeing a significant flow coming in the downward side. And the concern is that Nifty is expected to close below the 25,900 mark. Nifty Bank also, there was a sharp fall coming in. That's around 58,800 odd levels. But the volatility in the market, that has actually come off, and the volumes in the next series in December might be on the lower side. Let's actually point out the key constituents in the Nifty heat map where the movement has been. BL, SBI on the green front, but the reds have been increasing, and overall largely we see the IT names, they have taken a beating, be it Infosys, and even you could say your stocks such as Tata Consumer, Tata Motors, PV and Titan consumption names also taking a hit, followed by Trent as well. Apart from this, let's pull out the sectors where the action is there, and largely we see it was a sea of green earlier, but only the realty and the PSU banking and the metal space, these three held their grounds, and technical up moves were seen in these counters. But consumer durables, IT, that's where the selling was there. Also, let's actually pull out overall, apart from this heat map, the advanced decline ratio, how things actually pan out. And net, you could see that this was going even Stevens, but then we saw a slight recovery coming in the small cap indices. Now, this is a divergent trend since the last three trading sessions. Why? Let's pull up the Nifty mid cap and the small cap index. That's what I'll show you. That is still in the green. Nifty mid cap, it's up 0.2%. And remember, Nifty has seen a sharp fall. Small cap also ending in the green. So divergence coming in these counters as well. Let's pull out the BSE 500 index, where the top contributors, the stocks would be in focus. Orient Electric, that has gone up past the 20% mark in the trade. Craftsman Automation also a significant up move, almost 5% growth, and Brigade and Century Ply also making it to the list. But the selling pressure, we could say, is in ITI. There's a profit booking happening. Also Honeywell Automation, VIP Industries, RITES, this is where we saw significant volumes coming as well. So these counters did see a fall in the market. The rollovers also, they're largely at around 70 to 80% for the next series, but the volumes are lesser. It will be very interesting to see the data tonight when it comes post-market hours. Let's also expect important announcements coming in. Cues for tomorrow, eyes on the globe, US PPI data, all the backlog data of the US markets this week will be coming out. Interim dividend also coming for Power Finance. And also looking at the bonus issue, that is HDFC AMC 1:1. If you're holding one share, one bonus. NSE's important board meet coming in, and this includes IIFL Finance, JK Bank and Hindustan Construction. These are the overall fundraise happening. Largely the market is lagging triggers, and it's going to be very much stock specific when it comes to the movement. But that's all for India Market Close. Stay tuned to NDTV Profit, and up next Himangshi gets us Market Express.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I
or
hold
buy
CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
Hello and welcome. You're watching Market Express and I'm your host Makshi Bahugna. Now let's get straight into the show and let's see how the markets have fared today. So benchmarks were under pressure and ended the day in the red. Nifty ended the day below 25,900 levels while Sensex shed over 300 points. Advanced decline ratio, if we talk about, was mildly tilted in the favor of the green. Now let's look at the sectoral picture. That was quite mixed. Realty and PSU banks lead the gains. The metal and defense pack also managed to, gains some gains there and could be seen there. And on the flip side, media and IT were on the back foot. The real estate sector continues to underperform with the Nifty Realty Index down 15% year to date, even as the broader Nifty 50 is up 9%. Several major developers have seen sharp corrections through FY26, particularly Puravankara and Arvind Smart Spaces, both down more than 30% this year. Investors remain cautious amid weak new launch momentum, a 61% drop in launch volumes for top developers and also affordability pressures from the rising home prices. Analysts also expect labour costs to rise 10 to 15% under new labour laws, while luxury housing is likely to drive value growth, and also most developers expect stronger launches in the second half of FY26. Sales volumes across major cities may remain largely stagnant. Now, in a blast from the past, Tata Sierra is officially back. The company has relaunched the iconic model from the dawn of the century, but with a modern touch, as you can see on your screens right now, the visuals. Tata Motors are calling it the rebirth of a legend. Sierra was initially, unveiled at the Bharat Mobility Expo, and after several design teasers, the company has finally launched this SUV today, which takes inspiration from the 90s and also a sports retro-inspired design like the older Sierra model. So it has been launched with an introductory ex-showroom price of 11.49 crore rupees, and bookings are set to open on December 16, while deliveries begin on January 15th of 2026. BSE is on a strong run with the stock climbing about 15% this month and also beating the mid-cap index. Investors are cheering a robust second quarter driven by second earnings and also firm growth in the options and trading. With regulatory worries easing, the chart setup looking strong, sentiment stays upbeat. Next up, we have Paras Defense, which is gearing up for strong growth, expecting about 40% revenue expansions in FY26. The company has signed a key MOU with the Inter-University Accelerator Center to develop commercial-grade MRI magnet systems and also promote indigenous manufacturing. Paras Defense aims to make India self-reliant in superconducting MRI technology. And also with a healthy order pipeline there and projected inflows of up to 2,000 crore rupees, the company sees stable or slightly improved profitability in the year ahead. Next up, we have Bharat Electronics that has signed a joint venture with the Safran Electronics and Defense to co-produce the Hammer Smart air-to-ground weapon in India. The 50:50 JV localizes manufacturing, supply and also maintenance, raising indigenization to around 60% and also cutting the import dependence. The Hammer system works on platforms like the Rafale and Tejas. So BL expects about 15% revenue growth in FY26, margins near 27% and also plans capex of over 1,000 crore rupees supported by a strong defense order pipeline. Siemens Energy has posted a strong fourth quarter with a healthy growth in revenue, earnings and also net profit. The company continues to see robust demand, securing significant new orders that boost its order backlog to record levels. Margins remain steady, reflecting strong operational performance and also confidence in the future prospects. Next up, we have Glenmark, which is making a major move in the respiratory space. The company has officially launched what it terms a world-first treatment for chronic obstructive pulmonary disease patients. So the critical innovation here is the shift to a triple medicine therapy delivered entirely through a nebulizer. So traditionally, such comprehensive 3-drug treatments were administered via complex inhalers, which can be challenging for patients, especially those with severe COPD, to use effectively. So by combining the 3 vital medications into a single dose for the nebulizer, Glenmark aims to simplify the regimen and also potentially ensure better drug penetration and patient compliance. Next up, we have Dr. Reddy's Laboratories that has said that the European Commission has granted marketing authorization for its biosimilar to treat osteoporosis. Now, the company has received approval for AVT03, which is a biosimilar of Prolia and Xgeva. So it added that the authorization applies across all European Union member states and also the European Economic Area. The authorization follows a license and also supply agreement between Dr. Reddy's and Iceland-based biotech firm Alvotech in May 2024 for the development and commercialization of AVT03. So under this pact, Alvotech will develop and manufacture the product while Dr. Reddy's will handle the registration and also marketing in selected regions including the US and Europe. Antique has initiated coverage on Adani Ports with a buy rating, assigning a bullish price target of 1,773 rupees per share. So the firm clearly positions Adani Ports as the essential gateway to India's burgeoning, trade volumes. The key thesis is twofold. First, the company is an industry leader with a clear path to scaling volumes up to 1 billion tons. Second, Antique highlights the integrated port to customer gate business model, which provides higher margins and also strong competitive advantage across the logistics chain. Viewers, Vedanta is in the spotlight today after the parent company has filed confidential papers for a US listing of its arm Coppertech. So the strategic move involving the submission of a draft for a potential initial public offering in the United States is already easing the investor fears that had surrounded Vedanta's complex merger and also demerger plans. So analysts view the Coppertech IPO as a crucial step towards unlocking value and also simplifying the overall corporate structure. However, if we look at key details remain under wraps, the company clarified that the essential specifics, including the final share count and also the offer price for the US listing, have not yet been determined. Now, Sudarshan Chemical is making strategic moves to strengthen its leadership in the specialty chemicals domain, announcing a key expansion of its high-value pigment product suite. So, the company has officially launched a new offering named Sudaperm Yellow 2921C, and the specialized pigment is designed to cater to demanding pigment coating applications, a segment known for its high margins and also stringent quality requirements. So this expansion underscores the company's continuous focus on innovation and R&D. Next up, we have Balaji Amines, which is in focus after receiving a summon order from the Ahmedabad Court Authority. The summons relates to an alleged violation of the Drugs and Cosmetics Act. The company has been directed to appear before the court on December 4 to address the complaint. While any legal action against a company of this nature draws market scrutiny, Balaji Amine has provided a key clarification there. Management has stated that it expects no material financial impact from this specific legal proceeding, and the market will closely be monitoring the December court date for further clarity on the nature and scope of the alleged regulatory violation. Now let's look at some brokerage notes. So Jefferies has reiterated its buy rating on Lupin with a target price of 2,300 rupees after hosting the company's top management in London. Lupin also expressed confidence in sustaining $1 billion in US revenue and maintaining a 24 to 25% EBITDA margin by FY27, even with rising competition in the key products. The company sees biosimilars as its next major growth engine and also plans continued investment in the specialty assets. By FY30, complex generics and also specialty products are expected to contribute about 70% of its US sales. So in India, Lupin aims to outgrow the industry by 200 to 300 basis points. Next up, we have Reliance Industries. So the shares are hitting a 16-month high, surging nearly 8% in just 1 month. Investors are cheering strong earnings and also healthy refining margins, while the company's expanding digital and retail businesses continue to support growth. Analysts say that the stock's rally also reflects broader market optimism and also renewed interest from both the domestic and foreign investors. Yatra Online has announced a major leadership transition with co-founder Dhruv Shringi stepping down as CEO after 19 years, citing personal reasons. So he will continue as the chairman of the board and also serve as whole-time director. The company has appointed Siddharth Gupta as the new CEO, effective November 25. So Gupta comes with extensive leadership experience from Mercer India, Mercer METTL, SAP and HP. Under Shringi's leadership, Yatra shifted its focus from consumer travel to corporate travel, significantly changing its business mix. So the company expects strong momentum ahead with revenue growth of 20% and also EBITDA growth of 30% projected for FY26. Now on to some corporate news. The Board of Control for Cricket in India has officially announced Asian Paints as the new official colour partner for Team India in a deal valued at 45 crore rupees. So this 3-year association will cover all the men's and women's domestic series played in India, spanning over 110 matches. So this association strengthens Asian Paints Association with cricket. The activation plan includes 2 major on-ground engagements before every match, including a color cam that will also scan the crowd to pick winners, and also a color countdown integration designed to drive fan participation with this development. Asian Paints joins the roster that includes prominent brands such as Campa, Attenberg and also SBI Life. Viewers, iPhone maker Apple has laid off dozens of sales workers in the United States in a rare job cut for the tech giant. Yes, so the cuts come as the company looks to review and also streamline how it offers products to businesses, governments and schools. So a spokesperson for Apple has confirmed the job cut, saying that the company is reshuffling its sales the division but did not give specifics. So notably, just some weeks back, Apple also cut around 20 roles from its sales teams in Australia and New Zealand. So those affected include account managers serving schools, government agencies and also major businesses. Now, Google has joined hands with Accel to launch Atoms AI Cohort 2026, which is a 6-month accelerator exclusively for early-stage AI startups in India. So up to 20 founders will get $350,000 in Google Cloud credits, hands-on mentorship from Google experts, and also direct access to Accel's funding network. So the program will focus on generative AI, healthcare, education, and sustainability, areas where Indian startups are already making global waves. So applications open next month. The program is open to Indian and Indian origin founders creating AI first products for users both in India and internationally. Next up, we have viewers Air India CEO Campbell Wilson saying and announcing that the airline will induct 26 brand new aircrafts in 2026 alone, operating 81% of its international flights with upgraded aircraft by the end of 2026. So this is part of a massive 470 plane order placed with Airbus and Boeing, with deliveries now gaining speed after regulatory and supply chain hurdles. So Wilson says that the expanded fleet will add capacity on both the domestic and long-haul routes, create thousands of jobs, and also help Air India reclaim its spot among the world's top carriers. So the Air India chief said also, he also said that 95% of the families affected by the June 12 plane crash have received interim compensation as well. Now let's look at Bitcoin, which has fallen to a 7-month low, reversing the entire rally seen in calendar year 2025. The cryptocurrency is now down 32% from its all-time high and nearly 20% since the start of November. So historically, if we look at October, rarely delivers negative returns for Bitcoin, but this is the only second time in a decade that both the October and November have turned negative for Bitcoin. So the decline comes as expectations of aggressive US rate cuts fade, while heavy ETF redemptions and also nervous new investors add to the selling pressure. The Power Ministry has held a task force meeting to fast-track the development of the India Energy Stack, a new digital public infrastructure aimed at unifying and also modernizing the energy sector. So this initiative seeks to create a secure I beg your pardon. So basically, it looks at to create a secure and standardized digital platform that connects consumers, utilities, and also assets across the value chain. So officials said that this meeting reviewed draft strategy and also architecture documents for this platform. Now, India's imports of Russian oil are set to tumble to their lowest in at least 3 years in December, according to trade and refining sources. So the pullback follows fresh US, EU and UK sanctions on major Russian oil firms like Rosneft and also Lukoil. So facing tighter bank scrutiny, some top Indian refiners are pausing or cutting back direct deals with those companies. Instead, they are shifting their crude buying to alternative markets like the Middle East, West Africa and also the US. So this move could actually reshape India's energy sourcing as geopolitical pressure mounts. Viewers, the aviation regulator, that is the DGCA, has issued a fresh set of instructions to strengthen fatigue management across Indian airlines. The move follows a July audit that found carriers were unclear about existing mandates meant to protect crew from excessive workload. So under this new norm, airlines must offer extensive training, also create clear reporting systems and set up an independent fatigue review committee. They must also comply with stricter rest requirements, including a mandatory 48-hour continuous rest period with 2 local nights. Viewers, volcanic ash from Ethiopia hit flight operations in India as ash clouds from the Hali Gubi volcano, which erupted for the first time in recorded history, entered the Indian subcontinent from the western side and also reached Delhi on Monday night before proceeding to the other parts, as you can see on your screens right now. So among known flight cancellations were that of Air India and Akasa Air, which they were cancelling some flights over ash plumes from the volcanic eruption. So according to the IMD, ash clouds from the volcanic eruptions in Ethiopia are likely to clear India's skies by 7:30 p.m. today, marking the expected end of the disturbances reported across parts of the country. And a thick layer of smog has engulfed the national capital today as well. The AQI has reached 363 in the morning hours, putting it in the very poor category. Residents of Mumbai too woke up to a grey choking haze this morning as air quality levels dropped across the city. According to the real-time monitoring data, the overall AQI stood at 232 in the morning hours, placing the city firmly in the severe category. While the city has wide average paints, it paints a grim picture there. Specific pockets of Mumbai are battling even with more toxic conditions, such as the Wadala truck terminal, which recorded a staggering AQI of 380, categorized as hazardous. Now let's look at some more national news. Prime Minister Narendra Modi on Tuesday has hoisted a saffron flag at Ayodhya's Ram Mandir during a sacred ceremony called Dhwajarohan, signifying the completion of the Ram temple's construction. So Uttar Pradesh Chief Minister Yogi Adityanath said that this is a symbol of developed India and that we are witnessing a new India, where there is a perfect synergy of development and heritage. So during his visit, the Prime Minister also offered prayers at the Ram Darbar Garbhagriha and the Ram Lala Garbhagriha and visited the Sap Mandir, Shesh Avatar Mandir and also Mata Annapurna temple. The Ministry of Road Transport and Highways has proposed Bharat NCAP 2.0, aiming to tighten crash test rules with stronger build quality, advanced safety technologies and also tougher scoring benchmarks. So the draft framework introduces a more comprehensive safety assessment, expanding testing to reflect real-world protection. So ratings will now be based on 5 verticals, that is crash protection, vulnerable road user protection, safe driving, accident avoidance and post-crash safety. Viewers, in a dramatic protest, farmers in Dhamnar village of Madhya Pradesh's Mandsaur district held a funeral procession for onions after market prices plunged to as low as 1 to 10 rupee per kg, which is far below their estimated production cost of 10 to 12 rupees per kg. The farmers said that the long-standing 25% export duty on onions has made Indian produce uncompetitive abroad, adding to local distress. So they have warned that without government intervention, many growers will be unable to recover cost or continue the cultivation. Now on to some global news. US President Donald Trump and Chinese President Xi Jinping held their first talks since agreeing to a tariff truce last month, discussing trade, Taiwan and Russia's invasion of Ukraine. So Trump said that the telephone call was very good and that the leaders spoke about purchases of soybeans and also other farm products, as well as curbing shipments of illegal fentanyl. Now, the US president said that he agreed to visit Beijing in April and that he had invited Xi for a state visit next year. Japanese Prime Minister is leaning into her personal bond with Donald Trump, calling him a friend I can call anytime. In their first phone call since her blistering remarks about China, the stout handshake reflects a strategic reset. Tokyo wants to reassure Washington even as Beijing fumes over her comments on Taiwan. India and Japan are joining forces to build the next generation 30-meter telescope, which is a giant 30-meter optical infrared observatory designed to peer deeper into the universe than ever before. So the project will allow astronomers to study black holes, distant galaxies, and also help in the search for life beyond Earth by analyzing exoplanet atmospheres. So India is supplying key optomechanical technology that will enable this massive mirror structure to function, while Japan brings decades of observational science expertise. So this 30-meter telescope is expected to be operational in the mid-2030s. India and Afghanistan have reaffirmed their commitment to expand economic cooperation and also simplify trade and investment flows between the two countries. In New Delhi, Union Minister Piyush Goyal has met with Afghan Commerce Minister, and both the sides have highlighted the need for smoother goods movement and also deeper people-to-people links. So this discussion, covered investment opportunities across mining, agriculture, health and infrastructure, and also emphasize establishing new trade routes and also easing logistics and visa routes. With that, viewers, it's a wrap on this edition of Market Express, but please don't go anywhere and stay tuned to NDTV Profit.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think we are trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you are doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think we are trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you are doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
Market closes lower for the third consecutive session as market remained in fatigue on expiry day. Nifty ends below 25,900 as mid and small cap indices outperform the benchmarks. Sectoral indices finish on a mixed note with realty index advancing the most in trade. Reaching the IPO stage is itself symbolic of survival, says Sameer Arora. But should you look at valuations or identify the USP? Catch the answer in Profit's exclusive conversation with the ace investor all the way from Helios Capital's Singapore headquarters on the show ahead. Commerce Minister Piyush Goyal says labour codes have been simplified to address gig workers' needs and employers' concerns in his first official reaction to the labour law overhaul. Ethiopian volcanic eruption of a volcano halts international flights, prompts India to issue aviation alerts as ash clouds drifted across several northern states. Major carriers including Indigo and Akasa Air adjust their operations in response to the shifting plume as the impact on airspace became clearer. DGCA directs airlines to conduct minimum 10 hours of training on anti-fatigue management, asks airlines to issue a fatigue reporting policy for all stakeholders and set up an independent fatigue review committee and submit quarterly reports. Tata launches new generation Sierra with an ex-showroom price of 11.49 lakh rupees. The SUV takes inspiration from the 90s and sports a retro-inspired design akin to the older Sierra model. Company calls it the rebirth of a legend. Road Ministry rolls out draft rules under Bharat NCAP 2.0, allows government to nominate auto companies for going through testing, recommends evaluation of cars based on vulnerable road user protection and post-crash safety along with crash tests. Apple cuts dozens of roles across its sales organization to streamline outreach to businesses, schools and governments. Targets account managers, government teams hit by US shutdown fallout and briefing center staff. Prime Minister Modi hoists 22 feet long religious flag in Ayodhya, says a 500-year-old resolve is being fulfilled. Hello and welcome. Good evening, viewers. This is Profit 360 only on NDTV Profit, and I'm your host Mallika Mishra. Along the next half an hour, we'll be taking you through some of the most important news when it comes to markets, national as well as international news. Let's begin with checking how the benchmark indices performed today in the Indian market. Benchmark indices such as the Nifty and the Sensex ended the day on a negative note, with Nifty ending below 25,900. At close, the Sensex was down 313 points at 84,580 odd levels. The Nifty was down 74 points or 0.29%. On the sectoral front, metal, pharma, PSU bank and realty added anywhere between 0.5 to 1%, while consumer durables, IT, media shed some weight slightly. But for a detailed analysis on the market action today, let's go across to my colleague, Mahima.
Well, the Nifty has closed, in the red for the third consecutive session, so fallen third consecutive session in a row, closed below the 25,900 mark. So tomorrow will be a crucial day to watch out for whether it falls below the 25,800 levels also. The top losers on the Nifty 50 include Trent as well as Infosys. Broader markets did outperform the benchmarks. The mid-cap 150 top gainers includes names like AB Capital as well as Federal Bank. Small-cap 250 top gainers include counters like HEG as well as Craftsman Auto. All sectoral indices closed overall on a mixed note. Nifty Realty overall top gainers include Raymond Realty as well as Brigade Enterprises. Nifty Realty and PSU banks gained the most. The PSU banks top gainers included names like Bank of Maharashtra as well as Indian Bank. Nifty Media and IT fell the most. The PSU bank and the Nifty Pharma did snap its 3-day losing streak. Nifty Oil and Gas, Nifty Auto fell for third consecutive session. Nifty Realty snapped its 5-day losing streak as well as Nifty Bank and financials fell for third consecutive session. So this is the overall view as to how markets have done today.
Thanks for that crisp wrap on today's market action, Mahima. But viewers, as that was how markets settled today, the IPO buzz has been the talk of the town for quite some time now. Should you invest or stay away? Should you worry about valuations or catch the right entry point? Question marks do follow. Let's take a look at a brief slice of Profit's exclusive conversation with Sameer Arora, straight from the Helios headquarters in Singapore. This is what the ace investor had to say on IPO players.
Actually, the guy who's ready to be IPO'd has already passed many tests.
Yeah.
Because if all of these were, say, broadly private equity funded, there would have been 10x the number of companies that go public would have been funded. For example, food delivery must have been some 20 companies before, now 2 are left or 3. Or if you say, actually 2, I'm talking quick commerce, 3 maybe. If you talk about logistics companies, education companies, the fact that you've reached an IPO stage is broadly you have survived.
But doesn't it go against or have a cross against one of the metrics, which is valuation?
No, it's not. Because valuation can't be today's valuation.
You have to forward.
So first thing is, big picture, it should be obvious that whatever this guy is doing is very useful or different. It is not just... So we have to differentiate between an IPO which looks like a new age company, but is actually an old age company, but has a better shop or a better or all colors of all, or you've rolled up 20, you bought 20 unlisted guys and made it into...
What are some of those companies for you? And you've spoken a lot about these food delivery companies.
No, food delivery...
The platform companies.
There is a value which you can see. The value is they are protecting you from the pollution. Could be one value. They are saving you time. They are saving you parking
Yeah. They are saving you road rage. They are making you use Netflix better because otherwise you spend
have more time.
Exactly. Now, if some fellow says I can do it myself, that means his time is not worth it.
He was not.
He should himself become maybe a delivery guy.
And he was not part of that market anyway.
Yeah. There's enough market. No, I'm saying in all of these, not all of these, in the companies that you are buying, if it is a new age company, not all IPOs are new age, then it should be, this guy is doing something different.
And moving on from that conversation, Commerce Minister Piyush Goyal has praised the newly implemented 4 labour codes, saying the reforms have been warmly welcomed by both employers and trade unions. The new framework consolidates 29 existing labour laws into 4 broad codes, which are wages, industrial relations, social security, and occupational safety. This is aimed at simplifying compliance, improving worker welfare, and promoting ease of doing business. Let's listen into the remarks made by the Commerce Minister on these new labour codes. And this is the Commerce Minister speaking on the new labour codes. As you can see on your screen, these are the visuals of the new labour codes that the Commerce Minister Piyush Goyal is commenting on. Remember, this is his first comment right after the new labour codes came into existence. But moving on, viewers, let's focus on a rare volcanic eruption in northern Ethiopia that has disrupted air traffic across the region, with ash clouds now drifting towards India and forcing several flights to be cancelled. The Haile Gubi volcano in Ethiopia's Afar region has erupted for the first time in nearly 12,000 years, sending massive ash plumes thousands of feet into the atmosphere and across multiple countries. The ash first entered Indian airspace over Gujarat, then moved towards Rajasthan, Delhi, Haryana, and Punjab, with dense, concentrated parts of the cloud now passing over northern India and brushing Delhi's already toxic air. A number of flights operated by airlines such as Akasa Air, Indigo, and KLM have been cancelled or rerouted as a precautionary measure, as the ash cloud stretches over the northern Arabian Sea and continues to shift over Delhi, Haryana, and adjoining state of Uttar Pradesh. Aviation regulator DGCA has issued an advisory asking airlines to avoid ash-affected areas and to rework flight planning, routing, and fuel calculations based on the latest meteorological alerts, even as experts say the ash remains high in the atmosphere, limiting the immediate impact on surface level air quality. And Delhi's air quality has been under severe stress for months, and now the arrival of volcanic ash from Ethiopia adds another layer of concern. Given the ongoing pollution challenges, many ask if Delhi should have proactively issued health advisories on this foreign ash intrusion. To discuss this, we have GP Sharma of SkyMet, who expertises in AVM, meteorology and climate change. We will also discuss about what such volcanic ash clouds mean for public health, why clear communication is essential, and what broader lessons this incident holds for managing Delhi's chronic pollution crisis. We in fact have both GP Sharma as well as Abhijit Ahuja. He's a consultant pulmonologist at Saifi Hospital as well. Welcome, both of you gentlemen. Thank you so much for taking out the time to have this conversation with us. I'd like to start with Mr. Sharma first. According to you, how serious is the impact of volcanic ash on Delhi's air quality, if not in the short but in the long term? And also, how does it compare to the usual stubble, burning smoke, or road dust that we usually see in winter?
Malika, these two are totally different phenomena. The volcano ash, obviously, as you also stated, it's in the higher levels of the atmosphere, possibly reaching the troposphere, top of troposphere and stratosphere. Whereas the other normal pollution, which we keep talking about, those pollutants, they are confined to the lower levels. But that means mainly, I think they persist up to about 3,000 feet. above ground level. So therefore, there is hardly any direct connection between these two on routine basis. But yes, you see, any contamination of the environment, be it because of the volcanic ash, be it on account of other fossil fuel or the low level PM 2.5 or 2 PM 10, whatever it is a harmful. The air definitely becomes a little toxic. Any foreign elements contamination in the form of these particles will definitely harm our environment. Okay, like you said, this volcanic ash, it is a very very serious issue. Okay, but then serious from the point of view of aviation, because say aviation, we must know the history. It has a very bad incidents that's happened in the past, wherein the aeroplanes, even as big as Boeing 747, flew through the ash clouds, and all the four engines they stopped. Okay, the aeroplanes have glided through a losing height of almost about over 20,000 feet. Fortunately, when the pilots they reattempt the relighting or again restart, it happened and it saved. So what I'm talking about is the consequences of this volcano ash. They are phenomenal. They are very, very harmful. Even when they, in case they get ingested in the engine of the aeroplanes, they can they melt. Okay, that ash. What happens actually is, in case it goes through the engine, temperatures are so high inside the engines, about in excess of 1,400 degrees Celsius. They melt. And after the melting, when they cool down on the cooler component, they can get deposited. Loss of thrust can be there. The loss of, as I said, the seizure of engine can be there. So it's a very, very harmful thing, very, very serious issue flying through the volcanic ash. So rightly so, there have been advisories by all the airlines. Some of the flights, including international flights, they have been cancelled.
Right,
okay,
Mr.
it
Sharma.
was to be done. Yeah.
I understand. The point that you're trying to make is that this is serious, and while the repercussions from the burning of smoke and the fume that comes from a volcano eruption could be different, but the seriousness and the effect that it could have on aviation is to be considered. But I'll explore that point in just a minute. Before that, I'd like to also get in Mr. Ahuja. According to you, what are the key health risks associated with volcanic ash inhalation, especially for children, elderly and asthma patients?
Yeah, so volcanic ash is in particular having high levels of sulfur dioxide. Now this gas, if it is reaching the levels of, the ground levels, or if it is going to impact by any way the general population, it will give rise to an increase in respiratory issues to begin with, following by issues with eyesight or irritation of the eyes. We like Mr. Sharma mentioned. We are hopeful and we are sure that it may not impact the general population and the ash will fly over in the greater altitude. It may impact us if it does filter down to a level where it has to impact us. Then it will first give rise to these respiratory issues.
So it's the presence of H2SO4, sulfur dioxide, if I'm not wrong, that is harmful to inhale, and also if it reaches to a level that directly impacts the exposure to the air and infiltrates that space. But, I'd like to get you, Mr. Sharma, here. What broader implications does this volcanic ash episode have for India's approach to air pollution management and disaster preparedness?
Disaster preparedness? Yes. Okay, but then there are only two disasters like earthquake and volcano, which comes without any notice, okay, and have large implications. This particular volcano, which you said that it has erupted after remaining dormant for thousands of years, to precise, about 12,000 years after it has erupted. Though it is located in the chain of volcanoes where the North Ethiopia, there is another, that is the volcano next door to it, just about few kilometers, Atta Ain, that is the another one, which is a very, very active. There's a chain of these things. The probability of having these volcanoes erupting, it remains very high over that pocket as such. But this one, yes, per se, it has erupted after thousands and thousands of years. But then, you see, though I did say that it is a high level phenomena, that is a tropospheric and stratospheric phenomena. But ultimately, whatever the contamination has taken place, whatever these particles, even the sulfur particles, the glass particles, or even the rock through which the volcano erupts, that gets pulverized, and even it carries these rock particles also in a very, very powdered form. All these are very, very harmful for human beings. Okay, so and ultimately, whatever has gone up, it has to come down sometime or the other, somewhere or the other. It may take time. It's a time-consuming process.
Yeah.
But then immediate danger is not there for us. Yes, the pollution otherwise which we have, that also contains. You see, sulfur dioxide is a part of pollutant even in the lower levels also.
Got it.
Whatever emissions they take place, be it the ships are there, be it the airplanes are there, be it the other pollutants.
Mr. Sharma,
it is there.
just following up on the point that you're making, you have emphasized enough that this is so harmful. Yes, it is. And therefore, in 30 seconds, sir, because the time is the time is passing by and I have less time left. How important is transparent communication in such environmental disruptions? Like, to what level should the government really communicate that this has happened and what measures should be taken? 30 seconds, sir.
See, the importance is that the communication has to go very fast. Okay, the information, where if it is stale, it doesn't carry any logic, any meaning as such. Okay, it has to be the earliest, and the media is strong enough nowadays to spread this information, and along with that, the caution also. The people are exposed as such to the high level of contamination and these pollutants. Delhi NCR region also, other parts also, they need to take precautions, which we are already taking also. People are aware. I think there's a lot of awareness not to expose individuals to these dangerous pollutants. Also, use of mask, etc., whatever is recommended. Stay away from these outdoor activities. All that is to be done. Understood. It's a part of the activity. Yeah, that's it. Yeah.
So fast communication and the right precaution. Mr. Ahuja, the precautionary point actually brings me to you. Do you think there should be a difference in the kind of masks that we use in normal pollution scenarios? We currently use N95s to prevent us from getting infected from pollution. But in such cases, what measures should be taken?
So first and foremost is avoidance, because if you know that the air quality is going to worsen, or if there's a warning that has been issued by the media, one must avoid stepping out as much as possible. Also, the N95 gives you enough protection from all sort of pollution. There's no need to actually go about trying to search or procure a different kind of mask. Any mask that is next to you, if you have to actually step out, will be helpful. Whether it's a standard 3-ply mask or a cloth mask, but if you have an N95 with you, that is going to give you enough protection. And you must try and avoid as much time spent outside in a time where their air quality has dwindled to such a bad amount.
So much, Mr. Abhijit Ahuja, consultant pulmonologist at Saifi Hospital, as well as many thanks to GP Sharma as well for joining us in this conversation from SkyMed. Both of your, thank you. And what we've learned, viewers, is that it is important for fast communication from the government in certain scenarios, especially this, and to not step out of your houses if the situation worsens, and to take care of ourselves, especially because the environment is pollutant. It gets pollutant, especially when, in cases of volcanic eruptions. But moving on, the Director General of Civil Aviation has issued instructions on fatigue management in order to tighten norms for airlines across the board. This comes after a DGCA audit in July, which found that several airlines were still unclear about the existing fatigue management mandate. My colleague Danish, in fact, joins us to give us more updates on this case.
Well, that's correct. The Civil Aviation Regulator, DGCA, has issued new norms for fatigue management.
as per the norms, the airlines have to ensure that there is at least fatigue management training for 10 hours at least, and moreover, the DGC has also directed airlines that they have to ensure that there is a minimum weekly rest period of 48 hours, and as far as the overall time period of weekly rest is concerned, there should be a gap of not more than 168 hours. So these airlines have to ensure that it is happening all across the board, not just the flight deck crew or the cabin crew. They have also told these airlines that they have to ensure that all stakeholders within the airline, they must know what fatigue is and how do you really tackle fatigue. And for this, the DGS has asked airlines to have a quarterly fatigue reporting system, and they must also set up an internal fatigue management committee so that they can give guidance and they can give certain reports to DGCA. And as far as the reports are concerned, the airlines have to inform the DGCA that which are the particular crew members that reported fatigue, and how many of those people have been given training and how many are actually adapting to it. So all in all, if we see, this is an effort by the DGCA to ensure that the skies are safer, and the cabin crew, the flight deck crew, and the other stakeholders that are involved in the entire aviation ecosystem, they get proper rest. Because from some time back, we are seeing that the FDTL, the flight duty time limitation norms, have been like a bone of contention between the airlines and DGCA. So this has come within that point in time when we are seeing this issue.
Right, this very well looks like a much needed move for our fellow pilots, viewers. But moving on, an old car with a new twist hits the road. Tata has launched the much anticipated Sierra at 11.49 lakh rupees. The car has been relaunched from the dawn of the century, but with a modern touch. Tata Motors is calling it the rebirth of a legend. Sierra was initially unveiled at the Bharat Mobility Expo, and after several design teasers, the company has finally launched the SUV, which takes inspiration from the 90s and sports a retro-inspired design akin to the older Sierra model. But let's take a look at this report sent across by my colleague Puneet Javeri, who witnessed Sierra's iconic launch.
Well, thank you for that. It's definitely a key launch. I've made my way into the car right now to just show you the plush interiors that Tata has launched at a very attractive price point of just 11.49 lakhs. Now, it is the introductory price, so you will have to get your hands on it to get the initial benefit. But just look at the cabin interior. It's a dual tone. You get the plush interior now, but it's also, you can look at the number of screens that are visible. They have a soundbar in as well, with a very ergonomic steering wheel to go with that. When you also look at the back, it is very, very exterior to say the least. But let me just take you to the front as well, because there are a couple of highlights that you need to watch out for. When I make it out of the particular vehicle, it will be visible to you that there's a lot more action. Now, of course, we are at the key launch one, which is the yellow color silhouette, and it offers an end-to-end DRL, the first in the segment what they've highlighted. You get a lot more exposure at the start as well, with a huge grille to say the least, which also has the air vents. But for Sierra, it is a nice launch. The EV1 is going to come very soon as well. You can see around me also there's a lot of people, a lot of commotion there for the new launch. But at 11.49 lakhs, it goes head on with the likes of Creta amongst others. Could this be the disruptor? Tata has given all that you need to make that purchase, but it's a key launch which is in a segment that sells almost 45,000 units in a month. So you do need to watch out how Tata competes with the likes of Creta as well as others in the segment. But they have hit it out of the park to say the least, and a lot more expected in the coming few months. 6 colors. This is the yellow one to say the least, but it's a key launch and a very strong one to say the least for Tata Motors.
And viewers, that's all the time we had on this edition of Profit 360. But do stay tuned to the channel as we continue to bring you a lot more news and updates. This is Malika Mishra.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think we are trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you are doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I
or
hold
buy
CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think we are trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you are doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.